Yeah. Michael, I want to start with you. I mean, you've really been in the weeds for months and months on this. Day two, how are you feeling? How have things been going? Give us the stories.
Yeah, I'm so excited for day two as I was for yesterday. I can't tell you, like, showing up in the morning and seeing the place full, the energy here is incredible. It's just nice to see everybody like just coming together. So today is also the same. Like, I'm just excited. Everyone had a great time yesterday at the horse races as well. So it just feels like there's all these like good energy, good vibes coming back in. And yeah, getting ready to start the day.
Michael, I want to know, did you do any betting at the horse races last night?
Unfortunately, I didn't. I wish that there was a chance that I could have placed a bet on the Consensus Cup. I think that was probably one of the most exciting races of the evening. But by the time like I was like, oh, I should do this, I was already away from the thing. And so, yeah, unfortunately not.
That's okay. You live here, so there's always next time.
All right, Dave.
Yeah.
This is your first time in Hong Kong.
I know.
Give us your impressions of the city, but also the conference itself.
Well, first of all, the conference has been an absolute screaming success, and I'm so thrilled to be here. You know, Michael and I have been working together for the past 5 months since I joined as president of the indices and data business, and he's been selling me on Hong Kong ever since. And honestly, you totally undersold it. All right, you're like Hong Kong's greatest salesperson of all time. You're like, you know, the greatest ambassador. But not only what is going on the floor has been so exciting, but the over 400 side events, which you kind of see and hear about as you're walking around town. Yeah. The food's great, the energy's great. What's happening here on the conference floor is great. So
yesterday we had Charles Hoskinson, we had Joe Lubin, we had Scaramucci here. There was a lot of stuff going around. Michael, were there any favorite moments you want to talk about yesterday?
You know, there was a couple of really important moments, I think. The first one that also marks something different about this conference is the amount of support that we got from the government. I think, you know, we've talked a lot about how companies, organizations, certain communities have started using this technology or supporting it. I think it's pretty incredible that after a couple of years, we're not talking about how cities, how jurisdictions, how whole, you know, like large-scale places are thinking about digital assets or thinking about blockchain. And I think there was nothing more, I think, impressive as a citywide to have the most senior ranking official to provide official words to kick off what is a non-government run conference, to say, hey, look, we're open for business, we're doing stuff here. There's an incredible amount of thought that's been placed into this as well as resources. And I think that's been a really great message to come out from yesterday. I think the other thing too is we've seen, I think, maybe a surprising lack of commentary around the prices, because I think everyone knows how volatile it is. But I've been very pleased to also see that there's been a lot of conversation around the conviction of what this technology can do, and also where the technology is being applied in terms of real use cases. And that's really, I think, the healthy conversation, right? One, it's also great in terms of shelf life, in terms of things that you can listen back to. But I think it's great to see that founders and executives are focused on the real applications of this stuff, because I think they believe, hey, if we can solve for that, we'll find real businesses on the back of it too. And that's going to be healthy for an industry to continue to evolve and thrive.
Yeah. Michael, you talk about support from the government. A big narrative that came out of the desk yesterday was that, you know, Hong Kong is a smaller jurisdiction than some of the jurisdictions we talk about on CoinDesk. And it enables it to move faster, enables the government and the regulators to be a little bit more innovative. I know stablecoin licenses are coming in March. Talk to us a little bit about the state of government involvement, the state of government innovation in Hong Kong as we set up the conversations for the rest of the day.
Yeah, so I think what's important to note is it's not just simply a conversation about digital assets in its own vacuum or void. It's the fact that it's all married together with the traditional financial world. And Hong Kong is one of the global financial centers of the world. I mean, if you didn't know this, last year, Hong Kong actually was the #1 ranked IPO market globally. So like when it comes to traditional equities, this was the largest place that they were issuing it last year. And so when you think about that convergence of traditional finance and digital finance coming together, it matters where it happens. And certain places like the US, these are huge capital markets and they're big. These are smaller jurisdictions, like for example in Hong Kong in terms of population, individuals, but the capital flow here is significant. The institutions here are significant. And so if you're thinking about that particular theme, it matters quite a lot what happens over here, because this is the anchor on this side of the world as it relates to the institutions are coming.
Yeah, I was going to say that the two themes that I heard yesterday, I was on 4 panels, and I actually hosted a a roundtable on derivative usage with about 25 different firms, global firms. And there were two themes that came about. The convergence of TradFi coming together with crypto was number one. And then the second was, kind of what needs to happen for innovation. What needs to happen for innovation is you need to have technology. We have technology. And then you need to have regulation. And so if you have technology without regulation, the innovation actually can't move forward. And so there's been a tremendous amount of regulatory advancement in a lot of the world, and regulatory jurisdictions around the world look back to the US market. And so we've had a tremendous amount of regulatory advancement in the US market. It's not perfect yet. We got a little bit more room to go. But that was really dominating the conversation, this convergence of crypto coming together with TradFi, and then some of the advancements in regulation and the clarity that we're getting in the market in the US, which is driving regulatory clarity around the globe.
Michael, I'm always struck when I come here that being raised in the US, this idea that the US is first in everything and everyone's kind of paying attention to us over there. And then you travel and you're in Singapore, you're in Hong Kong, and everything just feels more futuristic. Everything feels more forward. I really encourage people to leave the US and Europe and get out to Asia to see kind of what the future looks like. What do you think it is about the DNA of Hong Kong that allows for innovation to happen at speed and at scale, that people embrace everything? I was in a Zeekr car yesterday. I had never heard of the brand before, and then I was like, how do I get one? Immediately when I was in it, because it was just so much more interesting than the cars I drive. But what is it about, you think, like this part of the world that really pushes innovation forward?
Look, I think that there's a little bit of a conversation around product and marketing. There's so much focus on building the products here that you come over here and you see it for yourself and you realize that, wow, like the advancement in terms of technology, applications. Oh. Microphone.
It's okay.
Yeah. Just everything's moving forward really quickly, and sometimes the marketing lags a little bit. And so I think that's really great that you're over here seeing it for yourself and you get to come to that own conclusion. But I would say that if you look at, for example, how the infrastructure of how technology development happened over here, it lagged a little bit, but also that lagging effect meant that it leapfrogged in certain moments, right? So you take the old example of, hey, when there was a time of landlines, people decided, did I need to have a mobile phone? And then you go to places where there weren't a lot of landlines and everyone jumped to mobile phones right away. Right. You saw a lot of that happening. And I think also there are certain things out here, for example, that technology really does help at a massive scale. Because if you think about it, over half of the world's population lives in Asia. And when you think about that scale, you've got to solve for that scale with the technology. And so you see different applications and the impetus to kind of move forward a lot quicker. And so, yeah, I think a lot of people are surprised because, again, product is here. Sometimes the marketing lags behind, but that's also why I think it's really important to come out here and see for yourself because, take Zeekr, for example. I'm really glad you went into one because I just bought one. And when I was a kid, I used to think to myself, hey, Ferraris, McLarens are the fastest car in the world. This electronic SUV from China goes from 0 to 100 in 3.7 seconds.
I don't recommend that. I'm just gonna jump out there, and I don't recommend that.
It's just nuts.
But it's possible.
It's possible.
If you just want the possibility.
Viewers, we don't recommend that.
It's crazy. It's crazy.
Well,
right?
I'm gonna say something. I've had the fortune to travel around the world, and a lot of time spent in Europe. Europe is, very organized, very clean, very neat, very civilized. But then you realize you might be in a country that has 6 million people, and you're like, well, I don't know what. Like in a country with 6 million people, like you can keep things pretty organized and pretty clean. I am so struck by the scale of how everything makes sense and works very seamlessly here. Moving people around the city makes sense and is clean, is neat. Listen, I live in New York, and there's a lot of people in New York. It just doesn't work that way, and it's not that clean. And how about the escalator that goes, this is a hilly city. I didn't realize it was a hilly city. There's an escalator that goes 15 blocks or something like that. And it goes up when people are commuting in and down when people are commuting out. This makes all the sense in the world. Right? No, the scale and the cleanliness of this city and moving people around has really been incredible to watch. But it's funny you say that. You focus on the product and maybe not in the marketing of it because people just don't see it.
Mm.
Yeah.
You talk about the population here in the region and the use cases. Talk to us about some of the very popular use cases that are coming out of the region that we might not hear about all the time when we're covering the other side of the world.
Yeah, look, I think that there's a lot of really great stories coming out, in particular from Korea, Philippines, Thailand. Actually, it's one of the things that I love about the most with regards to this conference is the ability to find interesting stories and tell them. So I'll just give you a couple, right? I think when it comes to stablecoins, most people don't realize that when you go to some of these other places, the friction that's required to move things across borders is significantly high for the amount that people are moving, right? If you're, sending $100 because $100 US is actually a lot of money, having like 8% of it taken away from you just to get it across is pretty big, but it's kind of, you're left with no good solutions. And all of a sudden stablecoins come around and you can get it instantly and like $100 shows up where you send it. That's a pretty incredible sense of technology, right? So I think that's one. The second thing is also the ability to access certain types of financial products on chain because it's efficient, it's something that you can do on your mobile phone if you need to. There's not always the benefit of having all these great banking solutions or great kind of consumer finance solutions in the traditional sense when you go across all of Asia. And I think that's also something that's been really cool to see it step through. And also, I think the last thing is we're starting to see more and more of this trying to understand how technology fits with the average day consumer, right? This is a little bit dated, but a couple years ago, you go back to the Philippines and you realize that this whole play-to-earn thing exploded, right? And it was just this idea that all of a sudden people could use new technology and actually earn something that meant something for them as well. And that's really, really cool. And so, for example, later today at the Asia Macro Summit, which is new to us this year, like we're kind of unpacking some of these stories, And I think what was cool is when we did this report back in December, November of last year about adoption again in Asia, it continues to be ranked one of the highest in the world because I think there's just a lot of people craving for good solutions, and it's nice to see that our industry has stepped up to the challenge, taking this technology and finding practical use cases that people actually value.
That comes back to what you were saying earlier, right? People aren't focused on price volatility right now. They're focused on building, they're focused on infrastructure, and those use cases that you just outlined have nothing to do with price. So I think that indicates real maturity, real adoption, and I'm really excited for the conversations to continue here today.
Yeah. I'm struck that consensus has always been a place that announcements are made. Dave, you guys had an announcement yesterday.
Oh, yeah. We did.
Why don't you give us the TLDR on what you and ICE Futures are working on?
So the Intercontinental Exchange, the largest exchange operator in the world, and CoinDesk partnered, the CoinDesk Indices business partnered to launch a series of 7 cash-settled crypto futures based on the CoinDesk indices. So it's Bitcoin, Ethereum, Solana, XRP, BNB, and then our 2 flagship multi-token indices, the CoinDesk 5 and the CoinDesk 20. So what does this mean? This means that we are again seeing this convergence of crypto with traditional markets. We have both Intercontinental Exchange and CoinDesk are really focused on building an institutional quality offering so that the traditional finance players who are also interested in trading crypto can kind of have that same level of governance, that same level of institutional quality, that same level of compliance framework and transparency to allow us to kind of push the envelope further beyond the majors. And so we believe in the future that much like every other asset class, that people are going to want beta exposure. And that beta exposure hasn't really been defined in the US market, in the crypto market. And so a multi-token solution, much like in equities, you benchmark against the S&P 500. In crypto, you're going to need to benchmark against something other than just Bitcoin. We think the CoinDesk 20 is going to be that, and we think that adding products like futures, listed derivatives, structured products, ETFs are all going to be the wave of the future.
Is that the way that the market also matures? Instead of saying, I'm just going to go buy a token, trade a token, now I get to play on perps, on futures, on derivatives, I really get more sophisticated financial instruments?
It's all about building out a liquidity ecosystem. So, ProShares has a CoinDesk 20 ETF. Now we have a future. Maybe you put a basis trade on. You go long the ETF, short the future. Maybe you go, long the future, short some of the tokens because you want to have a specific outcome. And you can't really have active without passive, and you can't have active without beta. And so all the active solutions that are going to come to market are going to need to be benchmarked to something. We think the CoinDesk 20 is a solution.
All right, well, we're going to wrap on that. Michael, Dave, thank you so much for joining us. Jen, actually, Dave's staying with us. Even better.
You're
Jen,
stuck with me.
Michael, thank you for staying with us. Talking about long the future, we're going to throw it to the main stage where Charles Hoskinson is about to give us his keynote for Input Output.
Day two of Consensus Hong Kong, the big finale. I'm Kana Chu, and it's my absolute honor to be your host today at the Oros main stage. Now, today we're wrapping up strong with visionary keynotes and deep dives into blockchain scaling, treasury innovation, AI agents, on-chain commerce, and so much more. How many of you were here yesterday as well? Thank you so much for your support. And before we dive into our first session, a quick housekeeping note. Make sure you download the Consensus app to customize your schedule across our 6 stages, schedule meeting with fellow attendees, and access our digital map. And don't forget to share the energy on socials as well. The official hashtag is ConsensusHK. Now, without further delay, let's kick things off with Cardano founder and blockchain pioneer Charles Hoskinson, who's driving privacy tech like Midnight while keeping decentralization strong. Today, he takes the stage for his keynote, Triangle Man. Please join me in welcoming a true visionary, Charles Hoskinson.
Hi, everybody. I got to make this quick because my shift starts in about 30 minutes. Thank you so much for coming. You know, Hong Kong, I have a lot of dear memories here. I lived here in 2015 and 2016. I'd ping pong between Osaka and Hong Kong, and it was good to be in an unregulated industry in my mid-20s in Hong Kong. That was fun. So the industry's not healthy. Shit is getting real, you know? We got no liquidity. A lot of people are sad. Twitter is just a nuclear dumpster fire, sentiments at an all-time low. And that's okay, because the thing is that despite the fact that the micro looks bad, the macro is just saying we need to have a new paradigm, a new vision, new narrative. I've been in the industry for 15 years. And I remember in the olden days when Bitcoin was $1. And you know what happened with the first and second generation is it got old. We had Litecoin and Freecoin and Feathercoin and all this garbage. And everybody's, crypto's over, it's done. We don't like crypto anymore. And then Ethereum came out and everybody got excited again. We had a new narrative, we had a new thing, and for a while it worked. Then the third generation came out. We had Solana, and we had Algorand, Tethos, Cardano, brought 2021. So we're right there at the inflection point between a third and a fourth generation. And until we get there, it's bad times because retail's gone. The message is gone. People are gone. They just don't want to come back in. Because what were they looking forward to? They were looking for Luna. They were looking for FTX. All these things. Meme coin mania, NFT mania, Trump coin. The meme has become reality. So let's talk about the new narrative. First and foremost, we have a few announcements. You know, we have this thing in Cardano called the Pentad. And we have some partnerships. And I got a new one for you guys. So we love the Layer Zero guys. And we went and negotiated with them for quite some time, and we were able to get Layer Zero to come to Cardano and the broader Cardano ecosystem. So I wanted to be the first to announce that and bring that to all you guys. We announced not too long ago that USDC X is coming to Cardano. Now we have launch date, end of February. And actually, we've done some amazing engineering with this to have a beautiful user experience. You can go straight from a Lace wallet or straight from any wallet to Coinbase or Binance and back, and there's instant convertibility to USDC. The difference is it has privacy, and it's also immutable and reversible. So it's actually better than the real thing. So Layer Zero, we got USDC. That's fun. That's Cardano. We're not here today to talk about Cardano. We're here to talk a little bit about Midnight. And I love Midnight. You know why? Because it's the new paradigm. Why is it the new paradigm? Because I can draw a triangle, and that's all you're ever going to need. That's why the presentation's called Triangle Man. And it's only got 3 parts, 3 corners. It should, or else it's not a triangle. You got pet, you got smart compliance, and you got abstraction. And I'm going to make an argument that this is what's going to bring billions of users into our space. This is what's going to bring all the big guys into the space. Why is it McDonald's is not on a blockchain? Why is it Microsoft's not on blockchain? Why is it when Maersk and IBM get together and they announce this amazing pilot with Fabric, and we all get excited, say, oh my God, the world's largest shipping company is going to be on a blockchain. Supply chain is like the thing for blockchain, right? And then after a year or two, the announcement comes in and nothing happens. It's been 15 years of announcements. Announcements. And no one ever migrates. Why do they not migrate? Because it turns out that they're missing something. Privacy enhancing technology. Blockchains, they have public side. That's awesome. Time-stamped, irreversible, immutable. We've never had anything quite like it in human history. When you put something in, it's there forever. You can't redact it. Makes a lot of people in Washington, D.C. pretty worried. It's great to have something like that. But business also has a private side. Your HR records, your medical records, how much you pay people, the contractual relationships between various people, intellectual property, all kinds of things, trade secrets. And if we share too much, it creates existential liability for the business. So if you try to put your entire business logic, your entire business on a blockchain, you know what ends up happening? You get hurt. So when Microsoft does the pilot, Maersk does the pilot, all these different companies do the pilots, they get them to the point where they need privacy, and then people tell them you got to build it off-chain. They say, okay, what's the point then? I'm doing all this stuff on a blockchain until I can't use a blockchain anymore, and then it's centralized and controlled by a small federation of people. So why did I even bother building a blockchain? That doesn't make any sense to me. Doesn't make any sense to anyone. So 6 years ago, we started a research program, a beautiful research program called Midnight. I spent over $200 million. We had more than 150 scientists involved, many different institutions. And we asked that very fundamental question, can we have the same properties that Bitcoin has and Ethereum has and Cardano has, but have private smart contracts? Can we bring that to the market? And the answer is not only yes, we did. But it's not good enough to look at privacy like a light switch. Is you're private or not? Privacy is like waterproofing. It's like a watch, like a diver's watch. It's up to a depth. You know what happens when you're waterproofing? The rains, you think you've got it done, and you see that little leak. It's the same. You can have multi-party computation. You can have fully homomorphic encryption. You can have zero knowledge. You have network anonymization. You can have confidential compute. You can have all this stuff. But then you're doing it on a cell phone that has a compromised operating system. Or then you're doing it on a cell phone that has a backdoor inside the hardware. And that's the thing. Just like you're waterproof to a certain depth, you go a little deeper, it's a little harder. So the individual's needs, the corporation's needs, and the government's needs are very different with privacy. So what we need is to treat privacy like ChatGPT. It's the fastest growing product in human history. It went from 0 people to 800 million, and it's an API. You just call it. And every 6 months, it gets better. It adds new features. You start simple with text, and then you get images, and then you get video. Well, analogously, we can start with zero knowledge. And we did that. Boy, did we do a lot of that. And then you can go from zero knowledge to multi-party computation and confidential compute and all kinds of crazy new things, and it make it very easy for people to embed. So one big part of the triangle is trying to figure out a way that everybody can use it. There are 11 million tokens were launched last year. Most failed, vast majority. Why? Because they all tell you the same thing. Here's my token, buy my token, migrate your users and my people to my chain. But did ChatGPT do that? No, they allowed you to embed themselves in your experience. So you have the brand, you have the users, you have the app, you're using an API. So if a blockchain is to be successful in this new generation, it can't throw away the network effect of Solana and Ethereum and all these other things. So you know what else you need is abstraction. That's what makes it universal, and that's what makes it simple for everybody to use. So Midnight, as we build it out, we airdropped it to 8 ecosystems, 7 blockchains. About 33 million people were eligible, about 1 million redeemed. And we had people in the Solana ecosystem, Ethereum ecosystem, Bitcoin ecosystem, Cardano ecosystem, all the way down, XRP, so forth. No one paid anything for it. They got it. And you can use these privacy enhancing features with the token you already own and the ecosystem you already belong to. You don't have to migrate. It's another lesson we learn from these products that grow exponentially. The other part of abstraction is the Web 2 user experience. So you all have this. Some of you are recording me with it. And what is your user experience? You push a button, you have a fingerprint, and look at that. It just works. So why in God's name, 15 years into this, are we telling people, yeah, I know there's 5 billion of you that have this. You have this experience. You're used to using it. But guess what? You're not going to have that experience. Instead, you have to know the keywords. You have to know the cryptography. You have to know how Ethereum works. You have to know how miner extractable value works. You have to save 24 keywords. Does that make any sense to you? Why then would consumers come in mass and adopt these types of systems? So what if, with abstraction, to create a wallet, you scan a QR code, you tap your thumb, you enter a PIN code, and you have it. And it just works. And it works not just with Midnight, but with 33 blockchains. You can talk to Bitcoin, you can talk to Ethereum, you can talk to Solana, all these other things. You just authorize it. It's simple. It's magical. And you pay them what you want. And finally, a lot of you are in the finance industry. Over here, smart compliance. I just sell fries. So over here, with the finance industry, what is compliance about? It's about rules. And is rules just keeping the government happy? No, rules about safety. Let's say that you're a mom and you got an 8-year-old. Maybe if there's a social network, you only want your 8-year-old talking to 8-year-olds and not a creepy, weird 40-year-old. So you'd like to do age verification. Maybe you're a business and you want to have a partnership with another business, but they live in a jurisdiction that's really hard to get rule of law in. So even if you collaborate with that business, what's the guarantee you're going to get that when they steal your intellectual property, you can actually sue them? So it turns out that there's a whole emerging field of amazing things from great partners like ZKMe. We have DIDs, we have all kinds of stuff that allows you to put rules, embed them with privacy, embed them with abstraction, and make them super simple so that when you do business with people, as the individual, the company, and as the country, you can restore your sovereignty. And you can say, hey, this is the way it is. So this is the 4th generation. This is the new narrative. Works on a phone, works for everybody. Be honest about privacy, treat it like waterproofing, works to a certain depth. There's all kinds of amazing technologies with it, and everybody gets to set the rules for everyone everywhere. So we've been talking about it. But you say, Charles, when Mainnet? Well, I'll tell you, how about end of March? The very first version of Midnight's launching, and we have some great partners. Just like Cardano, where we launched with Byron and Shelley and Basho, we decided to run it in fast mode, but we still follow that same flow because we learned how to run a network for the last 10 years. So the federated Mainnet is launching in end of March, and we have some great collaborations to help us run it. Google is one of them. Telegram is another. We're really excited, and there's more that will come, more that will be announced. And they've been a phenomenal partner with all of this. They've been a phenomenal relationship with all of this. They've helped us grow, they've helped us thrive, and really think about this paradigm. But I could talk about this forever. How about I just show it to you? So I want to welcome up on stage Jan Miller, a very good friend of mine. And I asked a very simple question. If everything's private or we have this selective disclosure, we have these privacy systems, how do you visualize a blockchain? The Explorer doesn't work anymore. So I said, you know what we should do is we should build not just a visualization, but how about an agentic civilization? So today, I'd like to introduce something that's going to be launching February 26th. This is Midnight City. So Jan, why don't you tell us a little bit about what Midnight City is?
Thank you, Charles, and welcome to Midnight City. This is a city that's populated entirely by AI agents. So these little people here, they're run by an AI, and each of them has their own character, their own personality. They have jobs that they do, just like you. They go about their daily lives, and they're online 24/7. And we can watch them here. And the cool thing about Midnight City is that these agents use Midnight for all of their financial transactions. So every time they make a payment, they buy or sell anything, they register a business. This is all a transaction on Midnight, on the Midnight network. So the entire economy of Midnight City runs on midnight right now. This is live, so we're looking at it as it's happening. But let's zoom out a little bit and look at the districts of this city. We've got a whole variety. So there's a northern district where they mine crystals and power the economy. Eastern district, peaceful, larger houses, there's a little park. Southern district, we have a harbor here, more commerce. There's a town square where they can discuss news and exchange opinions. And then finally, we have this farm, some bison, livestock, and that's where the agricultural heart of Midnight City is. We can also look at the economy that's visualized here at the bottom in these panels. So we have very important this gauge here, which shows us how many transactions are actually happening right now. So this is the transactions per second that are produced by those agents in Midnight City. We have a couple of other metrics on the performance of the system, and then on the right-hand side, there's also something on the economy of Midnight City, how much value is being transferred. So there's a real economic system underneath the simulation here. At the top, we can see all of the transactions that the agents generate. And if we look at one of them, it's all encrypted. We can't see who sent it, who received it, or what the amount was. And this is because they're using Midnight for their payments. So that's all, they're all private. By default, they're hidden from anyone who's just looking at the chain from the outside. But there are legitimate use cases where you want to see and you want to reveal to other people what's happening in those transactions. And to do that, the agents use selective disclosure. So if they want to show to a bank their previous income to apply for a loan, or if they have an audit that they need to comply with, they can use selective disclosure to reveal some of the details of their past transactions. And we've built this into the simulation with this auditor mode. So we can switch, take on the role of an auditor, and then we can see what's actually happening, who paid whom, and how much was transferred. And underneath, there's a cryptographic operation that's being applied. So we have a viewing key, and we can look at some of the fields of those transactions. But this revealing of the data, it's only targeted at the institution or at the auditor that needs to see the data. It's not making it public. It's only selective to specific institutions. Another important aspect of this is that because the agents generate so much traffic, as we can see here, so we consistently have dozens, hundreds of TPS that need to be managed, we're actually building a layer 2 for the Midnight chain as a part of this project. And this is what's running live already. And the layer 2 for Midnight is a general purpose layer 2, so it's not specific to Midnight City. It's available to all apps that run on Midnight.
And I just have to mention real quickly, that's been one of our most fun collaborations. We took technology that was invented out of Stanford, LatticeFold, lattice-based cryptography system that uses folding. And we've been working with wonderful scientists ranging from Google to Microsoft and other places. And we have a Linux Foundation program called Nightstream. And actually, we're slowly putting it into the Midnight City simulation. And what makes it so special is not only is it post-quantum, but the math that we can do with lattices reuses the math that the GPUs use in all the AI centers. This is why the relationships with Google and Microsoft and Amazon are so powerful for us, because they've spent hundreds of billions of dollars building some of the most powerful computing systems in the world, and we get to linearly scale with them. So that means Midnight's ready to meet the needs of billions of people as we do the simplification.
We can see the layer 2 in action as well. We can open every transaction here has a link to the blockchain explorer. And this is an actual part of the layer 2 that's deployed on a public cloud. We can see the details of those transactions, and this includes all transactions. So not just the Midnight City ones, but any transactions that go through the layer 2 are available here. And what's really interesting about the layer 2 is that we have this data here on TEE attestations. And
that's the whole PET thing, where you unify different things together. You put ZK with MPC with TEE, and when you put these things together, you massively improve the user experience, throughput, and security. It's waterproofing, and you put layers and layers.
Yeah, this is actually running in the Azure cloud in a trusted execution environment. So it's it certifies the rollups from the layer 2, and we can propagate them to the layer 1. And there's a lot more to the simulation. And I'll be at the booth all day to give these live demos, answer questions. You can figure out what this God mode is for. So just visit us at the booth and go to midnight.city to learn more about the project.
And one final thing about Midnight City. It's a beautiful interface, but it would be worthless if you couldn't interact with it. So one of the things you're going to be able to do in March is we're going to allow people to actually create their own avatars in Midnight City and deploy them. And kind of like the video game Majesty, they just start playing the game. You indirectly control them. It's the Tamagotchi of the 21st century. And you can kind of see them running around, spending a private stablecoin, doing selective disclosure. And every single time we get a new partnership, a new relationship, or a new thing in Midnight, we put it in Midnight City. It's the front page of the cryptocurrency. And it allows us all to talk around and think about how would these things run at scale. These are AI agents. They're intrinsically unpredictable. We don't directly control them. They just kind of do their own thing. So over time, they'll hold elections, commit virtual crimes, have virtual love stories. So we invite you all to go and see it. So we're very excited to launch Midnight. The very first version of the network will go live in the end of March, as I said. We have a lot of great relationships to help us run it. And every 2 to 3 months, something new comes out. Midnight City, every 2 weeks, something comes out. All of this was built in 3 months. So this was not a long-standing project. Everybody came together, Argentina, multiple times. We're in ship mode. This has to happen because I don't want to lose the cryptocurrency space to a bunch of bank chains. We got to keep it real. And we actually have to push power to the edges. And how we do that is put you in charge of your wallet, your identity, your data, and ultimately who and how you disclose things to people. So yeah, thank you so much. Thank you guys so much for your patience. We ran a little bit over time. And now I got to get to my shift. Cheers.
Thank you.
All right, welcome back to CoinDesk Live, coming to you from Consensus Hong Kong. To kick things off today, we're diving into the state of crypto across 2 regions with 2 local leaders. Joining us now, Nick C. Tong, APAC Regional and Singapore lead at Base, and Aaron Tang, CEO, Igloo APAC. Nick, Aaron, great to have you guys.
Pleasure to be here.
Great to see you guys here.
How's the conference been for you?
Good. I think I always love Hong Kong. I think despite the markets, we see a lot of builders here, and I think crypto has matured to a stage where people have been up through different cycles, and I think we're just here building through the bull, through the bear. So it's great to see the amount of people here.
And Aaron, how's the show going?
No, I think I took a glance on the conference. There's a lot of APAC-focused content and exhibition. I think that's incredible because Hong Kong really is a gateway of Asia or China, right? So yeah, happy to really explore more today even.
A lot of people talk about Asia being sort of big hubs for developers and for retail. Both of you guys are on chains that really require a lot of people to be on them for them to be successful. So how do you sort of stoke up interest in this part of the world compared to with the US, which it feels a little quiet right now, whereas Asia still seems to be having all the excitement?
Yeah, I think Asia has always been a hotbed of activity, right? And when you look at Base and Coinbase being very US-centric, I think the real difference is in the US you see a lot of investors, and in Asia you see a lot of traders and a lot of consumer use cases. I think it's the same as I come from Singapore, right? And Singapore's largest investing partner is the US, and our largest trading partner is actually China. And I think this is what we see on-chain as well, right? Our largest investors always, the funds are in the US, but trading and consumers are in Asia. So I think Asia is really a hotbed for any chain that's looking to really grow its presence significantly. And so that's how we look at Asia.
And Aaron, the Pengu brand seems to be pretty strong here. Pudgies are everywhere. We see the costumes. We've been to the parties. What is it about this region that really seems to strike users that Pengu is the place to spend time?
Well, I think the philosophy we do is that we don't look at Asia expansion by just tweeting something and translating to 4 to 5 different languages. I think what we do is that we really understand deeply where each market is. I don't think Asia is one country or one continent, right? You have to really go deeply, localize. Like for example, in Korea, you have to be super trendy and fast. In Japan, you have to really care about the IP, the storytelling of the IP, because that can create like long-term, loyal list to your IP. I think in Southeast Asia, where Nick and I based, there's a lot of grassroots community, great builders, right? That's based there, and a lot of community-driven events. So I think, in Pudgy Penguins, the last 3 years, we've been go down and dirty, right? Go down and dirty to go out to the grassroots level, really understanding their nuances and really, care about them, right? And I think a lot of the projects in Web3 I see, they just make a tweet, translate to different languages, and call it a day. I don't think we take that approach.
I was just going to say, Nick, you had said something that really struck me, which was the fact that, despite some sort of volatility in the market, which we have a long-term view. In the US market, where I spend most of my time, that long-term view is really predicated on the fact that we're going to get more regulatory clarity. That regulatory clarity will lead to, dampening of volatility, because it's going to allow some of the greatest innovators and builders to actually bring a product to market. How do you guys take a look at, regulation in this region and how it's going to impact your business?
Yeah, I think Asia is a fast follower, right, in terms of products we build, but as well as in terms of regulations. So I think, the Clarity Act and the Genius Act in the US is giving us a lot of, giving local governments here a lot of impetus to advance their regulatory clarity here. So I think it's promising, and because of that, we are seeing budding local stablecoin companies and issuers getting more active as well. And so I think that's very promising for the region.
Aaron?
Yeah. Well, I think from my conversation with regulators, institutional, I think Pudgy is really the best use case in Web3 when it comes to retail adoption, right? We are the most friendly consumer-facing brand in Web3. So I don't think I think there are other projects has probably a more, challenging situation compared to us. I think to me is that Web3 really have a distribution problem, right? Because for example, we don't become popular by being popular in CT, right? We become popular by being popular in Instagram, right? In TikTok, in YouTube, in Facebook, in GIF, all the stickers that people send. Right now we have almost 1 billion stickers and GIF impression per day, averagely. And even you look at our products, right? We don't sell NFT at scale, right? What we do is that we put toys on shelf on retail, and of course, Asia is really the epicenter of IP and cute IP. So I think we don't think we are pretty confident that in the next 3 to 5 years, people will get more excited into Web3 because of our brand.
Aaron, I want to stay on you for a second. I saw a tweet that you put up a few days ago about you being the first person to use the Pengu credit card with Visa.
Yeah.
And now the first transaction on it. In crypto, where so many of us focus on buy and hold, how do we encourage more of that retail audience to buy and spend?
Mm-hmm. Well, I think obviously, in crypto, a lot of the products are very extractive, right? Like they launch something and they want to get liquidity from their users, right? For us, is that we create products beyond crypto, right? Whether it's a physical toy or a digital app or an online game, And to be honest, the Visa card is something that is pretty monumental for us, because Visa is the one that approved the design and the IP of the credit card or the debit card, right? And this is like the first 24 hours of us launching that. We'll see. Tonight we have like a party in Consensus Hong Kong, and we're gonna onboard the first batch of users to get the card, and then we'll see, right? Honestly, I think we want to have more partnership like that, because every single merchant in the world already have a Visa terminal. So.
All right, Nick, and I want to focus on an innovation that Base is really involved with. I saw another tweet today, or maybe it was yesterday, from Stripe, talking about they're adopting the X402 agentic payments protocol, the idea that AI agents can just pay each other. That seems to be something that Base is going pretty hard on. What do you think is really the future of agentic payments?
Well, I think it's very interesting. Agents and AI have really been catching fire on Base, and I think Virtual's protocol is one of the first platforms that really made AI take off in a big way on Base. And I think where agentic payments really comes in is the enabling of agents to do real-world tasks or to pay for themselves, or to give themselves self-sustainability, right? And I think a lot of companies see this, Stripe is one of the companies definitely recognizes this. So I think that's very, very exciting.
All right. Well, thank you, Nick and Aaron. Great to have you here. I hope you have a great rest of the show. That was Base APAC Regional and Singapore Country Lead Nick C. Tong and Igloo APAC CEO Aaron Tang. We're going to take a quick break. We'll be right back.
Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution. Trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
If you're just joining us, we're coming to you live from Consensus Hong Kong. Before we get to the rest of the programming, let's take a look at some of the best moments so far.
Welcome to Consensus Hong Kong.
It's time now to bring in our next guest, who just announced a partnership with CoinDesk Indices and spoke yesterday here at Consensus Hong Kong. Jennifer Ilkiu is the president of ICE Futures US. Jennifer, great to have you here.
Sam, really good to be here. Dave, it's fantastic to be here.
I'm a little disappointed with all the social cuts that, Jen, our segment yesterday didn't make it,
Yeah,
I'm a little
I was thinking
you know what?
Yeah.
I mean, we got to find something around here. Anyway, we spent a bunch of time yesterday together. We were at a derivatives roundtable together. We announced the partnership that we have together. Yeah. We sat on a derivatives panel. All of those were incredibly well attended. But what did we actually announce, Jen?
Well, we announced that we are launching a number of new futures contracts on ICE Futures US. It's our first foray back into the crypto markets. We were in the crypto markets in 2018 first when we started with Bakkt, but we pulled back because we really didn't feel that the market was ready. So we're launching some single token cryptocurrency future contracts. So that's BNB, Solana, ETH, Ripple, and Bitcoin. And that we're really excited about is two multi-token futures contracts, and that's the CoinDesk 5 and the CoinDesk 20.
Yeah. I want to ask you, you mentioned 2018 you were in.
Yeah.
You kind of pulled back. What is, in your opinion, different between 18 and 26 that allows you to feel comfortable coming back in?
Yeah, it's a fair question. I think for us, a lot of it is a regulatory change within the US. The administration, putting in the Genius Act and working through the Clarity Act, has really given a lot more regulatory comfort to everyone in the market. We're seeing banks that are really starting to get in and get a little bit more comfortable with offering clients futures in crypto. We had a lot of pushback from that in the early stages.
I mean, ICE has made a major push into crypto beyond just this. This is one segment. Obviously, I think it was pretty well documented in the media about the investment made into Polymarket. I know you've been adding senior staff to focus on this. Tell us a little bit more about that philosophy and how you're trying to integrate every segment of your business into crypto.
So ICE looks a lot of these things as compliant innovation. We believe a lot in regulation, and we know we need to follow that. And so this is why we're really coming into the crypto market at this space. One of the things we're also doing with the New York Stock Exchange, which you may may have seen is tokenized securities. And that's an incredible new area where we're going in, where we're allowing people to offer, where we can offer fragmented share purchases through tokens. You will end up being able to work on the blockchain so you can have immediate settlement, so somebody can buy part of a share, sell it an hour, 2 hours later, make a little bit of money and either use that in the economy or use that to buy more tokenized securities. So it's a really exciting part of it. And then you talked about our interest in Polymarkets and our investment there. Trying to understand their technology and their blockchain technology is really important, but also you may have seen we've announced a data relationship with them, where we'll get a lot of their sentiment data and we'll be putting it out through our data company.
So one of the things that we've talked about throughout the course of the segments here and also across the convention center floor is this convergence of TradFi, meeting crypto. I think in the future we all kind of agree that you're not going to have crypto markets and TradFi markets. You're going to have markets. And I think one of the things that you and I really actually champion together is this. You call it a concept of thoughtful innovation or innovating in a compliant manner. I mean, you have to have transparency, you have to have trust, you have to have compliant frameworks. And I think that's why this partnership that we've actually put together makes so much sense, because philosophically, as we think about how we're going to grow our businesses, it's all on that pillar of institutional trust. If we don't build our markets for institutions, it's not going to get mass adoption and mass scale. So maybe talk a little bit about how you guys think about that.
Yeah, so for us, we're a company as an exchange, been here for over 2 decades. And we really see that you need to have infrastructure that, as we've talked about, trust, you've got neutral, and it can work in any type of market environment. And we want to work with the best index providers, so CoinDesk being one of them. They're IOSCO compliant. People trust them. So working with companies like that means that we can have compliant and trustworthy data providers when we launch a futures contract, and then everyone will be able to get price discovery and transparency when it comes to that. And I think there's a lot of things that we do together that are very symbiotic in that way.
As someone who's not as sophisticated as either of you in the world of this type of investing.
Sam, you have your sophistication, okay?
It's in other places. But to the average person, why a future versus just buying a spot price?
Oh, that's a very good. Well, first of all, ICE Futures US, we are regulated as a futures. Spot crypto is still being looked at and figuring out how to be regulated in the US space. So we're really, like we're saying, staying with compliant innovation. We also have so much history in the future space, and people believe and trust us. So staying within that space is incredibly important. Secondly, institutional players tend to focus a lot more on futures, and we are really looking at, in the beginning, pulling in that institutional volume, and that's why having these multi-token indices are so important. We've almost had a call to arms or a call request from clients who want to do something beyond just Bitcoin. And they love the idea. They look at MSCI emerging markets and other multi-token or multi-cash equity indices, and we're copying that same model.
Yeah, I think one of the things that you realize, we think about crypto investing as Dave Lavelle or Sam Ewan or Jen Ilkew, but the institutional adoption is going to necessitate some of the levers that currently exist in TradFi markets. And when I talk about building a high quality index business, I talk about ensuring that we're building a liquidity ecosystem that allows risk management to happen in the same way that risk management happens in traditional financial markets. And so the opportunity to have a future that has a dated expiry and to be able to utilize that as a risk management tool against your inventories elsewhere is exactly what we need to do. We need spot markets that are efficient and well regulated and operating appropriately. You need futures markets, you need options markets, and on the back of that, you're going to have listed derivative markets that are going to grow. Banks are going to be able to kind of create products that are based upon futures or the listed derivatives or the spot market. You've got ETFs coming, you've got options on ETFs. I mean, all of this coming together is going to increase the liquidity, increase the interoperability, and that's going to result in tighter spreads and a more efficient access to the market by every single participant, whether that's self-directed retail investor all the way to the largest institutions of the world. Institutional adoption, and I'll turn it over to you in one second, is about pensions, endowments, foundations, insurance companies. This is a whole asset class that is being developed, and those players have not yet really entered because they don't have the tools to do it with confidence.
Yeah, and I think we had a discussion yesterday when we were on our panel that a lot of players were still just looking at Bitcoin. And we're really starting to see that change, especially with the immersion of ETFs that are beyond Bitcoin. So they're seeing the need for ETH and other different products out there. And we have, CoinDesk is working with 3 different ETF providers. So we have the CoinDesk 5, which is listed on Grayscale. We have the CoinDesk 20, which is listed already on ProShares and will be coming out on ARK Invest.
I will just say that ProShares has had some recent creates, so it's getting a little bit of adoption. Not even being out in market in the US for
not even a week.
A week.
Yeah.
So super exciting development.
I want to just say congratulations to both of you on the announcement.
I know it is.
Jennifer,
great.
thank you so much for being here.
Thanks, man.
That was President of ICE Futures US, Jennifer Illique. We're going to take a quick social media check, see what people are saying about Consensus.
Thank you so much.
Yeah, it was great. It was great. It was
All
great.
right.
Okay.
All right, this is Animoca Brands. So I don't know if you saw this yesterday, Dave.
I didn't.
But Yatsu was controlling one robot, fighting one of our folks, Jeff Wilzer, controlling another robot. They had a battle. Yacht won, so Animoca is the robotic leader right now in robot fights here at Consensus.
So I know we've talked about, we have over 400 side events. I was sitting next to Yacht at a dinner 2 nights ago. Gosh, the jet lag, the days are merging together. And we were talking about this, so I didn't have the chance to see it, but that's incredible.
All right, let's check what other folks are saying. This, to your point, side events are going crazy. We just had Aaron from Pengu. I could see in this photo the giant stuffed or inflatable or furry, whatever it is, penguin at one of our side events. Walk around any part of Hong Kong and you're seeing people with Consensus badges having a great time. So I think anyone who comes to an event like this, make sure you really explore the city and all the side events. Let's check our final post. This is, I guess, another one on side events, but here we go. Hong Kong keeping the energy high at Consensus. We're really excited. Guys, if you want to, send us a tweet, tag us in something. We're going to feature some of the best folks. But really, right now, we're going to get to our next conversation. Stephen McClurg, welcome back to CoinDesk.
Thanks so much for having me.
Yeah, Stephen, you're CEO of Canary Capital. You're an investment firm leading the charge in diversified crypto ETFs. Welcome. You guys know each other.
We know each other. I guess you could say that we know
I even
each other.
like you.
So,
one thing to know somebody is another thing to like them.
It's a very funny thing when I could have taken the 2.5-hour flight to Nashville. We could have hung out, had some hot chicken, but we drove. We flew halfway around the world, and we're hanging out here. We were on a panel yesterday. We also were participating in a number of different opportunities to support your ETF launches with our indices. Tell us about what's going on at Canary and what's next for you guys.
Yeah, well, no. First of all, thank you so much for having me in our partnership with CoinDesk Indices. We're very excited to use you guys for every one of our ETF launches so far, and you guys are doing a fantastic job. But no, we're pretty excited about what's happened so far and what's in for store. Canary's only an 18-month-old company.
It's incredible.
And
the progress you guys have made, I'm sorry to cut you off, it's insane the progress you guys have made. I mean, your XRP ETF, first to market, crushing it. HBAR, pushing the envelope. I know you have a couple of other filings. You can talk about them if you want.
Yeah. No, we're very excited. For a first time launch, we're doing okay. And but in the future, we've got a SWE filing. We're hoping that comes sometime soon. We also have Injective, Say, Pingu. You just had the Pingu guys on. What we're trying to do with Pingu is create something where it's not just the token, but it integrates NFTs. And nobody's done that yet. And I think the right partner for that is Pingu, because what they've done, not only on a digital level, but also on a physical level. I know good IP when I see it, and their IP is fantastic. So we're excited to be a part of that, and hopefully something comes about on the innovative track.
Okay, so you and I have been kind of tackling this kind of crypto exchange traded product market, trying to figure it out. The regulation has bounced around a little bit. We have, I would argue, say a little bit more of a favorable regulatory environment over the past year and a half, right?
Yep.
So how's that impacting your business? How is it changing the way you're thinking about innovating with products? How's that changing the conversation with clients?
Yeah. Well, what's great was, I mean, even under the old administration, it was very difficult to get anything done. I think, you were an issuer at the time.
I know.
And we were trying to get Bitcoin launched, and largely due to your efforts, everybody got it launched. And but we were able to do it, but it was sort of like by twisting an arm. And now that we've got a new administration in place, there's so much more clarity. And one of the biggest things is the generic listing standards. So the SEC worked with several issuers like ourselves and exchanges to create these generic listing standards that essentially said, hey, if there's a futures market, we're not going to hold up any ETFs. Anything else is, suspect. But that actually, I think it's pretty good legislation. Or it's not even legislation; it's just guidance. But I think it's pretty good because you kind of need futures for ETFs anyway, because that allows the larger investors to be able to hedge, and that's extremely important for institutional investors. But that clarity, and then of course other legislation that brings more clarity. I mean, all people want to know is what the rules are.
Right.
And if you know the rules, then you can play by them.
Right.
And so now we have rules.
Yeah.
Stephen, I was struck by the fact that your ETFs, XRP, Solana, HBAR, Litecoin, all are very passionate, very vocal communities.
Yes.
And so where a lot of folks are going to Bitcoin, which of course has theirs, and Ethereum, I really think you guys have sort of hit on something of saying, let's get a little bit more specific to where folks are building really interesting products, and they have loyal communities. So yeah, tell us a little bit about the thesis behind that.
Yeah, so honestly, when I launched Canary 18 months ago, I went to both Korea Blockchain Week and I can't remember the name, but the one in Tokyo, their Blockchain Week. Yeah. And I was just sort of investigating to see what was going on in Asia. And what I noticed was that each one of those four had very passionate communities in Asia, and then kind of took that back to the US and explored a little bit more. But that's exactly what we were looking for. We were looking for ecosystems that had passionate members attached to it. And it's so important. We learned that lesson in launching a Bitcoin ETF, that Bitcoiners are extremely passionate about what they're doing, and if you can tap into that passionate community, then then we move on. SWI also has a very passionate community too. So, but that's exactly it. The passionate community will participate.
Yeah. So when you talk about actually asset allocation, you're in the business of raising assets, right?
Yeah.
So when we're talking about kind of pushing a little bit down the cap spectrum and you're having conversations with clients about making allocations, that's a different conversation than, hey, take 1% of your gold allocation out and replace it with Bitcoin. So talk to us about how those conversations are going, and what are the communities that you're facing off with to kind of, get that adoption?
Yeah. Well, and that's the other thing. It's kind of a dual mandate of ours to look for both a passionate community, but also interest from more institutional investors. And what I believe that interest comes in is largely in utility. So, like XRP is building a lot on the financial rails. Hedera is building a lot in the enterprise way. And then, of course, what I consider to be like open source protocols that a lot of people are building on, tokenization and such. You've got Solana, SWI, Injective, Say. Those are all very interesting products from a utility standpoint that we're really trying to tap into. So when we're having those conversations, it really is all about utility on the institutional front. And if there's a tokenization project that is getting a lot of attention from an institutional perspective, then that makes them interested in the token itself.
So I'm going to ask you a kind of an off-the-wall question from an indexer geek to an ETF geek, all right? So obviously, we have a couple of multi-token indices that we're really passionate about, the CoinDesk 5 and the CoinDesk 20. CoinDesk 5, market cap weighted, pretty simple, very heavy weighting towards, Bitcoin and Ethereum, obviously, roughly 90% ballpark. But the CoinDesk 20 caps Bitcoin and Ethereum, and it allows for kind of greater participation for those next tokens. So tokens like SWI and Hedera and things that you're really passionate about. Where do you see index-based investing in the future taking place in crypto?
Yeah, look, I mean, I think the two earliest indexes that have been successful were very heavily Bitcoin weighted. I personally think that advisors are going to want to choose their own Bitcoin allocation and then have a other allocation that they want other people to make decisions on. So I think the future of indexes is going to be more ex-Bitcoin or extremely limited Bitcoin, like what you're doing. We're actually working on a product with CoinDesk indices that will severely, it'll still include Bitcoin, but massively limit it and open it up to a lot of other protocols.
To be continued.
To be continued. All right.
We'll have to have you back.
Thank you, Stephen.
Thank you so much for having me.
That was Canary Capital CEO Stephen McClurg. We'll take a quick break. When we come back, we'll hear from Tom Farley.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Well, we're just getting started off day two, Consensus Hong Kong. Here to reflect on the event so far is Bullish's CEO, Tom Farley. Tom, welcome.
Good morning.
Good morning.
Good to see you.
How you doing?
Got the A-team here.
Doing our best. I'm glad we all went blue and white. You're blue and green, but... Tom, give us your sense of the show so far.
That's great. It's like, I didn't know what to expect. If you're in crypto, unless you've been living under a rock, you know that the times aren't necessarily amazing, and yet you come here and everybody's hopeful and optimistic about tokenization, about kind of rebuilding at these lower prices and creating some momentum around what's going right in the industry. And it's been a great couple days. How about you guys?
Well, I want to ask you, though, I watched your interview with CNBC, and what I really enjoyed about it was you're like, we're all dealing with the price issues.
Yeah.
Let's not focus on that. Let's really focus on the innovation. Is that what you're also seeing around here in your conversations?
Yeah, I mean, well, internally at Bullish, as Dave and others can attest, we truly are focused on building and rolling out features and functions for customers and looking at M&A. We don't spend a lot of time looking at prices and complaining and woe is us. In fact, I don't think it ever comes up internally. So that's absolutely the case. And if I look back at the history of Bullish, probably the single best time we had as a company was the last time we were in a position like this, because everybody was just super focused and feeling urgency. And we rolled, I mean, that's really when we built options, and then it's when we built a lot of other features and functions for our customers. So that's kind of the sense I'm getting here.
I mean, if you didn't have any energy, Tom and I were attempting to have a conversation about 10 minutes into the event, and the dragon came through. Drums,
yes,
celebration.
4 times.
Get some good luck. Touch the dragon. Wake up.
Right.
Which was fantastic. But to the point of innovation, you and I have long had conversations. Our leadership team has conversations about the convergence of crypto with TradFi. We've been having that discussion throughout the CoinDesk live sessions today. That has been permeating the entire event. And as we think about advancing and innovating, like the announcement that we had with ICE on our futures product. We just had Jen Ilq on. How else are you seeing that kind of convergence of crypto with TradFi, and how are you thinking about how we kind of position ourselves in that regard?
I want to give you a direct answer to that, but I want to go back for 1 second to Sam's question. One thing I'll mention to the viewers is our conference is by and large institutional in nature. Right. We have very few just kind of retail traders. So I want to be candid. I think the retail community has gotten smoked. Mm-hmm. It's been a really, really tough run. And so I suspect if we had a different focus in our conference, there would be a different feel. Mm. But institutions, as Dave is sort of insinuating, are feeling more hopeful and optimistic that this blockchain thing, these really great publicly available blockchains are the layer of programmable finance for the future. Dave, your question is intersection of TradFi and crypto, and I'll give you an example. I just came from across town meeting with a major global investment bank. Didn't have any of those meetings in 2024, even 2025, until the very end of the year. Working through how they're going to come in a big way into crypto, be able to service all of their different customers, whether high net worth or institutional customers or what have you. That's the theme. Yesterday at lunch, I sat next to another major global bank.
It was incredible.
Talking about doing the same thing. Had a conversation immediately after that with a major global broker, kind of a conservative broker, moving into crypto. So when you say kind of give a flavor, that's my life right now, is that Convergence, and that's what bullish on the exchange side. We cater not just to institutions, but really institutions who they themselves have a customer franchise. That's our sweet spot. That's where we go in and we say, hey, really great liquidity in crypto's most important assets, low cost, unconflicted business model. We're your partner for the long run, big balance sheet, lots of cash flow to make you comfortable, and net cash on the balance sheet. Important regulations all around the world. So it's a good sales pitch and a real sales pitch. So yeah, that's a bit of a rant, but it's very much.
It's a stream of consciousness that's so obvious because it's staring you right in the face, and you're looking at your calendar and you're saying institution, 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 institution. It's the same thing we're seeing around here. I have a metric for it's my sixth consensus, and I have the pink sequin tuxedo metric, and I haven't seen any. Which is a good indication because the first one I went to had dozens. So, I think it's the institutionalization.
Stopping them at the door, to be honest.
I'm like granddad, and I'm like compliant, regulated guy. My whole life's been in regulated venues. And so when I first came into crypto as a full-time practitioner, I kind of looked down upon the pink tuxedo a little bit. What I've come to realize is it's actually been hugely helpful to crypto to have that community bringing people. It ultimately brings builders, the people who are writing the next app on Solana or what have you. It's brought investment in, VC investment. And so while it isn't what I'm used to, I don't invest in a lot of frog coins personally. I don't look down my nose upon it, and I think it's been helpful, and I'm empathetic that community, as I said earlier, has really gotten smoked.
Yeah.
It feels like, realistically, you don't get a poly market without those guys, right?
Right.
You need the people who are so passionate and they want to be in those degen sort of trenches in order to also validate the whole concept. Tom, last question for you. What I love about when we all work together is you don't seem to get rattled on the prices. You really do focus on the future, but how do you manage your own sense of stress around volatility?
Yeah, so for those who don't know, we own 25,000 Bitcoin. And so when the price of Bitcoin goes down 50,000, that's $1 billion of liquid net worth that just kind of disappears. So it's not a trivial matter. For me, it's kind of the path we've chosen. And I don't like it, but I also don't get too high when the price of Bitcoin goes up 50,000. I try not to look at my screen very often. I spend a lot of time with my family. I work out really hard on the days Bitcoin goes down $10,000. Try to keep the main thing, which is what are the customers going to need not just tomorrow, but 3 years from now? And that's what we focus on.
All right. Thank you, Tom.
Thanks, Tom.
That was Bullish CEO Tom Farley. We'll be right back after a quick break.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, if you are joining us, we are live again from the floor of Consensus Hong Kong. Our next guest, Fakul Mia. Fakul is the managing director of Go Mining Institutional. Fakul, thanks for being here.
Thank you for having me. Nice to be here.
Fakul, in a few minutes, you're going to be up on stage talking about crypto treasury strategies, understanding capital allocation. Give us the highlights. What are you going to talk about?
So it's focused around Asia, but broadly speaking, I think the themes are very much global. And what we're seeing is that Bitcoin has very much become a mature macro reserve asset. And so now we're seeing a race for institutions, state actors, pension funds, etc., adding Bitcoin to their balance sheet, acting as a portfolio diversifier, potentially a risk-off asset. So, yes, price action might not be great right now, but accumulation is only growing.
The idea that a lot of us in crypto talk about it is that Bitcoin is on a 4-year cycle generally. In the last 6 months, there's a lot of chat about the super cycle and the fact that maybe we've broken through that. With what's going on right now, do you feel that this 4-year cycle is still resonant?
I think we still have a 4-year cycle, but it's starting to become somewhat disjointed. And it's reflective of the sheer amount of institutional flow that we've seen come in. So what that's done is it's created a natural liquidity pool and a base to stop, what would have been traditional retail flow, bringing Bitcoin down. And so, yes, price has been volatile, but it's nowhere near as volatile as it was in the last cycle. And I think that's reflective on the institutional capital that's come in. And, mining economics has continued to grow, so hash rate, difficulty is increasing. So, miners are having to operate in tighter conditions, but it is helped by the institutional flow that has come in.
Yeah, so institutionalization and the kind of broader adoption, obviously will dampen volatility because you have non-correlated users. Fakul, you might not know, I'm an ETF guy, so I always think that when ETFs come online and further democratize an asset class or democratize, Bitcoin, for example, it allows an opportunity to kind of act as an accelerant to institutional adoption as well. Did the ETF being approved and all the flows into Bitcoin ETFs act as that accelerant similarly, do you think?
Absolutely. I think the sheer flow, take the ETFs themselves, the most successful ETFs of all time, the BlackRock, IBIT.
By far.
They're most profitable. That, it accelerated huge amounts of capital coming in, whilst the Bitcoin network and the new issuance of Bitcoin halved. And so the demand for ETF inflows on average was 3 times higher than new Bitcoin being issued. And so what that meant was that there was natural supply and demand economics that only helped the industry and helped adoption.
So what do you need for the next leg up? What do you think is going to be something that you're looking for in the future that could be the next accelerant?
I think continued acceleration in regulation. So we're certainly seeing the US, even the UK, MiCA rules in EMEA being rolled out, and they're starting to be adopted. I think as that continues, it means that what was historically for institutions, pension funds, mutual funds, etc., unable to participate because the regulation just wasn't there.
Right.
They will now be able to participate. And the ETF is a great example, right? Before the ETFs, they just couldn't participate. So I think as we see continued regulation, which I know some people don't necessarily believe in this space, I think it will help continued flow into the industry.
Fakul, you have described Bitcoin mining as maturing into sort of infrastructure grade as an industry. How hard is it now for the miners, especially, again, considering all the macro conditions?
It's definitely a lot harder. I think the new amount of Bitcoin that's issued has halved in 2024. It will halve again in 2028. Yes, price action has been positive, but a lot of that has been offset by increases in the network difficulty. So ultimately, those miners that have really survived 2025 and that will thrive in 2026 are those that are highly efficient, have low capital cost basis, access to low power, efficient mining fleets, that's going to be important. Those that are running high amounts of leverage, operating on the peripherals, relying on price action alone, they won't survive.
All right, I'm not going to run a miner out of my apartment in New York City anytime soon.
Not anymore.
Dave. No, it's over. Thank you, Falco. That was Go Mining Institutional Managing Director, Falco Mia. Dave, it's been a pleasure co-hosting with you.
It's been awesome. Thanks for having me.
All right, now we're going to check in on what's been going on at the EZA Consensus Hong Kong Hackathon.
1,000 of the smartest developers in the whole of Asia who've all flown out right here to Consensus, where they are hacking the EZA Consensus arena. You can see them behind me. They're about to build the future of Web3 right here. The theme of this hackathon is DeFi and trading, so we're going to see the best trading applications, best DeFi applications get built IRL over the next 48 hours. We've got about 1,000 developers hacking right here at the EZA Consensus arena, and they've flown in from all over the world. They've flown in from the States, flown in from Europe. They've obviously flown in from the rest of Asia as well. I think we've had people from the Philippines and Asia, obviously from China, people locally based in Hong Kong as well. So pretty much, I think, almost every nationality out there. The main thing everyone here is building is either a trading bot or a DeFi application. So we've given everyone the freedom to build on whichever blockchain they want. But the ultimate goal is to build the best trading experience for the end users. What can we expect? In the past, we've had startups come out of here, go in to get funded by YC, which is the best the best accelerator in the world. We've had founders get funded by A16Z, Founders Fund, pretty much you name it. So right here behind me, there's a unicorn in the making. It's just about seeing who's going to be the next one. Tune in to Demo Day tomorrow at 1 p.m. We're going to be showing you all the best projects that have made it to the finals, and we're going to be selecting winners. Don't miss out. We love Consensus because Consensus is where pretty much everybody comes together. You've got VCs, you've got now builders with the EZA Consensus Arena, you also have institutions, and you've just got also retail. So normal people who are excited about seeing what's being built and seeing what they can do in crypto. So it's just a real melting pot. There's over 13,000 people right here at Consensus at the moment. And so it's literally the best place to be if you want to be in crypto, if you want to find out what's going on here. Not to mention the CoinDesk and Consensus teams are amazing, best in class in the crypto space. So Lach, tell us what you're building the hackathon.
So, okay, first, I'm Lach, I'm from Bulgaria, and I live in Philippines. So I'm going to be building something very cool for people who like to watch streams and people who like to watch games. So you're going to be able to tune in into your favorite streamer, and you're going to be able to wager on events against your fellow viewers. Because why just watch when you can also do something else while watching? You can be active participant. And there is no house here. You're not wagering against the house. You're wagering against your fellow players, watchers, and the best will win.
So the idea is it's much fairer. And also, you can now start wagering on things that traditionally big houses wouldn't actually allow you to wager on.
Right now, nowhere you can find your favorite streamer and chance to interact with their content. Right now, you can only bet on big events like Super Bowl, and that's not what we want. There is already poly market for that. We want for content creators which are very small and niche.
So where did the idea for this amazing project come from?
I always wanted to do something that is, a bit more active.
Yeah.
I want to watch, I want to communicate, and I want to throw a bit. I want to make something funny. I want to make something that might go viral on Twitter and laugh about it, and see who won, who lost a lot of money, and then brag about it. Hey, look, I won a lot, you lost.
Hey everyone, welcome back to CoinDesk Live from Consensus Hong Kong. I'm Jen Sanasi, here with my co-host, CoinDesk's Global Policy and Regulation Managing Editor, Nick Day. Nick?
How's it going?
And it's going absolutely fabulous. We're on day 2 of Consensus. This is your first time at the desk so far, so looking forward to the interviews that we're going to be doing together. But I know that you've been moderating some panels. I know you've been walking the floor. Talk to me about the conversations you've been having and how you've been experiencing the conference so far.
Yeah, it's been pretty interesting. I would say definitely very high energy. I think we're really crowded, especially compared to last year. So that's been great to see. Having a lot of conversations, policy-focused issues naturally, but I've been hearing a lot about just kind of the development of the regulatory regimes in the APAC region at large. But then the other part that's been really fascinating to me is a lot of folks have said that they are really just waiting for the U.S. to do stuff, which is, the whole point of us coming here is, we're decentering the U.S., we're focusing on the local, concerns, but a lot of policymakers are waiting to see what the U.S. does and hoping to use that as a launch pad for their own local regulatory regimes, which is pretty fascinating to me.
Well, that's interesting to hear because for a long time it felt like the U.S. was really lagging behind and different parts of the world, especially here in Asia Pacific, were progressing much faster than the U.S. And so it sounds like now what you're telling me is they've kind of put a pause on things. They're looking at the U.S. as maybe a leader when it comes to regulation and policy again and waiting to see what's happening there so that they can copy it. Is that a right read?
Yeah, I think that's fair. It seems that, kind of the idea is if the U.S. has some kind of regulatory regime, especially over the last year, that makes sense, then they'll be able to, if not copy that, but at least use elements that work for their own local communities and ecosystems and build on that.
You said you've been having policy conversations. Have they been mostly focused on the Asia-Pacific region? I know that you are our man on the ground when it comes to regulation and policy in the United States. I know that we recently had that latest stablecoin meeting over in DC. From what I hear, not much came out of it. Maybe give us the lay of the land on what happened there and what you're hearing people say about it.
Yeah, I mean, the big thing seems to be that it sounds like they'll still continue negotiating, but that the crypto companies and the banking industry are at an impasse. The banking industry had this internal document that our colleague Jesse Hamilton reported that said that the banks are not willing to compromise on stablecoin yield concerns. What I've been hearing here is that there is a lot of interest in stablecoin yield reserves and rewards, and whether or not companies, even outside the U.S., will be able to start offering these types of products. And part of that is seeing, again, if the U.S. does come up with some kind of compromise or regulatory framework that banks will accept.
Yeah, well, what I'm hearing here too is, stablecoin licenses coming in March in Hong Kong. They will allow centralized parties to offer yield on stablecoins. In your perspective and given the conversations you've been having, does that fact maybe put the U.S. at a disadvantage? Are they now lagging behind the rest of the world when centralized entities in Hong Kong can now offer stablecoin yield? Like, what impact might that have?
I think no, in the sense you're talking about. What's really interesting is that we're starting to see in Hong Kong and other regions is localized stablecoins. So the big argument for stablecoins in a lot of places is access to the dollar without needing a U.S. bank account or something like that. So in that sense, stablecoin companies in the U.S. are fine. Stablecoin companies offering USD stablecoins are fine. What Hong Kong and other places are doing is allowing local local currency stablecoins, which I think will be really interesting to see how they develop the companies and the ecosystems locally, ignoring the U.S. aspect of it.
All right, we're going to continue the stablecoin conversation here at the desk throughout the duration of Consensus Hong Kong. We're now going to bring in our next guest, Clara Sao. She's the founding officer for the Filecoin Foundation. Clara, welcome to the show.
Thank you so much for having me.
Of course, thanks for coming back. I know you've joined us on CoinDesk Live at previous Consensuses. Talk to us about how you've been experiencing the show this year.
I thought this was one of the best shows to date. Hong Kong is such a vibrant city, and there's so many different people from mainland China all the way from Europe and the US. And it's such an important time because the Hong Kong government has been so pro-crypto over the years and really figuring out how to have the right rails to really encourage the right local development. So
how is the Filecoin Foundation working in the region? How are you looking at the region?
Yeah, so we have a really large storage provider community, especially in China. And sometimes the Chinese regulatory atmosphere is difficult for our community, and so a lot of them are actually looking here in Hong Kong and other places like Singapore for where to go for more clarity in building their businesses.
So in terms of what we heard yesterday from Securities and Futures Commission CEO Julia Lung and Financial Secretary Paul Chan, it sounds like the government is really trying to build up the local ecosystem, but in a kind of very slow and steady fashion. And I'm curious, looking from your perspective, is that something that's going to genuinely help companies actually build up the ecosystem, or is it going to, too little, too late, too slow kind of, perspective?
Yeah, I actually was participated in a policy roundtable earlier this week, hosted by Web3 Harbor with a number of members of the government, and I thought about this idea, which was, in art, there are free ports where it's tax-free zones that have regulatory clarity. If Hong Kong had that zone, it would encourage a lot of companies, other L1s like ourselves, to feel like it's a stable place. I think the reality is the clarity between China and Hong Kong is still murky for a lot of people looking outside in. And there's a number of amazing organizations here in Hong Kong that are really thinking about this, like the Science and Technology Park or Cyberport. But more needs to be done because the government is slower moving here in the region.
You talk about the clarity between China and Hong Kong being murky. Just for our audience, unpack the impact that has for a layer one like Filecoin.
Yeah, our community is really strong, but at the same time, many cryptocurrency L1 projects like ourselves, they are also figuring out what to do in the Chinese community. There's so much great talent in China. The government has gone back and forth on what clarity looks like in China, and so for us, it's really making sure that they have amazing places in the APAC region that they can build, and also really fostering the talent and development. I think Hong Kong is really also uniquely placed because it is a financial center for APAC. So hopefully it will be like what New York is in the US for being a crypto capital for a lot of the financial innovation.
So I want to pivot a little bit and just talk about AI for a second. One of the things we've seen with AI tooling coming online more and more is it's kind of affecting retail customers trying to buy RAM or storage, for their actual personal use for computers and stuff. And I'm curious if that's something you've noticed. Is that an issue you're considering? Given Filecoin's decentralized nature.
Yeah, I missed the beginning of your question. I think can you repeat that one more time?
Yeah, just looking at the coming online of so many AI systems, we're seeing how that affects retail consumer prices for chips, for storage. So when you think of Filecoin as a decentralized storage tooling, is that a concern? Is that a factor that you're looking at for how you develop and how you continue building out the network?
Yeah, I would flip the switch on that. I don't think it's a concern. I would say it's a huge opportunity. So to give an analogy, because I think a lot of people building in the blockchain space, our community certainly are really futurists. And we came into this space because we wanted better technology for how internet systems work. And one analogy, think about the AI agent market today, is we are in the Napster era, where data and everything is free. And all these agents are grabbing data. Some might be high quality, some might be low quality, but we really think about the most important currency in the AI era as data, right? The higher quality data you can access, the better the models, and that can power everything from self-driving cars to robotics. But we're kind of moving to the Spotify data era, right? So we're going to see in a lot of companies in this space building on decentralized AI or thinking about this exact topic is what is that rail to allow agents to talk to each other, but not only supply payments, which we're already seeing, but also think about important things like data. So one example is imagine, not too far in the future, you're talking to an AI agent that helps you with flood insurance. And today's AI agent might be looking at the low quality satellite maps that are free on Google Maps, but tomorrow or very close in the future, there might be satellite data where that agent can talk to another satellite agent and say, hey, I want to pay 50 cents for that data. And without going through a middleman, without going through a lawyer, right, you can get that data instantaneously with one agent talking to another. And ERC 8004 is that blue check mark that you're used to say, this is a verifiable standard that this data actually came from a reputable source. And that's where Filecoin is headed, is really being this data marketplace where by the end of 2026, some estimates say that 80% of new content on the web will be AI generated. How do we verify that data? And how do we make sure that there is a marketplace where the agents of tomorrow, they can get the most high quality data set? And we're going to start to see really this Napster to Spotify era of more rails in these directions.
Before we let you go, just clarify that for us. You painted this picture of an agentic AI future. Just for our audience at home, make it really clear where Filecoin fits into that future and how it's going to enable what you've just described.
Yeah, so Filecoin is the world's largest decentralized storage marketplace. We just launched last fall Filecoin on-chain cloud, which basically allows you to do payments and data storage. So one agent can basically use Filecoin on-chain's cloud suite of tools to do not only payments, but also transferring of data. And the beauty of decentralized storage is you also get that privacy layer that a lot of people worry about. In a future where you might have a robot living in your bedroom, cleaning your sheets.
That
Maybe
sounds
you
freaky
don't
to
want
me.
to be blackmailed by that robot so far in the future that your data might be going to big tech, right? So that's something that we think a lot about from a human rights standpoint and privacy, ownership, everything that are so key values in the crypto ecosystem.
Clara, thanks so much for joining us. It was a pleasure having you at the desk.
Yeah, thank you for having me.
That was Clara Sao, Filecoin Foundation founding officer. We're going to take a quick break. We'll be right back.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Everyone, welcome back to CoinDesk Live from Consensus Hong Kong. Our program today is brought to you by Hex Trust. We're now joined at the desk by Grayscale's Chief Legal Officer, Craig Sum. Craig, great to see you.
Thanks, guys. Great so much for having me. Nick, we were just on stage yesterday, so it's
Long
fun
time
doing
no
this with
see.
you. Yeah.
I was just saying, I feel like a third wheel. The two of you just got off stage together.
I know.
I know. Nick hasn't briefed me on what you guys talked about. So, Craig, I'm going to kick it to you. If you were to tell our audience watching at home one or two insights that came out of your conversation with Nick earlier today, what would those be?
Yeah, so we were on the Convergence stage, and we were actually talking a lot about convergence of DeFi and TradFi. In the US, there's a lot of exciting things happening. Just speaking about the regulatory front specifically, we have gone from what was viewed as a very negative regulatory environment to a complete 180 into a very positive regulatory environment. A couple of examples that I gave are, there used to be this kind of turf war between the SEC and the CFTC over who regulates crypto. And today you have joint meetings with the chairman of the SEC, Paul Atkins, the chairman of the CFTC, Michael Seelig, talking about a memorandum of understanding, collaborating together to help identify what assets fall under a given jurisdiction and how should market participants be regulated. And so I think that kind of regulating by guidance and rulemaking rather than regulating by enforcement is exactly what the industry needed, because when you have rules of the road, market participants can know how to act accordingly and offer products that are safe for investors. And Grayscale very much considers itself a key component of all of that. Just as another example, a couple of years ago, we were fighting to get a mere Bitcoin ETF. Bitcoin, the asset that's been around the longest in the cryptocurrency space. The fact that we actually had to sue the SEC to become more regulated, I think, was really a sign of the times. And now in today's world, you have something called the generic listing standards, which is a set of rules that the SEC has agreed to amongst the national securities exchanges, where if the asset meets these qualifications, you can go launch an ETF for it. And so on the back of that, Grayscale has launched many new ETFs for XRP, Solana, Chainlink, Dogecoin. We've got plenty of others in the hopper. We also launched the first crypto index ETF, our Grayscale CoinDesk Crypto 5. So we're using the CoinDesk index there. And we think investors really deserve that choice, and so we're going to offer it to them.
So one of the things we talked a little bit about yesterday, our panel for context was titled The Regulatory Shift. So on the regulatory shift front, we've seen the SEC put out all these kind of staff statements. They have not yet really gotten into the formal rulemaking. And we're still, of course, waiting to see what Congress does, if anything, with the Clarity Act and market structure legislation at large. I'm curious, how are you looking at these rulemakings and staff statements? And are you hoping for something more concrete than the staff statements?
I think what the SEC is doing is exactly what has been desired for so many years. Just in the first couple of months with Project Crypto launching under Chair Atkins, you had guidance come out around proof of work mining, around meme coins, around stablecoins, around staking. So that's enabling firms like Grayscale to unlock the power of crypto. We were the first to stake in our Ethereum ETPs, and that's unlocking value that was being kept from investors that want to get their exposure to crypto through regulated products like what Grayscale offers. And so that kind of guidance and rulemaking is the exact kind of thing that we need. We talk about legislation with the Clarity Act, and I think that's the kind of thing that you need for the long-term potential for crypto to further be unlocked. But in the meantime, you have regulators doing exactly what they should be doing. And I'll also add it's not like there's no oversight of what's happening. There are still, enforcement actions that are being brought against the frauds, the scams that may exist in the space, whereas the good actors and market participants are able to, continue doing what they're doing and protect investors and consumers.
Nick and I were just talking about the Clarity Act obviously being held up now by this stablecoin yield debate between the banks and industry. But it sounds like what you're saying is regardless of when market structure legislation gets passed, it's not really affecting your roadmap at Grayscale. The regulators are really stepping in to fill in that gap. Is that correct?
Yeah, I think, the agencies have authority to put out rulemaking in the meantime, and they're doing exactly that. But I do think for the long-term success for crypto, we should have legislation, because we've seen while things can really change in a single year for the positive, with new helms of regulators, they could take a different view, and a lot of that could be undone. So I would be worried about that, and I do think legislation is needed for the long term.
This is going to be a purely speculative question. Do you have any guess as to what the timeline might look like for legislation right now?
I can't really speculate on the timing there. I know there's been a couple of meetings in DC with a lot of the key stakeholders in the stablecoin and banking industry, and are working on negotiations. Given that is the focus, and it's clear what needs to get worked on, whereas there's a lot of other parts of legislation around classification of assets, around DeFi, around AML and KYC, around tokenization, around the rulemaking that'll come out, around quantum. All those things, that's not the focus of these discussions, and that's a lot of the 300 pages plus of legislation. So I think it's good that it's clear what the key stakeholders are focused on, and they can negotiate and get to a good place.
On the tokenization front, one of the conversations I've been hearing over and over again at the various stages at Consensus this year has been that tokenization is one of those things where there's a lot of hype around it, similar to NFTs a couple years ago, similar to ICOs 8-9 years ago. But there seems to be also more of a kind of a sense from TradFi firms and from other companies that there is something substantial here, that this will be used as tooling and infrastructure long beyond people talking about it. And I'm curious if you have a perspective on that. Do you think ETFs and such will be tokenized to such an extent that people will be using it without realizing that that's what they're using?
Yeah, I think what tokenization is enabling all of the power of blockchain technology, which is making it accessible, decentralized, global, cost-effective, efficient, and fast, and layering that on top of other assets. So you can view Bitcoin as a tokenized version of Bitcoin. What is that? It's a kind of digital gold that is a token. Extending that kind of analogy to other assets, you're just unlocking that potential. So I think it's natural that you're seeing that kind of thing converge. And eventually you could imagine a world where all assets are tradable through cryptocurrency rails, because they all are tokenized. And what Grayscale's focus on is allowing investors to get the kind of exposures that they want, regardless of the fact that it is that wrapper, which does just make it more accessible, more tradable, more global, et cetera.
Before we let you go, I'm just going to change the conversation completely. I was on your X. I see you've been doing a deep dive into Zcash. It was one of the big winners, had a very big narrative last year. Obviously, some changes came to the Zcash ecosystem. What's so interesting to you about Zcash?
Yeah, so many folks may not know this, but back in the 2009, 2010 days, Satoshi Nakamoto himself was talking on the Bitcoin forums, saying that if a more private version of Bitcoin could exist, that it would be better. But at that time, that kind of privacy-preserving technology wasn't around, because the blockchain needed to be transparent so that miners and users could verify that there was no double spending of tokens, and verifying the consensus rules. But years later, that technology was created. The Zcash team actually has a lot of credit for that. And so a token called Zcash was created as a new kind of private version of Bitcoin. So we think that investors do see value in a more private kind of digital currency. Bitcoin is not going to go away, obviously. It is really firmly cementing itself as a kind of digital gold, and I think a lot of investors and consumers readily are able to grasp that. But there is value in being able to keep your digital currency transactions more private. For instance, if you're a business and you want to spend a lot of money with a supplier, but not have other firms like competitors be able to see that, which could reveal information, you might want to keep that private. You can't necessarily do that if you're paying with Bitcoin because the blockchain is transparent. We've all seen on Twitter that there are accounts that will monitor transactions. And so you can imagine that kind of need. And then the very interesting thing about privacy-preserving tokens like Zcash is you can selectively disclose. So you could selectively disclose to, say, the IRS that you are properly paying your taxes while keeping it private when you're conducting business or other personal transactions. So we think it's a very interesting currency. We have the Grayscale Zcash Trust, which we're actually working on converting into an ETP as we've done for several other products. We think it has a place in investors' portfolios.
Are you able to tell us about any institutional interest or questions institutions might have about privacy as it pertains to Zcash?
I think the institutions see the use case and the need for a private version of Bitcoin. As the chief legal officer, I'm obviously often thinking about the regulatory and legal considerations. And when you talk about privacy, naturally things like AML and KYC come up. But the fact that you do have that kind of selective disclosure for protocols like Zcash, I think is how you can address those kinds of questions.
Well, a lot of folks at the desk would agree that programmable privacy is one of the narratives that are going to drive us deeper into 2026. Craig, thanks so much for joining us at the desk today.
Thank you for having me.
That was Grayscale's Chief Legal Officer, Craig Sum. Nick, it has been a pleasure co-hosting with you. Next time, let's not make it so short.
I'm down.
You're a busy man. It's hard to get your time, but it was such a pleasure chatting to our guests with you. I'll see you around the conference.
Always a pleasure to be here.
All right. Nick's going to leave me. When we come back, more from Consensus Hong Kong. Don't go anywhere.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Back to CoinDesk live from Consensus Hong Kong. I'm your host, Jen Sanasi, and joining me now is Oros Hong Kong Managing Director, Lo Shi. Lo, welcome to the desk.
Hi, nice to meet you.
Nice to meet you too. Well, I've been asking everyone how they've been experiencing the conference, and so I got to start. I got to ask you the same question. What's your experience been like?
I think it's been great to see all the excitement, and contrary to what some people might think about market sentiment, I think this just goes to show that the builders keep building away, and life goes on. And in 6 or 12 months' time, you'll be hearing about a lot of the current exciting projects that are currently being worked on. That maybe we first saw here. Right?
That's exactly it. Despite market volatility, there are still, I think, 10,000 people attending the conference. I think that's the number I last saw. It's kind of crowded. Sometimes I go to walk down a hallway and I have to kind of shimmy, and so it's great to see people here talking about all the great products they're building, not getting down by market volatility. But I do want to talk to you about markets. How are you watching the markets this morning? What macro factors are you watching? And just connect the dots there so our audience at home knows how to make sense of what's going on.
Yeah, for sure. So crypto historically has often had its own narratives around what is driving the prices within the crypto sector, right? But increasingly what we've seen over the past 6 to 12 months, possibly beyond that as well, is that there's an increasing convergence between the fortunes of the crypto market to the broader global TradFi, if I can call it that, macro factors. So right now, if I were to give you an example of a few of the things that are really driving forces within the market at the moment, would be anything Trump-related, of course. So whether it was the recent nomination of Kevin Warsh, or whether it's anything tariff-related, right? Traders, both within traditional sectors of the finance world and also within crypto, are looking very keenly at all of these headlines and trying to interpret what the consequences would be. And very often, before long, the conclusion is that there's increasing correlation between the TradFi equities as well as crypto. So that's why you're seeing often these days, whenever S&P or NASDAQ go up or down, Bitcoin and much of the crypto world follows very closely, right? So I think that's an increasing theme, and within that, a lot of the narratives that are dominating those moves are also flowing through to crypto.
Let's talk about some of those consequences. You mentioned Kevin Warsh, President Trump's nominee for the next Fed chair, reported widely to be a hawkish nominee. Some people think maybe not so hawkish, not as hawkish as the media is portraying. How are you looking at this, and how are you interpreting the nominee?
Yeah. Well, that's the beauty of the markets, which is that the narrative can change day to day. And certainly the initial reaction was that, indeed, as you mentioned, he was going to be a hawk, and that was going to be seen to be very bearish for the markets. And in large part, that drove the decreases in the prices that we saw over the past couple of weeks. And now you're seeing a bit of a stabilization as traders are reevaluating their initial impressions. I've heard, and I'm sure you've heard as well, that there are now questions around, okay, maybe he's actually not as hawkish as some might have initially thought, right? And over time, that news fades a little bit into the background, and in the meantime, other headlines pop up. So, other examples we had recently were the JGBs and the USD yen FX rates, right, and what's happening there. And last night, for example, we had the non-farm payrolls. These are all updated data points that we're trying to connect on a daily basis to figure out which way the market's heading, to determine the macro outlook.
Mm-hmm. Well, tell me about that. Which way is the market heading? Some people have joined me at the desk and said actually they think we're coming up to the end of a bear market when folks previously thought maybe we weren't in a bear market. They say when you look at the price of Bitcoin versus the rest of the crypto ecosystem, there's a big divergence. Talk to me about how you read that and where we're heading as we head deeper into 2026.
Yeah. In terms of the direction, obviously, I don't have a crystal ball. However, what I can say is that the regime that we've been experiencing over the past 2 or 3 months has been very choppy and in some sense lacking direction, right? I think the clearest thing that I can say is that the market lacks a clear direction at the moment. The very next headline that comes along could jolt the market upwards or downwards. So the only thing that is somewhat elevated at the moment is the volatility, right? So it's actually been a fairly difficult period to trade because there's just no stability in the market, right? Any little thing could set the market off, whether it be an AI headline or whether it be a Trump tariff headline or whether it be a Japanese macro headline, right? Historically, these periods come and go. So in that sense, I am optimistic for the next 3 to 6 months in that sooner or later we're going to enter a period of relative stability and the market will gain a clearer direction. I'm hoping it's up, but obviously we're not putting all our eggs in that basket either.
Does the fact that we're in a midterm election year in the US impact that statement you've just made?
Yeah. Certainly. The conventional wisdom there would be that due to the midterms, Trump is incentivized to achieve certain outcomes with the economy to hopefully improve his showing at the elections, right? Now, depending on the exact form of those outcomes or the methods he'll aim to use to achieve them, arguably it could result in higher markets. cutting rates. Those are the common themes that we're seeing, right? So given what I've just said about the correlations between crypto and TradFi, I think if that turns out to be the case, then there is reasonable expectation that crypto markets will get pulled up alongside S&P and NASDAQ.
Do you expect crypto markets to remain correlated with TradFi, or do you expect to see a decoupling on the back of a catalyst?
Yeah, that's a great question. I think historically, crypto has definitely had many crypto-specific catalysts, right? So if you think back over several years, we've had the ICO boom and the Web3 catalyst. Then we had DeFi and NFTs, and more recently, there's been a bit of an AI theme as well, right? In terms of what the future catalysts might be, that's obviously harder to predict, but I think what is reasonable to expect is that there will be a catalyst as well that will take crypto in a separate direction to global macro, right? In the short term, however, it's not clear what that catalyst would be. So in the meantime, we're just following S&P.
It was a pleasure having you at the desk. Thanks so much for joining me.
Yeah, thank you very much.
That was Lushi, Managing Director, Hong Kong from Oros. We are going to take a quick break. When we come back, more from Consensus Hong Kong.
Consensus Hong Kong!
If you're just tuning in now, we are live from Consensus Hong Kong. My next guests are at the desk with me. They are the co-founders and general partners for TBV and The Best Event, Tobias Bauer and Brent Fulmer. Hello.
Good morning. Thank you so much for having us.
Good morning. Good morning.
Of course. Good morning. Okay, talk to me about this Leia Foundation. Our audience watching at home is wondering, what is The Best Event? We thought it was Consensus.
Consensus definitely is the best event, but we are hosting the best after party for Consensus. So basically, we partner with Consensus and CoinDesk for tonight, and we bring together big production for a lot of people. But the main thing for us is not necessarily the event itself, but what we're trying to bring to side events is what we call a deal hub. We're trying to figure out how can we meet as many people with one consolidated event. And then we run a venture fund, and we have obviously some different partners that we're going to do this with. And the idea is, okay, how can we benefit from that data? How can we find out all the good projects that come to Consensus, which there are a lot, and how can we reach out to them on a scale that matters for a venture fund?
Talk to me about some of the conversations you've been having around Consensus.
There is one too many at this point. I think we've had, I don't know how many meetings this entire week, but that's why we love coming here, is because we have people from the US, Europe, the Middle East, every country of Asia that comes here. And in this industry, you cannot succeed in one region or country. And that's why these conferences are so important. And we've had a lot of really good meetings with partners across the globe and what's next to come this year.
Connect the dots for our audience at home, right? Because this industry has so many events, and those events have so many side events. They get kind of overwhelming, right? And I hear from a lot of people walking around, it's like you kind of meet up with the same people over and over again. You meet up with your friends. Yeah. Of course, you have great discussions. Of course, you have your meetings that are able to drive your business forward. But just connect the dots for me. How does what you are building amplify that and bring events in the crypto space to the next level?
I think the main thing for us is we always try to partner with the conferences directly. Because if we do such a big production, it shouldn't be alone standing. Because at the end of the day, what we want is that ticket holders, that people that come to the conference in itself should have additional benefits, right? It's not just I'm buying a booth or like I'm buying a pass. It's like we want to create an ecosystem around it. And obviously for us, it's beneficial because we're able to do this together with CoinDesk, have a big reach, doing this with Consensus, give partners that come to the event additional benefits like better passes, more interesting packages, and of course we provide additional layer of networking. And like I think the problem for a lot of conferences is that people are saying at this point, there's so many side events, why do I go to the main conference? Right? And I think what we want to try to bring people back to the main conference and don't even give this thought the possibility to exist.
Now, I know that you're going to be with us in Miami as well. Talk to us a little bit about what's going to be happening there.
Miami is just in a few months in early May, and it is going to be, again, the best event during Consensus Miami as the official after event, bringing together a lot of big partners, the layer ones, the exchanges, the VCs, the founders, and that is going to be, I don't know if we can drop it yet, Toby, but there's going to be a special announcement for that. But it's
you can't tell us who?
It's going to be one of those historic venues that anyone that's ever been to Miami knows, and like we do always, and that's like our thing around events of having one room, bringing partners from all around the world at every different vertical in the industry under one roof, partnering with Consensus as well. So when people come to Consensus and when they come to the best event, they at the end of the day can have a good time, but also get deals done.
Well, and it's not only about bringing the best folks who are at the conference and the best companies who are at the conference together. I see that it's also about bringing artists to the room, bringing entertainment to the table. Tell us about that.
Absolutely, yeah. So we believe networking happens in two different stages. Number one, people are here at the conference, they're having great conversations, but sometimes maybe it's a bit rushed. And then when people go and have an entertainment experience, music is, for example, one thing that brings people together. I don't know if you go to conferences, festivals, all these different things, you typically make the best friends there. You have one great night and you stick together for a long time, and that's what typically happens. A lot of people do business after, create partnerships, invest in each other, like find the next co-founder, and that's what we try to facilitate in a very relaxed setup. That when people already had 2-3 days of craziness, that they can come together and connect.
It sounds like it almost addresses like networking fatigue.
Yeah. No, it is, and especially when there's so many side events. And that's why we actually partnered with the Untold Music Festival. It's the third biggest music festival in the world, and they're our entertainment partners. So for tonight, we have Tudramo as the headliner, who headlines the Tomorrowland main stage as well. And at Consensus, we can't say the name yet, but be another big artist that will raise a lot of awareness for our industry as well.
Can you give me a clue?
You have heard him many times on Spotify. I think that's about
And we now know it's a him, so maybe some folks out there can make some good guesses. Before I let you go, I know TBV is raising a $30 million venture fund. The first close already happened with 28 investments in the last 12 months. Talk to us a little bit about that.
Absolutely. So TBV, we try to invest in seed stage projects. We focus on companies that have found a little bit of product market fit, got some traction, but are kind of looking to scale. And we invest typically between $250K to $500K USD. And we've been doing this since 2017 across different venture funds. So in total, we've probably led deals around 250 companies now at this point. And a lot of these companies we're trying to find also at these type of events, especially also at Consensus. There's a lot of great builders, a lot of great founders here that we hopefully run into either tonight or here at the main conference.
What do you look for in a founder?
I mean, that could be a long list, but I think there's two kind of main things. One, their prior experience. Like someone that maybe worked at a job that made a lot of money, but then quit that to start something brand new. A multi-time founder of like Chorus, but really it's someone that has the resilience, which is in some ways hard to measure. But the main thing is how founders talk about their companies. Is this a long-term project, or is this a, hey, I'm raising money to launch a token and then I'm out? And when you've seen as many deals as Toby and I have been in the industry for many years, you can usually tell that on the first call. And so that's something that we weed out founders very quickly on a first call. And that's why we do events, because we know a lot of people through our event company that benefits our fund. And so we can reference check people and like, wait a minute, have you met this guy before? Oh yeah, I knew him 3 years ago and he launched this scam project. So for us, having the events, the network that also does background checks on founders in that perspective weeds it down. That's how we narrow down from 40,000 attendees to our events down to the few that make investments from our fund.
So the network is also for background checks?
Definitely.
and a good time. But yes, both. Yeah.
Okay, and the last thing I'm going to ask, we have to go. Toby, what's the biggest mistake you see founders making? If you were to give advice to people who are trying to get some money for the company.
The biggest mistakes is being too tech heavy. Like at the end of the day, if you're pitching to customers, you're pitching to VC funds, we're not typically deep as experts. I don't work 24/7 in the same field as you, but I want to understand how it scales and why people should buy it and why are you solving this problem that's important people to solve.
Toby Brent, thanks so much for joining me at
the
desk, and I look forward to experiencing the best event.
It'll be a good time. Thank you for having us.
Of course, thanks for being here. All right, that was TBV and the Best Event co-founders and general partners Tobias Bauer and Brent Fulfer. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Welcome back to CoinDesk Live from Consensus Hong Kong. I'm your host, Jen Sanasi, and I'm joined now by two legends, CoinDesk Indices and Data President Dave Laval and Bullish Exchange President Chris Tyrer. Dave, welcome back to the desk.
It's great to be here.
Chris, welcome.
Thank you.
All right, Chris, your first time at the desk, at least since I've been sitting here. How's your Consensus experience been?
You know, it's great. This just gets bigger and bigger every year. I think it's probably the most institutional of the major conferences. It's been a packed few days. I'm not going to lie. I'm looking forward to flying out tonight, but it's been a phenomenal few days.
So, Chris, we had Tom on a little bit earlier. We were talking about the institutional growth of our business. He was talking about the convergence of TradFi with crypto. In the past 6 months, what has transpired with the business that you run, which is the Bullish Exchange, has been absolutely astronomical. Walk through some of the milestones that we've had.
Yeah, we've had a busy 6-month period. So it started with us going public in August. So we listed on the New York Stock Exchange, which was a phenomenal moment. We got our MiCA transition. So that's the conversion of our BaFin VASP license into a MiCA license. That gives us access to the whole of the EU 27 countries. So going from Germany to the whole of the EU, so that was a big milestone moment. In October, we got our BIT license, so that was our beachhead for the US. Now we're able to operate in the US market. We're live and operational today, have been since that day. We launched options. We launched options on the 29th of October. We very quickly have become the second largest crypto options exchange.
It's incredible.
So we've overtaken OKX, Binance, Bybit, and the CME all within a 3.5 month period.
It's incredible.
So it's been a busy 6 month period, but we still have a lot to do. You know, we're very ambitious. You know, number 2 is great, but we want to be number 1 at everything that we do. So
that's
more to come.
Incredible. Correlation or causation that I joined and all this stuff happened?
Well, that's true. You know, Dave Laval joined 6 months ago, and then everything just started going swimmingly. So, we'll let the audience cast judgment on that one.
Dave and I were talking about all the innovation that's happening here in Hong Kong earlier this morning. Michael was telling us about the institutional experimentation that happens here. Bullish, of course, has a presence in Hong Kong.
Very big presence.
Yes.
It's our largest office.
Bullish is the parent company to CoinDesk. Talk to us about the significance of Hong Kong when it comes to institutional adoption.
Yeah, look, I think Hong Kong's always been an important market for us. Hong Kong was where Bullish was born. It's our single largest office. We see a lot of institutional developments here. The SFC is a very forward-looking regulator. They just announced Monday, Tuesday, The days have been kind of blurring.
They all kind of
This week, they
together at
announced this week.
Consensus.
Yeah.
This week, they
Together
announced
at
this week.
Consensus.
Yeah.
They put out a few circulars, one of which was saying that they are now going to allow perps to be traded out of Hong Kong. They're also allowing margin trading, and interestingly, going to permit the use of equities as collateral for derivatives trading. So, we have a great relationship with the HKSFC. We've been, regulated here, for over a year now. But they're really kind of pushing things forward in terms of institutional adoption.
So let's go to, what we see on the forward. I think the most exciting thing that we have happening at Bullish is obviously, you said a beachhead with that bit license in the US market, but also the options growth has been pretty incredible. So talk to us about how we're engaging with the clients that we have relationships with now, but the clients that we now can have relationships with in the US market, and what's most exciting to you on the go forward?
Yeah, I think you hit the nail on the head with those two things as being the strategic focuses for us as a business. We already had a lot of the largest market makers, prop shops, quant funds, OTC desks already trading on Bullish for in our spot markets. A lot of those players also have option desks. So it was a super easy transition to get them trading our options markets as well. That's really enabled us to take off as quickly as we have, because a lot of those clients were already existing clients of Bullish. I think for now, for us, it's continuing to execute on those two main themes, continuing to build out our US business. We have seen phenomenal traction there. I think the US was really, look, let's face it, only one company a crypto company was allowed to go public.
Right.
And I think that created an unlevel playing field. That playing field is now being leveled.
Right.
And so I think it's interesting to have a more competitive dynamic in the US market. And so we've onboarded one of the just started trading 2 weeks ago, one of the US's largest retail brokers. I think it's great seeing how our pitch, our global liquidity, our single global order book is really resonating in the US market. Our pitch is, we provide access to crypto's largest assets at very low cost, and that's something that's really helping us develop the business out there. The one other thing that you didn't mention, I would say, is tokenization.
Right.
It's really interesting what we're seeing right now. We're obviously in the bit of a sort of crypto bear market. And I don't think I've ever seen the narrative and the price action diverge so much.
Right.
If you look at the non-stable coin average daily volume of non-stablecoin RWA average daily volume.
Right.
You look like 2 years ago, we were trading like $9 million. Last year, we traded $32 million. This is in Jan 25. Jan 26, we traded $1.2 billion. All the banks and brokerages that we speak to, there's an increasing acceptance that everything's going to end up on chain.
Right.
It's just a matter of time. And so it's really interesting that we're seeing this acceptance of blockchain as an infrastructure layer, just as we're seeing crypto's largest assets, in a bit of a price market pullback.
Yeah.
So,
well, Jen, I think it's a constant theme that we've seen, which is everyone just keeping their head down, not looking at price, and just building for growth.
Yep, that's been driving narrative here at the desk.
Yeah.
I remember when the markets would be down and everyone at a crypto conference would be depressed. They wouldn't be on the showroom floor.
Right.
These people are not depressed. We have a full crowd watching this interview happen right now. The booths look packed. And so I think it really indicates the maturity of this industry.
I think that's such a great point. In previous bear market cycles, the mood at conferences was really low. I haven't felt this at all this time around. Everybody's very positive about the space. I think people are looking beyond the price action now, which, as you say, is a great sign for the industry that we're moving beyond this kind of like short-termism with regard to price.
Exit velocity, Jen.
That's it. Chris, thanks so much for joining us at the desk. It was a pleasure hearing from you. We'll let you get back to conferencing. Thank you.
Thanks for having me.
Thanks, Chris.
All right, we're going to take a quick break. When we come back, more from Consensus Hong Kong.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Welcome back to CoinDesk Live from Consensus Hong Kong. Nick Van Eck joins us at the desk now. Nick is the CEO and co-founder of Agora, next generation stablecoin and infrastructure platform. Hey.
Thank you for having me.
Yeah, of course. Thanks for being here. Now, you were on a panel.
Yes.
It was called Who Will Custody the Next Trillion Stablecoins?
Yes.
For our audience watching at home, what did you walk away from that panel? Talk to us about maybe one or two insights.
Yeah, I think traditionally, all the custodians in the space have been niche digital asset custodians, right? Anchorage, BitGo, or like this is the core of their business. I think one of the takeaways from the panel was that you're going to see this year traditional financial custodians like a Boney or a State Street really start to come into the space. And with that, that'll drive more institutional adoption, not just of stablecoins, but other tokenized assets, and bring prices down. The second piece is you're also going to see a lot of different businesses leverage these custodians' offerings to offer nichier services. So, at Agora, something that we're planning to do later this year is have traditional businesses that may want to be more payment-oriented or banking-oriented in their flows, custody, through Agora, right? Where we're using a custodian under the hood. And I think you're going to start to see those use cases take off, right? Because a lot of the nichier digital asset custodians are focused really on financialization and trading and those sorts of things, but a lot of businesses just want simple custody so that it's an experience that they're familiar with, like when they go to their bank today.
That's great. So there's been a preponderance of conversation around tokenization and the next wave of tokenization, and sometimes I kind of laugh about it because I'm like, tokenization has already been proven to work with stablecoins. So maybe talk a little bit about how you think at Agora, you're going to be able to take advantage of this wave of tokenization, but also deliver a solution to your clients that are actually looking for something that they don't have access to right now.
Yeah, so I heard Chris actually talking about this, just before I hopped on, right, and how much RWAs and tokenized trading has exploded. I think the way that we're planning to integrate those types of offerings into our suite of products or work with other providers is bringing, let's say, medium or longer duration fixed income product, on chain, so that if you are a business and you have $500,000, $1 million, $10 million bucks in cash, and you want to earn a return on that, you can basically create that product with a stablecoin like AUSD. And so we have a number of partners that are already using AUSD for the mint and redemption of these tokenized products, and we're going to have plenty more launched, even just next week, that are bringing materially new yield products to market that are interesting and not really related to crypto beta, right? Like a USDE or Ethena. And so I think that's going to help bring a lot more companies on chain.
So, honest question.
Yeah.
Are you agnostic to what is brought on chain that particular company would want to actually, utilize in their treasury, or do you have an opinion?
So for us, I think within our own web app, we'll be selective.
Right.
Right. And curate an experience for our business customers. I would say beyond that, right, we work with plenty of different providers that are offering products on, Morpho or, Aave or other sort of lending-based infrastructure, different vault providers. And there, we obviously only want to work with high-integrity teams that we trust. But they're going to launch a product, and it's up to them whether to be successful, right?
Yeah. So next question, and kind of pivoting a little bit, as you think about kind of growing the suite of customers that you have.
Yeah.
And I'm not asking for particular names, but kind of personas of your customer segments that you're really looking to target. Like, who's at the top of the list that you think is kind of at the forefront and ready to make that decision to maybe incorporate this into their treasury practice?
Yeah. So Fortune 500 companies. Right? One of our goals at Agora has always been to bring sort of the rest of the world on chain in a way that they're familiar with, right? And just offer them products that are 100 times better because you have instant settlement, and programmatic liquidity brought by building products on chain. And so we are working with treasury teams at Fortune 100 companies right now, and they're exploring a few different use cases. One is international payroll, right? So if I have money in the United States, I'm sending $15 million a month to my Philippine entity. That takes a few days to settle.
Right.
Can that now happen instantly? I earn yield on it. Treasury management. So if I'm now moving money that can settle instantly, I no longer have to pre-fund as many accounts.
Right.
I can now stick that in longer dated securities, right, where I'm earning 6%, 7%, and then also B2B vendor payments. And so that's where we're spending a lot of time. And I talk about this a lot. Our North Star is Pepsi. Right? Today, just think about them. They have dozens of bank accounts, dozens of entities globally. They could just have a bunch of instances of Agora, where their Brazilian entity sends it to their UK entity in a second, and they're earning yield on that, right? And that's much better than the status quo today, where maybe they're banking at Itaú, right, in Brazil, and Barclays in the UK. It takes 5 days for the money to land. You're not earning any interest.
You're just making it totally fungible for them to kind of be more efficient and kind of grease the operations of their treasury
and for it to just feel just like Web 2.
Yeah.
Right? Like we want to abstract away the cryptoness of the experience and just deliver the solution that they want.
Okay.
An example that I use is like Venmo, right? You have no idea what happens. The reason you like Venmo is I can send money to my friends or whoever, and it happens instantly, for no cost, right?
Yeah.
And like that's what the experience we want to deliver.
Super exciting real-world application of crypto.
Yep. Nick, thanks so much for joining us at the desk. It was a pleasure having you here.
Yeah, thank you for having me.
Awesome.
Take care, Nick.
That was Agora CEO and co-founder Nick Van Eck. All right, let's take a look at what's trending in the news today. A tiny move in Asian portfolios could mean a massive payday for the crypto markets. Nicholas Peach, BlackRock's head of APAC iShares, told the Consensus Hong Kong conference yesterday that just a 1% crypto allocation across Asia could unlock nearly $2 trillion in new capital. Peach highlighted that massive pools of traditional finance are ready to move as ETF adoption accelerates. BlackRock is already seeing this firsthand. Their US Bitcoin ETF has surged to $53 billion in assets, fueled by intense demand from Asian investors. Next up, Hong Kong is doubling down on its digital asset ambitions, but it feels the competition from the UAE. At the Consensus Hong Kong conference, industry experts warned that the city is facing aggressive competition from the United Arab Emirates. While Hong Kong remains a global hub, speakers noted that Dubai and Abu Dhabi have gained an edge by establishing dedicated single-agency regulatory frameworks for virtual assets. A member of the China National Committee suggested that Hong Kong should look to the UAE and South Korea as blueprints for more streamlined crypto oversight. However, Hong Kong leadership isn't backing down. The Undersecretary for the Treasury defended the city's position, arguing that Hong Kong's greatest strength is its stability. He told the crowd that the enduring attraction for investors here is simple: no surprises from regulators. And lastly, for many in Gen Z, the traditional American dream has been replaced by a new high-stakes philosophy: financial nihilism. At Consensus, Coin Fund managing partner David Pacman argued that the massive surge in crypto derivatives is a rational response to a broken economic system. Pacman pointed to a staggering divide in housing affordability. While boomers typically bought homes at roughly 4 times their annual salary, Gen Z is facing prices closer to 8 times their income. With traditional home ownership feeling unattainable, younger investors are ditching savings accounts for high-leverage perpetual contracts and meme coins. This shift has fueled a massive $100 trillion boom in crypto derivatives volume over the last year. Pacman's takeaway is a wake-up call for Wall Street. Gen Z isn't being reckless. They're simply playing a different game. In a world where they feel they can't, quote, get rich slow, they are choosing to take a small chance at a large return rather than accepting the certainty of a slow decline. For more headlines coming out of Consensus today, head on over to CoinDesk.com. All right, we got to welcome in our next 2 guests who were taking some selfies, I think, while we were looking at the news headlines. So we're having so much fun here at the desk with Dave.
The camera was off. We were taking some selfies.
I love to see it.
Nix and I were at dinner together the other night. So
Nix Noleto and Wei Zhu join us now. They bring insights from the Philippines to the desk here in Hong Kong. Welcome, guys.
Hey, thanks for having us. Yeah.
Good to be here.
Thanks for being here. You guys were at dinner last night, so I'm going to let you kick this off.
This is crazy. No. Honestly, I was like waiting for the opportunity to bump into Nix. I bumped into him at breakfast the following morning. The wheels were still spinning from our conversation, but he was talking about the Philippines and this opportunity to really have a real world, again, application of crypto in a market that really needs that opportunity to have a more peer-to-peer and a less how shall I say, kind of like sand in the gears in their ability to kind of manage their own lives. And I was fascinated by it, but I didn't really appreciate exactly how impactful that was when you were telling me the story. Maybe it was a jet lag, but over the next 36 hours, I really appreciated it. Tell us what you're doing. It's so fascinating.
So I've been around in the tech space, operating in emerging markets for several years. And I think when you apply technology from the lens of an emerging market user, the use cases are very different. Learning how to service a market that's largely unbanked, whose purchasing power isn't quite as high, where logistics is a problem, allows you to create innovative solutions that the regular, first world market entrepreneur doesn't tend to encounter. So crypto is no different. Again, it's a capability that you try to apply to different use cases to solve problems.
I want to hear more about that user in the Philippines. So Wei, I'll kick it over to you to introduce our audience to that. Talk to us about the user in the Philippines. I know many of us, when we think about the Philippines, we think back to a few years ago when play to earn really took off there. But I know that crypto has really evolved. So talk to us about how folks in the Philippines are using crypto to better their lives and solve some of those real world problems that we've been talking about.
I think one thing that crypto has shown is that when you have a really good investment product, people will want to come into that, right? And then one of the key things that I've been reiterating in terms of Philippines, and I think just emerging markets as a whole, is we sort of moved beyond the financial inclusion phase, and we're now moving into the financial empowerment phase. And then, and if you look at sort of like someone in the Philippines per se, there's a lack of investment products that we can invest in, right? There's no U.S. stocks. There's no, other than sort of like the Philippine Stock Exchange, we can't invest in Hong Kong stocks.
Right.
Even there's no commodities exchange. It's really hard for us to actually invest in metals, right? And the reason why like crypto and Bitcoin and crypto gaming was so popular is that, there's something that we don't need a barrier. Like we can actually just go and get it ourselves, right? We don't need like a regulator saying yes or no, right? But I think we're at a phase now where I think there's actually a general demand now from sort of the investors that, hey, I have money now. I want to invest in something, right? And I want more choices. And that's true in the Philippines, and I think it's true in most of the emerging markets. So that's why I think it's like the next phase of crypto growth is actually tokenized products. I think that's why we're seeing a lot of people talking about RWAs. It's less relevant, I think, in like a Hong Kong per se, because you can invest in anything you want in Hong Kong already, like real estate, gold, anything, right? Whereas like in the Philippines, we don't have that many choices. Like if we can bring that on chain, right? I can distribute those products through my platform the same way that I sell Bitcoin and Ethereum and Solana and Axie and NFTs. So it's just like that's what we're really excited about the next phase, right? And I think a lot of that has to do with sort of like, again, goes back to the theme of crypto. It's a bottom-up driven thing rather than a sort of a top-down driven thing.
Yeah, I mean the analogy that comes to mind is emerging markets really never put landlines in. They went right to the cell phone. And so if you don't have appropriate banking rails, you're not going to need appropriate banking rails. You're going to go right to utilizing, tokenized exposures. Maybe if I could ask a question, this bottoms-up approach, I'm actually unfamiliar with the regulatory infrastructure in the Philippines. How impactful is that going to be? Is it going to be supportive of this, evolution and this innovation, or is it something that's going to just develop alongside of it?
Yeah, I mean, I think for us, we've been regulated by the central bank as a VASP, which is a virtual asset service provider. That's sort of the word that's more prevalent in Hong Kong's VATP, right? And we've been regulated since like 2016, 2017. So I think from running a cryptocurrency exchange perspective, I think we've had both certainty and we've actually had pretty good clarity in terms of what's allowed and not allowed, right? But once we move into the realm of securities, then you're actually moving from the central bank as a regulator to a securities regulator in the SEC, right? Philippines sort of tracks US in terms of like, there's the SEC. It's even called an SEC, right? It's not called so I think the SEC there has come out with what they call a crypto asset service provider, a CASP regime, right?
Okay.
That we're going to try to come under. So that way, everything that is securities related will come under that. And I think as a whole, there's been progress, albeit slower than I would like, slower than we investors would like. But I think it's gonna come, right? Just because, like, how do you trap the country's money, like, which is kind of feels the way. And what I tell people is just sort of like, people are gonna move their money out of your ecosystem if you don't give them more choices. Right. And like, and I think that's happening as is, right? So you, by offering more choices and then providing, decent coverage from a regulatory perspective, at least that money will stay in country. And then we can actually use that to grow wealth. Right. Because at the end of the day, it's all about wealth. You want to, save and invest to grow your wealth, right? And I think that should be that freedom or that ability should not be blocked by where you physically live.
Right. First of all, bravo to the Philippines regulator by going with SEC, because the alphabet soup of global regulators is hard to keep track of.
Very hard to keep up with.
Bravo. Okay, we have about a minute or two left. What I would ask is, what is going to have to be unlocked for that next wave of growth or adoption? Nick, we were at dinner and you had all these wonderful kind of visionary tales. I'm very curious to hear your thoughts.
So one perspective is using blockchain and crypto to service the retail market, but the other perspective is servicing the business market. So if you look at the Philippine Stock Exchange, 283 listed companies, the total daily trading volume is about $100 million for all 283. Incredible. Quite tiny. But you have very good quality companies. Average PE ratio of the index is about 8. If you could tokenize those equities of these good quality companies and bring them to markets where there's a lot more liquidity, the access to capital and liquidity for Philippine businesses is another sort of vantage point that you can look at the opportunity for high quality emerging market businesses and assets that hasn't been fully leveraged. Right?
I love hearing about how this industry is empowering people who have been largely left out by traditional financial systems. I think that is something we used to talk a lot about. And
use cases.
Real world use cases. And it's kind of gotten lost in the institutional discussion. So thank you both for joining us and having this conversation.
Thank you, guys.
Thanks so much
for having us.
Okay.
That was Nick Snoletto from Eden International and Wei Zhao from Coins.ph. Let's take a quick break and we'll be right back.
Full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
If you're just joining us now, we're continuing our live coverage from Consensus Hong Kong. Joining us at the desk is Kraken's VP of X Stocks and Global Head of Consumer, Mark Greenberg. Hey, Mark.
Hey, thanks so much for having me.
Thanks for being here. How's your consensus going?
Oh, man, there's so much energy on the floor here. It's been really, really exciting so far.
Take us inside some of the conversations you've been having. You're based in Canada. You were telling us just before we started this interview why it's important for you to be here in Hong Kong, and what kind of conversations are you having about the region?
Yeah, so I'm really focused on our X Stocks product, which is tokenized equities. And we're just trying to find more ways to sell what is an amazing product out to get it into more hands. And so we just hit this morning $20 billion of volume. So pretty exciting start for us. We're talking about adding potentially Hong Kong stocks and other stocks into the mix sometime soon. And maybe the best story of the day is I ran into somebody I hadn't seen in a while. He was like, wait, you're working on X Stocks? It's already in my app. And he didn't even know we were working on it. And so that's the coolest part about X Stocks. It's the kind of infrastructure that we're building for an industry, and we don't even have to be involved if you want to build it in.
Those are the types of interactions you have at Consensus.
That's exactly right. That's why you got to be here on the floor in person.
Absolutely.
So I have a question. I have a bunch of questions about this. I mean,
sure.
The talk of the town has been tokenization, and I think everyone has kind of a different flavor of that. But in the context of X stocks and the thesis of the business, where is the demand coming from, and where do you want the demand to come from? And are they the same?
Yeah, to be honest, we're hoping the demand will come from many different places. So we're lucky to have more than 100 XStocks partners right now, including many of Kraken's competitors. The idea is to be able to buy XStocks you can already buy them in Telegram. You can already buy them on Bybit. You can buy them in lots of different places. Each of those use cases is going to be different. And that's same with Bitcoin, same with crypto, right? The idea is that it's not one use case for one type of user. We see institutional demand. We see lots of I want to buy $5 of Tesla, or I want to buy $5 of the S&P 500. Both of those things are going to be key parts of our demand going forward.
I want to hear how you're thinking about this. I've been hearing folks talk about retail. Retail's largely been on the sidelines during this last cycle. And now we're hearing about retail in different parts in the Asia region kind of stepping away from crypto and looking at tokenized U.S. equities instead. Curious to hear your thoughts on that. Just curious to hear how you're thinking about that.
Yeah, I think, look, everybody's going to have a different asset class that they're excited about, and all are important. I think if you're making a great portfolio, you're probably going to have some equities in it. You're probably going to have some crypto in it. That's my 2 cents on the subject. At the same time, why is crypto trading so much easier for folks than equities trading? And that's something that we've been really focused on trying to beat. You can't trade equities 24/7 without X stocks. You can't use them in a self-custodial wallet. You can't buy $5 or $10 easily. You can't use it as money with a card. We have that on the Crack app now here at Kraken. All sorts of things that you used to be able to solely do with crypto, you can now, or stablecoins, you can now do with equities as well. And I think that just means that certain types of use cases, which were crypto only, are now also tokenized equities based.
So if you went in the past and had a conversation with Dave Laval and it talked about tokenization 12 months ago, 18 months ago, you might get this I don't know, is tokenization a solution looking for a problem? I absolutely no longer believe that at all. There's absolute real world cases. Yeah. Stablecoins are a perfect example of tokenization actually working. The thing that I still struggle with, and this is a little bit of maybe the market microstructure geek in me, is that you have fragmentation, and fragmentation leads to fragmentation of liquidity. And if you have fragmentation of liquidity, maybe the execution quality isn't the same that it would be if you were accessing kind of the traditional kind of natural market. How do you guys think about that stuff? Is it a real concern? Are you saying, Dave, it's overblown?
Liquidity is definitely a challenge when you come to tokenized real-world assets. I think that's why stablecoins are obviously the best and first use case. Money is the most ubiquitous, the most liquid asset out there. Frankly, equities are probably the second. As you start to go to other types of asset classes, it gets even harder, and that's why we're really focused on getting equities right first. I hear you on the fact that there are competing options out there at the moment. Part of what we're trying to build with XStocks is infrastructure that can be used by anyone. And so working very hard to bring as many of our Kraken competitors into the ecosystem, sharing the value with the ecosystem, and trying to build something that can be ubiquitous and can be used across. At the same time, I think we've learned a lot on how to make liquidity work even in more fragmented markets. So I'm not quite, you can get a great price on Tesla X right now in a number of different places. So I'm not quite as worried about the short-term implications, but I do hope over time that we'll gravitate towards great products like XStocks that are permissionless and available, highly regulated, and work not just for Kraken, but hopefully work for all of our competitors across the ecosystem.
I mean, the market theory would tell you that any sort of arbitrage opportunity is going to be meted out. So it's just a matter of time. It's not a concern of mine. I was just curious your perspective. You're living it every day. I think, Jen, it would be a little strange if we had Mark on and talking about tokenization and XStocks and not really bring up the reality of some of the regulatory infrastructure and some of the regulatory, how shall I say, a little bit of uncertainty right now. By the way, in the US market, we've made massive strides. We don't have everything yet. Yeah. So I guess my question to you is, what are you looking for that can act as that catapult of growth coming out of either regulation and or legislation in the US market?
So tokenized equities are really digital asset securities anyways. And so in a lot of ways, they're already prospectus in Europe. They already have a pretty robust regulatory regime in the European market. We look forward I think one of the things that's been most exciting to me is since we've launched, we've had very robust conversations with regulators around the world about how to bring these digital asset securities into their individual schemes. In the US, in the UK, here in Hong Kong, in Canada, in Australia, all of those conversations are progressing well. Most of them don't require very much change to existing rules to be able to offer them. It's mostly around thinking about them a little bit differently. They're custodied differently, they're managed differently, liquidity is handled differently. And so mostly at this point, we're just working through the details with regulators. I don't think there's a wholesale change necessary for most regimes. It's more just a matter of working through the existing rules and making the small tweaks necessary to make it work.
You started the conversation by saying you're here trying to get X stocks in as many hands as possible. Talk to us about the challenges that exist. It doesn't sound like the challenges are on the regulatory side. Is it more in the education and awareness side of things? Why can't you get X stocks in as many hands as fast as you would like to right now?
We want it to be in every app in the world. And so it's just a lot of conversations helping people understand the space. The reality is...
Aim high, Mark. Aim high, right?
Exactly. Look, so you can already buy them in apps like Telegram. You can already buy them in our competitors. I think we will, the more we educate folks, it's very easy to put into an app. You don't have to go through all the same behind the scenes brokerage, details of working through KYC. Very easy to get into apps. So it's more just a matter of making sure we talk about the brand and get it in front of as many people as we can.
Before I let you go, you talk about how easy it is. You talk about buying it in Telegram. For people who are listening at home, what does that user experience look like? Very quickly talk us through how easy it is.
Yeah, go on Telegram, click button, buy Tesla X. Buy Tesla X. It's really that simple.
That sounds easy.
Sounds pretty easy.
It sounds easy.
A lot easier than trying to buy Tesla if you're using a regular brokerage. So.
All right, Dave and I will have to try it out. We'll report back on how easy it is. Mark, thanks so much for joining us. It was a pleasure having you at the desk.
Thanks so much for having me.
All right, that was Mark Greenberg, VP of X Stocks and Global Head of Consumer at Kraken. All right, Dave, it's been a pleasure co-hosting with you.
I think our time has come to an end.
Our time has come to an end, but there will be more times, and there will be more times at Miami.
Sounds great.
Yeah. All right. Well, we're going to take a quick break. When we come back, Crypto in America will be taking over the desk to do a live show from Consensus Hong Kong.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience that percenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience that percenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience that percenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Today's guest is Joseph Shalom, Co-Chief Executive Officer of Ethereum treasury platform SharpLink. Joseph joined the company in July from BlackRock, where he led the asset manager's digital asset strategy, including the launch of its Ethereum Spot ETF. Joseph, welcome to Crypto in America.
Thank you for having me.
Thank you for joining. First, we always like to ask our guests this first question. What does crypto in America mean to you?
I think ultimately it's going to mean competitive advantage. We are going to be seeing a world where most of financial services is going to get disrupted in a way that we have not seen since the equity markets were electronified in the 70s and 80s. I think the US is playing a leadership role. Under the new administration, you have clarity, even though you don't have the Clarity Act. Mm-hmm. And I've been traveling through Asia for the last 2 weeks, and I think most governments that we've met with realize that either they move forward or they fall behind. But to me, it's less around crypto. I think it's about changing how finance works across America.
Mm-hmm. Love that.
Joseph, you had a 20-year career at BlackRock, and you really kind of brought in the crypto initiative there alongside your amazing team, as I know you've told me in the past.
Yeah.
What was kind of the impetus behind that, and did other people kind of find you crazy at the time?
Do you know what? People think that the things we did by launching ETFs in January and July of 2024 just happened, and that we built these ETFs and then the demand came. What people don't realize is we had spent 2 to 3 years on a roadshow listening to clients, regulators, crypto natives, banks. We met a bunch of fraudsters.
Yeah.
We had a sense of who we were at the time. But we needed to take a step back and ask ourselves, what were clients looking for? And what they're really looking for was a safer way to own Bitcoin and ETH, not much more down the stack beyond Bitcoin and ETH. They wanted to understand how it fit in their portfolio. because they're not speculators or traders. These are long-time investors. And then finally, they wanted to hear from us what we think the future financial rails will be. And we told them it's going to be tokenized. And we told them, please come along for the ride. So I don't think anyone thought we were crazy. I think they realized that we were going to do it in the right way. There was a fear that we would lower our standards. Instead, we did the right thing, and we actually raised the standards of the entire industry. And that's what I'm most proud of. When I look back, it's not going to be what we did, it's who we did it with and how we did it.
What year was that? What year was that?
I took over a one-person blockchain team in late 2018.
Okay.
And I worked in this space in digital assets from 2019 to 2025 when I retired.
What do you mean by lower the standards?
So I think if you're managing institutional capital, we can't forget that this money is meant to be put in a portfolio to meet people's goals. And when I was at BlackRock, just broadly, over 60% of the assets that were being managed were for retirement and pension plans. So if you're managing money for someone's retirement or a pension plan, you actually can't get it wrong. You can't decide to lower your standards for a particular product in order to be the first in the market.
Right.
Because if you get it wrong, and there's lots of inherent risks we had to work through, people don't retire in dignity. So if you want to feel a weight on your shoulder, think about that.
Yeah.
And so we worked with Coinbase to raise their standards. We worked with Securitize. We worked with lots of market participants to make sure they could support capital I institutional. And I think in some ways, that's the thing I'm proudest about. We didn't lower our standards. We raised those in the industry. And I hope we get an opportunity to share. That's what we're doing at SharpLink as well.
Yeah. And then you had numbered, we'll get to SharpLink obviously, but just staying with BlackRock for just a second, you had other executive roles at the company. You had a 20-year career there.
Yeah.
Personally for you, what was it about crypto and digital assets that drew you to that? And what was the sort of impetus behind really going there full time?
So I worked with amazingly bright people and innovators for my entire 20 years. The first 12 years was in a business called Aladdin, which was a fintech platform BlackRock had built for global investors to do portfolio management and risk. And sitting there, I had a front row seat on how the market structure worked or didn't work in the US. We built systems to help people manage through crazy inefficiencies. So what appealed to me in crypto is this idea that instead of assets trading, T+1, or in Asia, T+2, you can program assets. It can settle instantly. Trusted built inherently in the system instead of relying on reputation. And I'm old enough to have lived through financial crises where trust broke down because the systems weren't working. So crypto to me was less about, owning Bitcoin and ETH as much as it was helping lay the groundwork for a new financial rails. And that's what I'm actually most excited about. I love Ethereum. I own Bitcoin, but I'm a tokenization maxi.
Joseph, we are here at Hong Kong Consensus, so that means we are in Hong Kong, obviously. You guys are a publicly traded company in America. How are you thinking about the relationship with different investors outside of the US, and what are the conversations like here?
Yeah, I think we're seeing a lot of investor types in Hong Kong. And for American listeners, the depth of capital here is astounding. Some of it is family office, some of it is new money, some of it is mainland China money that has been repatriated to Hong Kong. And I think we're seeing an interest, because a lot of this is generational capital, we're seeing people wanting to invest in things like infrastructure, real estate, or in a thesis that's long-term. And Ethereum actually has a very strong following here because there's a view that people can get access to this long-term tokenization opportunity. They see stablecoins going from being a US-centric thing. Now you're seeing yen-denominated stablecoins, Korean won-denominated, Hong Kong dollar, and they feel like this is going to be part of the future. I've been traveling here for a while, and I've never seen more enthusiasm and an understanding that Hong Kong can be the digital gateway for Asia. And I think you're going to see competition from Seoul and other countries locally. But the depth of capital is shocking, and the interest in long-term investing is quite interesting.
What do you think is driving that new interest today?
I think it's geopolitical. And if I'm quite direct, you've seen the US government take a very, very forward stance on stablecoins.
Yeah.
Stablecoins are over 99% US dollar denominated. That means that if transactions on chain are going to happen with stablecoins, you're almost seeing a re-dollarization of finance at the same time that most finance is being challenged from a dollar perspective. You're seeing a dollar off trade. The second thing people are realizing is stablecoins in local currencies create massive demand for treasuries. So USDC from Circle and Tether collectively are the 12th largest creditor of the US government when China's slowing purchases and Europe's slowing purchases. So I think there's a view that if they don't get in and be forward and realize that this is a strategic imperative for their economy, they're going to fall behind the US. And I think that realization is loud and clear right now. And they're moving forward with regulation, with new licenses, and you're going to start seeing Asian-denominated stablecoins over the next several months.
Mm-hmm. And you think that will compete with the US dollar-denominated stablecoins?
I think finance today is largely about 60% US dollar denominated. There's a fear that it will be fully US dollar denominated. And I think rather than compete, if these local economies build digital ecosystems, they will need the local currency to power the money movement, the swaps, and other values. So I think part of it is geopolitical, and part of it is you're trying to build local ecosystems, and you do that with local capabilities.
Mm-hmm. Let's talk about SharpLink. You guys are the second largest Ethereum treasury company on the market today. Last year, DATs really were sort of I'd say maybe the biggest trend in crypto. This year, the market downturn is really putting some of these DAT codes to the test. Mm-hmm. Should investors still be confident in the DAT code model, and what are some of the biggest bumps you're seeing in the road aside from the market downtrend this year?
Sure. I think of it, people are already saying we're in DAT 3.0. Can someone find an industry for me that's 7 months old that is in the third generation? We're in like...
Crypto moves fast.
Crypto moves very fast.
Yeah.
So fine, we're in version 1.5. And if you take a step back for your listeners, the first V1 was essentially forming the right teams, having a thesis, and then raising capital in a way that was efficient. We've raised $3 billion plus. We have a clean balance sheet. And we own something that you don't see in the crypto industry, which is permanent capital. You see funds needing to provide daily liquidity. You see ventures, investing and trying to farm, inflated tokens. We have raised $3 billion that you can deploy for long-term capital. The second thing is we've taken on no debt, so we have a clean balance sheet. So I think what you're going to see in version 2.0 is real differentiation. Who has a clean balance sheet? Who has an institutional management team? Who's raised enough capital to get exit velocity? And then most important, put the investors first. How do you actually make it productive in the ecosystem rather than do fancy things like buy airplane engines and tokenize them or make investments in media companies? We're going to be the focused and productive DAT. And I actually think when we look back, having permanent capital is a competitive advantage.
Mm-hmm. How do you think on long-term horizons? Because so many people in crypto just think like near-term, market up, market down, that's all they track. But I personally take the stance, and I'm sure you do too, of like zooming out and thinking more long-term. So how do you kind of operate on that side and then really get that message out there that, yes, things might be down right now, but maybe not financial advice. It's more,
So I'll answer it in 3 ways. Let's just be clear for listeners. Since October 10th, or in Asia where we are, it was October 11th, we've seen a very significant deleveraging system from the crypto ecosystem. And I've seen this happen, not at this scale, but I've seen the ups and downs 5 times in my 7 years in crypto, and it always comes back stronger. So the first thing I would say is take a deep breath, don't panic, don't sell on the low. The second thing I would say is we're going to see a flight to utility. What do I mean by utility? A large part of the ecosystem has been focused primarily on what could they do to drive price action in their token. I think the more important and durable survivors are going to be the people who actually show utility and value. Whether you're a DEX, whether you're a prediction market, or whether you're an owner of Ethereum, who are going to be the people who are actually going to build the technology and the apps that are going to power the future? I have a very strong belief that Ethereum and its ecosystem is going to be the future decentralized rails for finance. You can think of it as a world financial ledger. And if you believe that, then you own Ether, you make it productive, and you ask people to be patient. It's a highly volatile asset. But if you looked at the greatest tech startups in history, if you actually observe them in the first few months, Airbnb or Google, you would have thought they were crazy. They were too volatile. But it turns out early innovation is volatile, and over time, as it mainstreams, it'll become much more of a mom and pop asset to put in a portfolio. Right now, it's a volatile asset, but all crypto and tech startups are volatile. That's where you get the upside. And I see right now, smart money sees the risk reward as actually being really favorable. I won't give price predictions. I'll leave that for my competitors. I think now is a really interesting time to be building and to enter this space.
Mm-hmm. You mentioned being a productive digital asset treasury company.
Yeah.
I think putting crypto on the balance sheet and holding it and just hoping that there's price appreciation is probably a trend of last year.
Yeah.
Is there anything that you guys at SharpLink are doing that is moving that narrative forward this year? I know you guys just did a partnership recently.
Yep.
How are you being a productive digital asset treasury company?
Sure. First, I think we need to distinguish, we followed Michael Saylor, who is a pioneer in making Bitcoin a great digital asset reserve currency. But Bitcoin is not inherently productive. There's no yield.
Right.
So the way productivity happens is through financialization and financial engineering to try to drive yield. And that really works when the price is going up. It's challenged when the price is going down. Ether, the token that natively secures Ethereum, is productive. You can stake it in the ecosystem, secure transactions, and get near risk-free 3% yield. We've been doing it slightly differently than our competitors. First of all, we've been staking nearly 100% from day one. If you have a productive asset, you should be staking it for your investors. And two is, I mentioned earlier, we have permanent capital. Term certainty is missing in crypto. You have a lot of fast money. So what we've learned is if you have permanent capital, you can go to protocols in DeFi and you can partner with them, lock up your capital for a couple of years, and in return, get a native staking or restaking rate plus incentives. So we're essentially pushing the efficient frontier of crypto. And that is how you raise standards and innovate. The other thing that's really important is, for listeners, if you start wanting to get into DeFi level yields, you're often forced to leave your custodian, go into a Web3 wallet, and take DeFi risk. We did something in raising standards that had never been done before. We worked with protocols like Linea, EtherFi, and Eigen, and our qualified custodian, Anchorage, was first to support this type of deployment within the protection of a bank-chartered qualified custodian. So think about what I said earlier about raising standards. That is the definition of institutional DeFi. Get higher yields on a risk-adjusted basis, but protect the downside. And in crypto, if you can protect the operational risk, that is ops alpha, and that is the role we should play, and we hope everyone will rinse and repeat. That is a force of benevolent capital.
Mm-hmm. Mm-hmm. Joseph, can I ask you
Sure.
for a spicy take on
Please.
the DATs in general?
Yeah.
Love the spicy.
Like, how do you really, because there's so many, right? And so for listeners out there, when they're trying to decide between them, not financial advice, but do you think it's become inundated in the industry and there's going to be a consolidation period, or what is your take on that front?
I think there will be a shakeout. And I think there's probably, you know it better than me, globally probably 100 Bitcoin DATs. In the US, I think there's 7 to 9 ETH DATs. And then you have a whole bunch on Solana, Hype, and a long tail of tokens. I think we're in a moment of, I'm not going to use the word shakeout, but I'll use the word differentiation. Mm-hmm. And if I was an investor and I had a 4-part litmus test, I would ask, have they raised billions of dollars of capital to get that exit velocity and scale? 2, is their stock actually trading on the venue where they are? In the ETH space, there's only a couple who trade with high daily volumes. 3rd is, do they have a thesis? Or are they hoping and wishing that their token will get productive and have utility? Mm-hmm. And finally, I would really, really focus on, have they built a management team that can do these capabilities on team or are they essentially outsourcing this to others who are taking a lot of value out of the system? So I actually want to bring positivity to the crypto ecosystem. I will never FUD, but I will tell you there are litmus tests as you ask for investors. I think we passed those tests, and I actually am hoping that as many DATs as possible are successful because they'll be buying the token, and that's great for all investors. I think 2026 will see a shakeout, and I don't know how that will happen, but I do think you're going to see less launches and less survivors in 2027.
Do you think, because I've read this online and I've had some conversations with some people, it's not necessary, it's not my opinion, but some people have argued that DATs were like a net positive, or I'm sorry, net negative to the industry. Completely the opposite of what I was just trying to say. And like a lot of people, you know, love Michael Saylor or loved Michael Saylor, and now as Bitcoin's price is going down, they're like, this is going to be a disaster. What happens when, you know, it keeps going down and then they are below like their certain threshold of the price? You could say it better than I could.
Underwater, I think is the
underwater. Thank you. What's your answer to that?
Sure. I think I want to keep things so simple. If you want to own Bitcoin or you want to own ETH, you can think about it that there's 3 ways you can own it. If you have the ability to open your own, you know, non-custodial account, go buy Bitcoin and ETH for yourself, but you're taking risks, counterparty risk, and the like. You can buy ETFs that have done a great job being an exposure vehicle. At BlackRock, I was proud of what we did. But if you want to own ETH, which is a productive asset, an ETF is constrained in terms of how much they can stake. First of all, for most of the ETF history, they were not allowed to stake and earn yield. And even today, because they have to provide daily liquidity to their investors, and there's a long entrance and exit queue, you can't actually make it fully productive. A DAT, if it's managed well, can stake nearly 100% of their ETH. They can earn the Ethereum staking rate. And if you use your capital properly, you can actually earn additional alpha. So if you want exposure to ETH, it's a beta investment. Come to SharpLink or another DAT. But if you want what we call an alpha overlay, you can only get that from an actively managed digital asset treasury. You can't get that from an ETF. And if you try to do it yourself as an institution, I think you'll struggle. So I think it's a very simple choice. We are in a compressed period where our multiple to NAVs are low. That's okay. We're built for long cycles.
Is this how you think institutions will be thinking about DATs now from a more active capital side than the passive?
Yeah, look, to be very clear, if you're a conservative investor, you shouldn't be investing in Bitcoin and ETH, which have vols in the 80 to 100. Like, it's not something you invest and hope to get a dividend stock. But if you actually want that beta exposure to ETH for the long run, you want the capital appreciation, but you also want somebody to make it productive, it's an ideal vehicle. And I'm actually quite excited. I do believe the next stage will be building operating companies in the ecosystem that can help the ecosystem scale, and the revenue should be ETH denominated, and that will be another way to accumulating ETH on our balance sheet. I still think we're early. You asked earlier about concentration. I don't think we're in a concentration risk problem. I think we're still in the accumulation and building stage.
Is that DAT 3.0?
I'm in DAT 1.5,
Okay.
making my ETH productive and doing the right thing for investors. We are looking at operating businesses that can continue to enhance and can look for our scale. I will tell you the one thing missing in crypto today is liquidity. And there will be a role for people with permanent capital to provide liquidity to prediction markets, to protocols, even to insurance pools who need that long-term capital. And we're not looking to hit home runs. We're not looking for highly convex VC investments. We're trying to get risk-adjusted yields and use our comparative advantage. So I think I'm having more fun than I've had in my 20 years in finance.
I love that.
Amazing. We love having fun in crypto for sure.
Love
See
it.
that liquidity coming from Hong Kong and the APAC region, kind of going back to what we were talking about at the beginning of the conversation?
Yeah, I think there are net new buyers. I also think there are a lot of OG Bitcoin and ETH owners who were buying when Vitalik was in Shanghai in 2015 and 16. They bought at less than $10. And I think you're seeing some of that ETH being recycled in the ecosystem. You're seeing some leverage, but I actually think it's really smart capital. And I do think in the long run, Asia is going to be one of the biggest sources of capital and liquidity for crypto, both from fast retail investors, including Korea, Taiwan, Hong Kong, but also some of the largest holders of capital who are looking to get into this space. So I'm actually optimistic and quite excited to be here. I'll be spending more time in Hong Kong and Abu Dhabi, and I'll say this to be spicy, probably less time in Europe for business. It's great for vacation.
Great for vacation. Where will America fall in this liquidity deployment, do you think?
I think, if you take a step back and you believe that most assets are going to be tokenized, over 60% of the global financial market, it's a $700 trillion market. Over 60% is dollar denominated in the US. You see the US largest financial institutions, Fidelity, BlackRock, Bank of New York, Franklin Templeton, not whispering, not giving you breadcrumbs. They're screaming at the top of their lungs. They're going to tokenize everything.
Yep.
So I think the US institutional market will be a leader. I think other countries will catch up. But from a retail perspective, I think Asia is where most of the enthusiasm is. It's a little bit faster money, but it's really important for the ecosystem. And it differentiates between protocols, tokens, and value.
On this show, we talk a lot about policy, so we would love to hear your perspective. What are you watching most closely on that front, whether it's in the US or externally, given that you're spending time out here?
Sure.
Yeah.
I think in the US, we were quite excited when the Genius Act passed. Clearly, the Clarity Act has a lot of support, but there's one issue that's holding it up. Who should be able to give yield from stablecoins? And it feels like it's the large banks against Brian Armstrong. It's held up. I'm actually quite confident they'll find a compromise. Or, if they don't, the CFTC and the SEC, the two largest US regulators, are actually working in unison. And I think they can achieve probably 80 or 90% of the market structure clarity through rulemaking. And if the policymakers and Congress can't get Clarity Act across the line because of the stablecoin rewards and payments issue, I think the policymaker will get the market structure done. And I think the crypto community is embedding that in the price. And I think you'll see more momentum when that happens. I'm confident either way, even though the Clarity Act may not pass before the midterms. In Asia, I was just in Seoul, I was in Japan, and I'm here in Hong Kong. And you're seeing a bit of a catch-up mode where governments are starting to realize they need to have local denominated stablecoins. They need to be able to allow DATs to function and even to launch crypto ETFs. In Hong Kong in particular, they are being quite positive on issuing local licenses, both for exchanges, but also for virtual asset treasuries and for local denominated stablecoins. I think the momentum is coming to Asia, and they don't want to fall behind. So I'm quite optimistic.
You mentioned the stablecoin yield argument. I've been covering that quite a bit. As someone who sits now on the crypto side, but someone who's had extensive experience on the institutional side as well, you mentioned you think they will come to a compromise. What could that look like?
I was told in life, if you don't know the answer to the question, it's okay to say I don't know.
I don't think anybody does.
I think there's enough vested interests that there will be a compromise. I do think the banks are severely threatened by the idea that they have trillions of dollars of retail deposits that are attracting and giving no yield. And smart investors will go to stablecoins, and you'll see a giant swooshing sound out of retail deposits. I don't have an answer on what the compromise is going to be, but if you believe the policymakers can solve it either way, I'm confident that now is a time to be investing back at the lows of the market.
Do you think, you have the opinion that if there is no Clarity Act passed and the SEC and the CFTC do take over rulemaking, that there is some risk somewhere down the line that that gets repealed by another anti-crypto administration?
Yep. I believe there are certain things that are irreversible. One of them is technology progress.
Okay.
Can you imagine your consumer experience on your iPhone or Samsung, or how you trade on Robinhood getting reversed? I don't think that's going to happen. And once assets start becoming tokenized and start trading the same day, settling the same day programmatically, once people can own a stock and retail investors can lend it and it's composable, there's no way they're going to go back and say, you know what, we prefer T+2. It's a safer way of trading. So I do think technology cannot be stopped. The efficiencies that are going to come from crypto and digital assets are like nothing we've seen in our history. It's going to create wealth. It's going to create value. I don't think that's reversible.
Okay. Joseph, aside from everything that we've discussed with you today, what is something that you're paying attention to that you think others should be watching as well?
Yeah, I think we went through a period in tokenization where you had individual projects tokenized and everyone got excited. You know, Franklin Templeton tokenized a money market fund called Benji, and then BlackRock did BUIDL, and then our friends at Apollo did ACRED. So you're going like organically one fund or project at a time. What I'm looking for is some asset manager to wake up one day and not tokenize a fund, but tokenize a fund complex measured in the hundreds of billions. I'm looking for the DTCC to start dematerializing some of their custody, tokenizing it on chain, and seeing movements between wallets that we've never seen before. So I'm looking not for like small breadcrumbs, I'm looking for the productivity to come top down, where you're seeing massive one-time step functions. And when you see that, you know you're at the right point of tokenization. It's irreversible. So not individual projects, but entire complexes and asset classes. When that happens, there's no breaking, there's no going backwards.
Yeah, awesome. Joe, thank you so much for joining us.
It is my pleasure. I'm super enthusiastic, and I'm really excited that even at moments that look bleak, the actual tailwinds are more positive than the markets are telling us.
I love it. Thank you so much, Joseph.
Thank you both.
Pleasure.
Thank you.
Thank you.
Well, thank you to Joseph Shalom, CEO of SharpLink, for joining us. We're going to take a quick break and bring you on our next guest for Crypto in America. Stay tuned.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions. Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions. Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Alrighty, welcome back. Next up is Sydney Powell, the co-founder and CEO of Maple Finance. Sydney, welcome on, and thank you for joining us.
Thanks for having me on. Glad to be here.
Yeah. Glad to have you. So we always like to start our podcast by asking our guests, what does crypto in America mean to you?
I think for me, crypto in America means opportunity for revitalization of the financial system. I come from a banking background. I first got into the crypto space by thinking that there was a real way to disrupt what we'd been doing in banking and make it more accessible and more transparent for folks and investors around the world. And I think, we've seen a real shift in the policy conversations in the US where DeFi was previously a dirty word, and now we're seeing more and more founders look to build DeFi projects in the US.
Mm-hmm. Obviously, we are here in Hong Kong, and we spoke about this with our last guest too, but Maple Finance is an on-chain asset manager, and you work with a lot of institutional firms. How do you kind of think about institutional adoption at scale in APAC, or specifically Hong Kong, compared to other regions?
Well, I think Asia Pacific and Hong Kong has a very strong trading history of trading firms and family office participation. And so I think, and also, a lot of strong Bitcoin mining operations. So for us, we've always seen really strong synergies with the region. Maple's focus, as you mentioned, is on-chain asset management, but primarily what we do is institutional lending. So we see a lot of parties in Hong Kong and Asia specifically, who do Bitcoin mining or they do trading operations, and for them we can provide lending partnerships and working capital, so they can either build new mining facilities, data centers, or use it in working capital for their trading operations.
What do you see as the big capital market unlock out here specifically?
I think out here it would be. So I think family offices have always participated really strongly in the crypto ecosystem. So we have a number of family office investors who provide capital into Maple's products, and they do so that they can earn a yield in stablecoins. As I've been out here this week, I've been meeting a number of investment funds, also some family office representatives who are very interested by the opportunities of getting yield in stablecoins. They see the growth, they see the adoption. And for institutions, they care about things like risk management. And this is a real change that we've seen over the last couple of years where, crypto lending was previously viewed as a bit of the Wild West back in 2022. You had unsecured lending, you didn't have the same kind of risk controls. Nowadays, you see very strong protections, very strong underwriting, and we've seen now more banks and traditional asset managers, particularly in Hong Kong and the Asia Pacific region, look to now enter this space and perform lending themselves or allocate to funds who do lending.
Has interest wavered at all due to the current prices, or do a lot of these teams, family offices, et cetera, you speak with, think more long term?
I think typically they think longer term, and they're very conservative in their allocations. Often they might have previously only allocated to real estate, or they might be heavy cash. And so the opportunity for them in crypto lending is that they can earn a pretty conservative yield with very solid downside protections in place. What we've seen, though, is it's a two-sided market. So on one side, you have people who want to earn yield and get an investment return, but on the other side, you see borrowers. Where we've seen the most impact of the past couple of weeks has been on the borrower side. So with Bitcoin subdued, people are concerned around getting margin calls, and so they don't look to upsize lending as much. But the flip side is that when Bitcoin's subdued, you start thinking, how do I put my dollars to work and how do I get yield? And so that's where we're seeing strength.
So the interest that you're seeing, is it in dollar-denominated stablecoins mostly?
Yes, for the most part. I would say most crypto lending, or almost all crypto lending today, takes place in dollar-denominated stablecoins, with the bulk of it in Asia-Pacific being in Tether, more specifically.
Okay, because our previous guest, Joseph Shalom, was saying that I think there's a sense of Asia-Pacific region feeling like, all right, there's a need to maybe catch up, maybe wanting to catch up in the, not wanting to be left behind. Obviously, the USD stablecoin market is massive, but there's maybe a sense of thinking, okay, we should probably start making our own noise in this space as well.
In terms of other types of stablecoins?
Yes.
Yeah, definitely. We're starting to see that. So, you've seen in Europe, they've issued a euro-denominated stablecoin. I'm Australian by background. I've heard talk of an AUD-denominated stablecoin, but I think it's sensible, particularly if you want cross-border flows and more cross-border deals. You need to have the ability to transact in multiple kinds of stablecoins, not just the US dollar. So I think you'll see a lot of growth in whether it's Chinese renminbi stablecoin or Japanese yen. I think you're going to see a lot of growth there.
How would you say the conversations you've had out here compare to other regions that you've traveled to? Because I would imagine the appetite and interest varies based off where you are.
Definitely.
Right? Yeah.
So I would say here there's a lot more appetite to borrow. There's a very, as I said, there's a very strong trading sector out here. There are a lot of Bitcoin miners located out here, as well as a number of prominent investors. Whereas when we talk with European clients, probably less of a focus on yield or on borrowing. There's not as much borrowing activity coming out of Europe. So I'd say here is definitely one of the strongest markets that we see globally. And then the other strong one has, of course, been the Middle East. A lot of activity happening out of Abu Dhabi and Dubai.
Mm-hmm. Yeah.
What do you think of the yield argument going on in the US right now? Yeah, about stablecoins, yeah.
Look, I think it's not surprising. Now, if I'm a bank, I'm tremendously worried about the risk to my deposit base posed by stablecoins.
Yeah.
So I'm not surprised that they've taken the position that they have. And of course, nor is Coinbase's position surprising. So I think USDC has been a fantastic growth channel for them. And what's at stake is you've seen over the last 10 years the rise of private credit. What private credit means is that a lot of lending is now taking place outside of the traditional banking system. And I think if stablecoins are able to pay yield, or if stablecoin issuers are able to pay yield, you'll actually see an acceleration of that trend. Mm-hmm. So I would expect private credit to grow and the number of shadow banks to really proliferate off the back of that. In one sense, what we do as an on-chain asset manager is very akin to shadow banking. We do tokenized private credit, and so we would be hoping for the yield argument to kind of go in favor of the crypto industry.
Yep.
But I can definitely understand the other side of that position.
Mm-hmm. How do you see that shaking out?
Well, we've seen that Coinbase's position was strong enough to kind of halt the passage of the legislation. Mm-hmm. I tend to think it will probably go towards issuers being able to pay yield on the stablecoins, or at least for partners to pay rewards on them. I think it leads to more utility of the stablecoin, and ultimately it's better for the crypto ecosystem. So I do hope it shakes out in that direction.
Maybe not on idle balances, but maybe on more like activity on balances. Because I think Coinbase in an ideal world would want yield to be paid on just balances sitting in a stablecoin account, right? But it seems the banks are.
Well, I think the problem is you ultimately want activity to take place in the financial system. Like, banks play the role of intermediaries, and they perform a very important function of shifting credit into the private sector, allowing people to take out mortgages. Mm-hmm. And so if you have the case where people are too incentivized to just leave their money sitting put without it actually being lent out, that wouldn't be a great thing. It would kind of slow economic activity.
Yeah.
We selfishly want stablecoins to flow. One way to look at our business is we're kind of constrained by the number of stablecoins in circulation. We need that number to grow, and we think that you should be paid for activity that occurs, for productive loans that are made to corporate borrowers, for loans that are made for people to get home loans. So I could definitely see that's an important argument.
Yeah. What will you kind of see as the ultimate driver for stablecoin adoption? Is it going to be on the payments front or something else? Because obviously we've seen it grown a lot. I think it's around, like 300 billion right now? And
it's about 300 billion.
But it's grown a lot over like the past 12 to 18 months. And I would imagine it continues to. But then when you look at like the traditional payments market, it's trillions and trillions of dollars, right? So it's a long way to go, even if billions is high. What do you think will be kind of a catalyst on this front?
I think the payment side has been slower to catch up. I think yield has been the killer product on stablecoins over the last 12 or 18 months, and that's driven a lot of the adoption. You see the dominance of USDC within the DeFi space, largely driven by people seeking yield. However, what I would say is more and more we're seeing firms who do cross-border or settlement finance, and they're actually running their businesses on stablecoin rails. So you might transfer a US dollar denominated stablecoin cross-border, and then you off-ramp it into the local currency. And that's what nets the two sides of the transaction together. We're seeing more and more of that activity, and so I expect that to accelerate. It naturally comes after kind of yield and the use in crypto-native purposes, whether it's trading. Mm-hmm. But I think that'll be the real driver of mass adoption of stablecoins, I think. When you use it to pay for imports or exports or e-commerce purchases. That's where it really impacts everyday people's lives, whereas today it's mostly isolated to traders and crypto investors.
Mm-hmm. Yeah, it's making me think about tokenization, which stablecoins fall within, the tokenization umbrella. And it's a very hot narrative right now in crypto. How do you kind of think about tokenization when it comes to complementing your business? And we'll start there.
Yeah. Well, one thing I was just going to add is you mentioned the number 300 billion. What's been very interesting to note is that even as crypto price has been dropping over the last couple of months, the stablecoin circulating supply has actually been growing or steady. And I think that's a sign of real product market fit. Mm-hmm. Now, for us, tokenization is a very important trend in attracting institutions. One way to look at our business is we do natively tokenized private credit. All of Maple's loans to institutional borrowers are represented by tokens on chain. However, what we've seen, as Joseph before me was talking about, is we've seen tokenized funds, and we've progressed from money market funds. Now we're looking at private credit funds. We've also seen talk of tokenized equities, tokenized pre-IPO stock.
Yep.
The complementary aspect of this tokenization for our business is that it means there is then more collateral on chain that we can lend against. We would love to do, large private credit transactions against, tokenized infrastructure, tokenized real estate, tokenized equities. I had a conversation earlier this week around lending against effectively tokenized SpaceX stock. So I think it will trigger a lot of expansion in the space, but also it just brings more retail interest in. People are very, the average retail investor is very interested in SpaceX's IPO. And that, if you can tokenize that, it just makes it more accessible to everyday investors.
Mm-hmm. Is there anything in the space, in the tokenization space specifically, that hasn't been built yet that you would like to see be built?
I think in the tokenization space, you've seen a lot of talk around.
There's a lot of talk.
There's been talk for
We're talking about it right now.
Yeah, exactly.
Years.
Right.
So we've seen a lot of talk for a very long time around tokenized real estate.
Yep.
To date, there hasn't been a ton of actual activity taking place. It's mostly been sort of startups and conjecture. But I think given the size of that market, it'll be a tremendous unlock, and also it's one where if you've ever bought a house, there's a lot of hidden transaction fees, and it takes a long time for those transactions to settle. So I'd be excited to see real progress there, and I think where we're at the moment, Maple is looking for more places to deploy, and so we're having conversations with all of the the private credit tokenizers, equities tokenizers around what are attractive opportunities for folks like us to deploy into. So I see, tokenized real estate as a real opportunity.
Mm-hmm. Yeah, there was an interesting, I won't say argument, but just differing point of views from two well-known venture people in this space. I guess I'll name them. It was Chris Dixon and Haseeb. They kind of had differing points of view on, where the space is going in terms of, is it going to be more financialization or is it going to be more Web3?
Sure.
Yeah. And so, is it for, like you mentioned, tokenizations of real estate, right?
Yeah.
Is it, we haven't seen as much direction in that space because of the restrictions around, regulation, or is it because we haven't seen as much interest because there's just not interest in that? Like, do you see that as more of like, there's things have to happen in regulation and, just some more like time and like the space is still very young, or is it because, there's just not, people just don't want that? Like, kind of how do you see that?
It is a bit of a chicken and egg problem, and you always wonder when you don't see the activity, is it because people just don't want this?
Yeah.
What I would say is if you look at traditional markets, it's very institutionalized products. The investors are pension funds, endowments, insurance companies. These players are slower moving. Mm-hmm. And so I think the regulatory clarity will benefit the adoption. But also what you'll see is, I think one of the main issues has been the average crypto investor has a very high hurdle rate. They want high sort of speculative returns, and they have a very short duration profile. Mm-hmm. They're not looking to hold 10-year investments. Whereas when you look at institutional players who are starting to enter the space, they have a longer time horizon, they're more patient capital, and so I think it's just taken time for that reason. It takes time for institutions to get comfortable with the asset class, they want to see a track record, they want to see risk protections.
Right.
I don't think the issue has just been a lack of interest. selfishly, I come from more of a finance background, and Maple plays more on the financial side. So I think I tend to side with Haseeb. I think the clearest product market fit has really been more seen on the DeFi space and financial products than Web3 to date. But you do see products like Polymarket very widely adopted, and so I think that that indicates that there is going to be appetite for consumer apps. But I think the most transformative aspects that we can see will come more from the financial products and from the DeFi space.
Mm-hmm. On the financial product side, when you're having conversations with different investors, is there anything that sticks out to them most that they're constantly asking about, whether it's like private credit or tokenization or something else?
It's they definitely ask a lot about tokenization, but it's more just for general interest. Where we're seeing the actual clearest signs of adoption in terms of asset managers who may actually allocate to someone like us or do a deal in the next 6 months, that's on the private credit side. Because private credit in traditional markets is very illiquid. There's not clear price discovery or pricing on these assets. And it's also a rapidly growing sector. So what we've looked at, we've discussed with private credit funds around securitizing portfolios of Bitcoin-backed loans. We see interest from some of the community banks in getting into this sector because they see it's now got a very long track record. They can kind of clearly predict when drawdowns might occur. They think they can control for losses. And so I'd say private credit has private credit is running ahead of general tokenization at the moment, I would say.
When it comes to private credit funds and bringing them on chain, where are you seeing the most growth that others actually might be overlooking at the moment?
In terms of general private credit?
Yeah.
I would say, the most of the interest we've seen has been in Bitcoin-backed loans because it's got the longest track record of operating. It's a very well understood product now. It's akin to equities lending or equities margin lending in traditional finance, and so we've had conversations with private credit funds around setting up SPV structures that could fund Bitcoin-backed loans. You've also seen recently there is a transaction in market where it looks like there will be a rated portfolio of Bitcoin-backed loans done in a securitization structure. So I'd say that sector is getting the most attention at the moment. And also when we see new banks that are getting charters like Erebor, we've seen a couple of other community banks make noise around entering the Bitcoin-backed loan space.
Mm-hmm. When it comes to the on-chain asset management side of things, do you see all of asset management coming on-chain, or do you think it'll be a certain percentage?
No, I think eventually, on a long enough time horizon, it's all of it. I think
Yeah, like zooming out of it.
Zooming out, but let's give some more definitive timelines. So let's say within 5 to 7 years, I think you'll see, a major percentage of capital markets activity come on chain. Let's say 30 to 40%. I think typically in the short term, it's slower adoption than you expect, but then you hit this kind of inflection point in the S curve, and the thesis that we started Maple around is that eventually all capital markets activity will occur on chain, and all of it will be settled in stablecoins. When we started Maple, if I'd had to go and compete with an Apollo or an Ares or a Blackstone in doing private credit, we wouldn't have had a chance in hell. But if we can settle loans in stablecoins, if we can tokenize the collateral, then there's a real technology paradigm shift that we can capitalize on. And I think that's eventually going to swallow all of capital markets.
Mm-hmm. Yeah, tell us, our audience, specifically a little bit about your journey into Maple, because we haven't had you on the show before, obviously, and just give us a little bit about the background and the company.
Former finance guy.
Yes.
Banker.
Traditional banker by background.
Okay.
I used to do securitization back in Australia. So I was working at one of the big Australian banks, and our clients would be lending companies. So we would give them large loans, think 500 million to $1 billion. They would take that out, break it into smaller chunks, and give loans to their customers. But I always wanted to kind of get startup experience. Mm-hmm. And so I went to a smaller finance startup, and it was while there, being on the other side of the table, on the client side of the table, I started to learn about smart contracts and think, wow, I could potentially have automated my entire job while I was working at the bank through smart contracts. But what I saw was an opportunity to reduce the barriers to entry for new finance companies. Mm-hmm. If you could automate a lot of the processes that were happening through smart contracts, then you could suck the cost out and allow new lending companies to kind of enter the market. So anyway, I met my co-founder at that finance company. And so back in 2018, we started thinking about Maple in the background and how it could work and the idea of tokenized bonds. And then we wrote a white paper in 2019, hired our first developer using our savings in that year. And then where we started was kind of crazy. It was doing consumer peer-to-peer lending, just using our own savings and hoping that these guys would repay the loans. Fortunately, they all did. We didn't have any defaults. But it got us thinking about how could Maple scale. And so then we became an institutional lender. So then we raised capital 2020, entered the institutional lending market, and we started with loans to market makers to get a foot in the door. And then fortunately we survived 2022. I would attribute that to tighter underwriting procedures and risk management. And then 2023 we pivoted and we started doing over-collateralized lending. That's really been the growth trajectory of the company since then. So now we're at about 4 billion AUM, and we would be the fourth largest global lender to institutions.
Wow.
Yeah.
So I know that Maple is not available in the US. I believe we spoke about this off stage.
It's so we have a direct lending product that's only available to accredited investors in the US. That's for regulatory reasons. And then offshore we have the Syrup USDC and Syrup USDT products. Now this is where you can really see the benefits of tokenizing private credit, because you can use that composably in DeFi. So when you allocate to Syrup USDC, you get a token back, and you can put that in Aave, or you can sell it on Uniswap. You can fix the interest rate on Pendle, and you've seen BlackRock with Biddle just integrated it with Uniswap. And I think so you're starting to see the benefits of composability with liquidity and transparency.
Any plans to come to the US?
Bring the offshore one onshore?
Yeah.
We would love to do that.
Yeah.
We're in a little bit of a holding pattern while we wait for clarity. But
I was going to say, it's hinging on clarity.
Yeah. We have begun engaging with the SEC and with regulators. I think it's important to have those conversations and to just kind of educate the audience and and show that you have kind of the right intentions. Historically, we've always been very transparent with the community around Maple's financials, financial disclosures, risk disclosures. And so I think if we get a path forward with the Clarity Act, we would love to bring Syrup USDC into the US.
Yeah, I know Maple has been built on the belief of transparency and bringing efficient and accessible capital markets on chain. Do you feel like that's a reality today?
For us?
Well, no, I would imagine you say yes for Maple, but like in general across the board, do you really see that as like where everything is trending, or do you still feel like it's not fully transparent?
I think there's a spectrum, and I think over the last year you saw a number of new stablecoins launch. Some of them were not super successful. Some of them were you weren't really getting what was written on the tin in terms of risk management or the underlying yield source, let's say generously. So I think, that's inevitable. That happens in any new space, but I think it is improving. I think with the Genius Act, we saw rigorous standards set around how stablecoins need to operate in order to be offered in the US. And we've also seen just the battle scars from some of these things that blew up over the last year makes investors more discerning. They ask more questions now about risk management, and they expect to see transparency around how assets are allocated. But the market is also solving this problem with new startups. There are teams like Chaos, Accountable, Chronicle. There's a number of oracles out there who are now trying to say, what we can provide for your users is transparent, real-time metrics around what the underlying assets are backing these tokenized private credit or stable coins. And I think teams that provide that transparency will be rewarded by the market in terms of adoption.
Yeah. Do you feel that investors are more risk-on now, or are they still hesitant?
Maybe not in this market, but
perhaps not in this market. I would say.
I mean, hey, listen, buy low, sell high. Not financial advice, but that's how I operate.
We all like to think that we would buy low, sell high,
and then we look at it, we're like, oh.
Yeah. But it's when you're in the midst of a bear market and everything's plummeting, that's when people are least likely to kind of pull the trigger on a big purchase, and that's it's Warren Buffett would say, be fearful when others are greedy and be greedy when others are fearful, but it's very hard to do that in practice.
Yeah.
I would say what we're seeing at the moment is that people are a little bit risk off when it comes to kind of public tokens. You've seen altcoins have been smashed. However, what that's prompting is folks are looking at yield. So a lot of people are sitting in cash. They're thinking, how do I get it? How do I put this to work? And so they're allocating to things like private credit. So while you might see risk off, people are risk off in one segment of the market, they're becoming a little bit more risk on when it comes to private credit and these tokenized credit assets.
Is it because it's slightly safer, or?
Yeah, I mean, ultimately, if you get, the idea is that debt sits above equity in any transaction. And for a lot of these private credit transactions, they're structured so that you would take a senior position. You get a little bit less yield or return, but you get much more downside protection. If I was skittish about the market myself, I would be looking for senior credit and debt positions. That's ultimately what we try and do with Maple. So, our typical loan would be 70% LTV against Bitcoin, and so you have, a very healthy 30% cushion there.
What does a successful 2026 look like for Maple?
Well, we have set lofty goals, which the team do not like us setting. In terms of annual recurring revenue, we'd like to get to 100 mil by the end of the year. We currently sit at around 32, and we think that the trends like tokenization of private credit, institutional adoption are what is going to get us there. But also we've seen that investors now care more about revenues. And I think this is a sign of a maturing sector. They're no longer as focused on vanity metrics like total value locked or assets under management. It's now firmly about how is your business generating cash flows. So for us, the other big milestone we're working on is at the moment we're doing our first securitization deal. We think if this is successfully completed, it will open up opportunities for more traditional investors to come into the space and start participating in crypto lending.
Amazing. Sydney, aside from everything that we've discussed today, what is something else that you're watching that you think listeners should pay attention to?
I think just the activity that you've seen from players like BlackRock. I mean, this was a huge milestone, right? Like integrating BUIDL with Uniswap. I think you should expect to see or keep an eye on more of this, coupling or bundling, I should say, of institutional products with DeFi rails. I was very encouraged last year when I saw Apollo's ACRED tokenized fund integrated in Morpho. So that you could do looping or secondary markets. So I think that's the trend I pay most attention to personally.
Amazing.
Awesome. Well, thank you so much for joining us, Sydney. Great
Thanks
conversation.
for having me.
Yeah, thank you for coming on.
Thank you.
So previously, I spent almost a decade in TradFi before moving into the Web3 space a few years ago. Aptos is a layer 1 public blockchain and is founded by core members of the Facebook Libra project. It's purpose-built for global, high-performance financial market. And we partner globally with financial institutions, enterprises to enable the movement of real money, real asset, and financial workflows on a public blockchain.
Thank you. Nick, next.
Hey. Hi, everyone. So I'm Nick. I'm head of APAC for Base. I spent 8 years in TradFi as well, first at JP Morgan and then at Citi. And then I left for the dark side. I became a builder. I always wanted to build something on my own. I did that for 3 years. And then I realized how difficult it was to be a builder. so I'm in this role in Base, really helping builders to grow, to scale, because I've been there, done that, and so here I'm at Base now.
And Nikki?
Hello, Nicky Singer. I lead Chainlink's business in APAC and Middle East, based in Sydney, Australia. For those of you who may not know Chainlink, we do 3 things. One is we bring data securely on-chain. Secondly, we enable the movement of tokens and value and messages between different blockchains, public and private. And we also connect blockchains with off-chain systems. Pleasure to be here.
Again, I'm very excited for this panel today because it's rare to have almost all APAC-based panel, but all of us, I'm sure our business are all very global. I think I remember back in the days, it's usually you would have very US-centric perspectives, and then kind of lump Asia all together. But we all know that Asia is actually quite diverse. You would have Korea, you have Japan, you have China, Greater China area. That's all very different, and then obviously down in Asia, in Australia, that's also a very different market. And in terms of user behavior and user psychology, it's also very different. At least I grew up in China, and I feel like we skipped the whole Web 1.0 and went straight to mobile, and that probably impacted a lot of how Web3 users are expecting to be interacting with blockchain. So I wanted to set the stage a little bit and maybe just kick off as what you guys have observed being at a global blockchain or protocol, the specifics of Asia users and what they're really demanding.
Sure. I think in Asia, there is a high adoption of digital payment, and also there's a high willingness to deploy new technology at scale. And it's proven to us already there's a strong focus and interest from both enterprise and consumer to integrate Web3 into their platforms, systems, financial workflows, and even consumer applications. So all of these are driving real-world utility in real life. And at Aptos, we actually see strong demand from large enterprises in different markets where they are very actively to initiative blockchain projects to engage with their end users, consumer. So I can share one example in Korea. So Lotte Group, one of the largest retail and business conglomerate in South Korea, integrated their mobile service voucher on Aptos network last year. And just under 3 months, there's over 5 million vouchers being issued. That reached more than 1.3 million individual users. And to Lotte Group, there's transparency of each voucher, each transaction, and they get operational insights of all this user engagement, and also reduce all the intermediary cutting costs to make sure there's more efficiency. So through this blockchain integration at Aptos, it helps Lotte Group to better engage with their end users and also expand their digital ecosystem. I think in the West, we have seen large focus of financial market use cases. And our team at Aptos has been actively engaging with the leading financial institutions in the US as well. So we partner with BlackRock, Franklin Templeton, Apollo, and have tokenized their money market funds and credit funds on the Aptos network.
So it sounds like the difference is more user-driven versus more asset-driven, perhaps, from Asia and the West. What about you, Nick?
Well, I think at Base, we are trying to build a global on-chain economy, and Base obviously has been very US-centric in the first years or first couple of months of its inception. We are now expanding into APAC, and I think Annabelle, you hit the nail on the head where you said Asia is very, very diverse. And part of building like an on-chain economy, I look at countries and I'm always thinking like, what does the country excel at, right? And I think to understand that, you really need to understand like the population, the demographic of the users. And so in some countries like Korea, crypto adoption is really already very high. And so like in that case, advancing regulation will turbocharge just adoption, right? But in more populous countries like Indonesia and Philippines, like we look to those countries for user adoption to drive consumer growth. And then obviously there are countries like Singapore, Hong Kong, Dubai, where these are cities where capital raising, service providers, these guys are strongest. And in Malaysia, they're really good builders. And so that's the way we look at how Asia pieces together into building a global on-chain economy. And so at Base, like one of the things I do is, based on what I understand about these countries, try to piece together strategies to help Asia grow.
Makes sense.
I think,
and lastly for Nikki,
yeah, maybe just to give a historical perspective as well. I think there's a lot of recency bias, I think, with how people view the blockchain sector. And as you can imagine, over the last 15 months, the US has hoovered up a lot of that mental bandwidth, so to speak, in terms of headlines and so on. And I think to some degree, people have forgotten that there are a lot of countries across Asia, some that have already been mentioned, many others as well, where they've been building in this space since 2015. So it's been a journey. It hasn't necessarily accelerated like a hockey stick or anything like that, but all of the components, both in terms of startups, in terms of broader industry and the financial services industry, regulators and so on, have been working on this for nearly a decade across a range of different markets. And so that will actually, I think, help to accelerate adoption in APAC in the longer term. But I think importantly, whilst the US maybe, again, hoovering up a lot of that bandwidth and the headlines, APAC has continued to build.
Yeah, I think I also see a trend where, obviously following the US regulations, especially around stablecoin, there's a lot more activities out of Asia that's following suit. And I wanted to maybe double click on one specific use case. I know we mentioned financial rails, but what about payments specifically? Because in my mind, that's perhaps the biggest distinction of the Western market. You have very mature payment on-ramp rails versus in emerging markets, especially in Asia, it can be more fragmented or local FX is difficult. And stablecoin can make actual sense. So have you guys done anything payment related, especially in Asia, in APAC? Maybe Nick, you can start first.
Yeah, I mean, just kick things off. I think it's there's a reason that two of the most advanced markets in the world in terms of stablecoin regulation are Hong Kong and the United Arab Emirates. We think about the broader APAC Middle East sphere. And the reason is there's huge trade hubs, as you can imagine. But then important of stablecoin adoption, it's not necessarily, and I think the point was made earlier about apps and how APAC consumers are using particular payment apps and so on. Ultimately, it's a willingness to use a new form of payment because of the value it delivers. Ultimately, it's cheaper, it's quicker, or it's more convenient at the end of the day. Whereas, I think, broadly speaking, because of the better payment rails or perhaps more consistent payment rails in more developed markets, people are less willing to adapt because they haven't necessarily had to deal with issues before. And so for us, what we observe, Hong Kong and UAE, it's happening from a stablecoin perspective because of the trade flows. And importantly, I think the key customer segment is small businesses that deal in cross-border trade. So not necessarily the large, very huge industrial organizations and so on, but small businesses, typically 1 to 10 people that for whatever reason are importing and exporting out of Hong Kong into various regional economies and so on. And for them, again, in terms of the stablecoin benefit, it's just the core of, is it cheaper, faster, or more convenient?
Well, I think when we talk about stablecoin adoption, what does that actually mean, right? Does it mean users use stablecoin every day, to pay for food, to pay for drinks? And if that's our understanding of adoption, we got to think from the merchant's perspective, right? Now, when we talk about stablecoin adoption, everyone talks about USD stablecoins, which is still a large part of the on-chain economy. But in reality, if you want local adoption of stablecoins, then you need local stablecoins, because a merchant selling, like Wantan Mee on the side is not going to accept USDT, USDC, or any USD stablecoin. They want Hong Kong dollars, right? And so you got to start from regulations paving the way for local stablecoin adoption to happen. And then with local stablecoin adoption, we're talking about the mass market here, right? Obviously, all of us here, we use USD stablecoins, but the non-crypto savvy person will not use USD stablecoins. They'll use maybe a HKD stablecoin or JPY stablecoin. And so I think in Asia, we're already seeing budding signs of clarity around regulation. For example, in Japan, JPYC just launched. So I think we got to start from local stablecoins. And in countries where there's a really big need for stablecoins, for example, in Africa, where it's impossible to do business in say, the Naira, where there's 20% FX fluctuations, USD stablecoins have taken off in a very big way. But in more mature markets where local currencies are more stable, we got to have local stablecoins. Plus, I think nations will not want to give up their sovereignty by adopting USD stablecoin. Yeah.
I agree with both Nikki and Nick's point on both business, cross-border trade, and individual use of daily use cases on stablecoin. So I'd like to add on a little bit on the emerging market that we've seen in Asia. So definitely cross-border trade is growing really fast over the past few years, especially in Southeast Asia. And how to make payment, how to receive payment has been challenging. Because in those countries, banking, payment infrastructure can be very fragmented. And tagging to the traditional payment rails usually involve few different intermediaries. And that means you will take a few days to make the fund to reach their final destinations. And the cost could be very high as well. So stablecoin offers the solution to reduce all this intermediary, reduce the inefficiency that we have seen in this cross-border trade business. I think at the same time, it also helps reduce FX, currency conversion risk. And to Nick's point about local currency, when there's a high inflation or currency depreciation, I think that really helps as well. Because in certain markets, business and individual would like to take and get dollar access to ensure there's more stability of the dollar they're holding. And we see there's a strong demand in stablecoin for sure. The stablecoin volume has been scaling on Aptos. So as of December last year, the market cap on Aptos itself is 1.8 billion on stablecoin. And we have all the native support for major stablecoin, including USDC, USDT, USD1, PayPal USD, and a few others. And in fact, we are ranked number 2 for the native USDT activity. Thank you.
Yeah, and I think there's an important distinction as well, right? We focus on payment use cases, but a lot of times we're just looking at stablecoin issuance for now, or being deposited into real-world assets or other yield products. But the velocity is probably what we should be looking at next, especially when you look at blockchain activities. And then next up, I wanted to switch the focus a bit on talking about maybe the institutional landscape before diving into maybe the builder landscape. And wanted to focus on the difference between the Asia markets and the West. From an institutional perspective, you mentioned some, that's already building on chain. Do you feel like they're following the Western institutions, or they have a slightly different risk profile? And how do you feel like the conversation has been so far, engaging them? Maybe we start with...
Yeah, I think there's two aspects to consider. Like I mentioned earlier, I think many markets in APAC have been on this journey since 2015. Hong Kong has been one, Singapore, South Korea, Japan, and many others. But I think what the situation in the US, in terms of the acceleration the US has done, is that it's provided a template, or at least a marker, that even if some of the most conservative markets in the world, like the US, start to shift in terms of their perceptions of Web3, crypto, and broader blockchain, digital assets, and tokenization, then even the most conservative institutions should be looking at moving forward. And this could include, for example, highly conservative banks, even in Asia. So where I think APAC leads from an institutional setting is actually the very unique connectivity that there is between regulators, central banks, and institutional providers, particularly in the financial sector. And that's across commercial banks, asset managers, and so on. And so Hong Kong has been one of the global leaders, and I do mean global, with projects HK Day and Ensemble. Similarly, MAS in Singapore and many others. And I think people forget that those are really unique offerings because they bring all of the different sectors together. And it's really been APAC that has been leading this globally. Others are now copying that model in other jurisdictions across the world. But again, it's this kind of APAC approach to driving this engagement across sectors that wouldn't typically have this type of collaborative approach that's helping to drive the sector forward.
So I think first of all, I don't deal with that many institutions. I think unlike my two panelists here, but I came from banking, and what I can say from my understanding of institutions is institutions don't really have that much of an impetus to come on chain or to adopt blockchain adoption, and they only do so when there is real synergistic need for that. Because institutions they're big, they're revenue generating, they have their own business, and that business is not not primarily blockchain or blockchain related. So in some institutions, like for example, Stripe just launched like X402 payments for agents on Base. Like that could be a big bet that Stripe as an institution is taking on agentic finance, agentic trading, agentic use cases, and therefore they adopted that X402 product. But there are also some local banks, for example, in Singapore, for example, that are maybe not so receptive because they don't see their primary business model as being blockchain related. Yeah.
I think in Asia, we see large number of institutions have been actively engaging and explore in the Web3 space. And I think pretty much is regulation driven. And regulators in the region have been playing a huge part in driving the adoption of Web3 and to ensure there's regulatory readiness for the market through phased progress. And for example, in Hong Kong, we can see there's regime around stablecoin, there's virtual asset trading regime as well, and there's government roadmap around, for example, FinTech 2030. So all of these actually enable the institutions, enterprise, to shape their Web3 strategy and planning down the road. And also, at the same time, EHKD program led by the Hong Kong MA, I think that really helps some institutions to think about what are the use cases they can explore in this program. And Aptos is the only public blockchain to participate in the phase 2 of this EHKD program. That really opens the door for us to engage with some leading institutions in the market, in the region. And through this, we feel there's a strong interest and demand across different institutions to explore different use cases.
Coming up to next question, more builder focused, because that's an important part of the ecosystem. And I would say, similar to user behavior, the builder behaviors is also quite different in Asia versus the West. Are there any interesting behaviors you've observed, the major differences, and maybe things that have surprised your Western colleagues in any sense? If we start with you, Suhan?
Yeah, sure. I think, well, we have thousands of projects built on Aptos. And we do see there's a common theme between East and West, right? Builders tend to have a common interest and focus nowadays on AI and data. And we see the rising demand around these common topics. And actually, recently, we launched a new product called Shelby that's incubated by Aptos and Jump Crypto in partnerships. So you may think Shelby as a 100% on-chain version of AWS. And it serves so well to the AI and creator economy. So actually, the user can access, read, store data in higher frequency with lower cost, with better stability. And it's actually the first of its kind in Web3. 100% decentralized, on-chain, cloud-grade, and we have seen strong interest in the market.
I still think innovation in the US is still probably marginally stronger. A lot of fundamental innovation, for example, or metas that we see, for example, prediction markets or AI, these came from the US, but Asia has been a very fast follower, and we do it at a very high frequency, and we build really quickly. And so I think we are able to take the trends that come out of the West, and we are able to amplify that multifold, just because of the amount of talent density over here in Asia in terms of builders. Yeah.
I think one of the key things that people forget, particularly projects that start in the West, if you're building something that you want people to build on, if you're building a layer, you're building something underlying, you want people to build on it, just make life as easy as possible for those builders, aka translate your developer documentation. It's amazing how much positive feedback you get when you take the time to do that well. Builders love you for it. So.
Yeah, it is understanding different dynamics. I think we have time for just one last question. I want to keep it a bit more general. I'm curious to know, in your opinion, which APAC ecosystem is the most underestimated? Which part of the region or which maybe part of the ecosystem?
Yeah, I mean, so I've got a clear view on this. So, I mean, just to be super clear, Tier 1, absolutely Hong Kong, Singapore. Then obviously we focus on South Korea, Japan, and Australia. I think the #1 most underappreciated market in digital assets generally is Thailand in all of APAC. They've invested so much time and effort in curating all of the different components. Regulators have come to the fore, the laws have been changed, the institutions are involved, and there's a vibrant developer ecosystem there. Like, it's ripe for success. So I'm really excited by Thailand.
For me, I think it's Malaysia. And the reason I say that is, I mean, first of all, in Web2, Southeast Asia's only unicorn, Grab, is founded by a Malaysian, came to Singapore to scale. And then even in the Web3 space, a lot of founders of platforms, they're Malaysian, like CoinGecko, Etherscan, Jupiter, like there's so many to list. Virtuals, you know, I'm sure there are plenty more. And I feel like Malaysians are very entrepreneurial, and they are able to build very good platforms that scale. Yeah.
Well, I think it's a very tough question, even though this is very generic. Well,
your personal thoughts.
Yeah, so in my view, APAC region is so huge, diverse, dynamic, and it's like a growth powerhouse. So I think almost all the market is a kind of underestimated, I would say. There's so much growth that to be seen across various markets. And we've seen lots of sandbox approach projects being driven. So I think over the next maybe 12, 18 months, we're going to see lots of, you know, good projects or regulation being in place. And this is a growth engine for the region.
Okay, we're perfectly on time. Thank you guys for sharing your thoughts. And thanks Consensus Hong Kong for hosting us again.
Let's go. That's cool. Right, cool. Thank you all for joining. Our panel on culture and commerce in Web3 and venture investing in that frame. So maybe quick introduction to myself. My name is Min. I'm the COO at Animoca Brands. We are a blockchain builder and investor, and so we have invested across the blockchain ecosystem, but particularly in culture and entertainment type applications. And we'd love to bring my panelists in, Jason Ma and Errol Chio. They're both working on very exciting and kind of very different ventures from what you see in the majority of consensus right now. I think the meta right now generally is payments, infra, a lot of these type of things. But there are still leaders in the space that believe in the long-term benefits that Web3 can bring to creators and the entertainment space. So maybe start with Jason. Introduce yourself and your project a bit.
Thank you, Min. So my name is Jason Ma, I'm CEO of Open Wave. We're a music tech platform empowering artists to go direct to their true fans through ticketing, merch, exclusive content, and really community. I'm very blessed to be up here because this guy's my real boss. He's our major investor from Animoca. And if anyone's got an investment from Animoca, they're the best. Passing off to Elroy.
Hi, my name is Elroy. I'm the co-founder CEO of ARC. ARC is a network of people that invest and build. So yeah, we basically incubate projects and we allocate capital. Yeah.
Let's start with some kind of historical questions, right? Jason, you started what was originally open quite a number of years ago, like 4 to 5 years ago. We backed you guys back then. You've been through a number of pivots, but you've really landed on this idea of using Web3 to solve for some of the pain points that creators face. Tell us what your original vision was, and then why you ended up with like this music-focused, creative-focused idea.
It's a great question how I fell into Web3. So originally, I was actually building a citizen journalism platform. And at the time, we had started building this UI UX because I was an early investor in Musical.ly, which then became TikTok, and then another company called Triller. And COVID hit, basically. We couldn't make content. And so at the time, Galaxy Interactive was one of our investors, and I still remember Sam Engelbart calling me up, and he was like, Jason, have you heard of social tokens? Have you heard of NFTs? And I think you guys know where this is going. And I was like, no. And he basically explained it, and I was like, okay, well, let me try to test it with a music artist. And so at the time, we met with the management of a rapper who's now in jail. His name's Tory Lanez. Does anyone know hip-hop culture at all? Okay. So when we met Tory, he had apparently shot or not shot his ex-girlfriend, Megan Thee Stallion, in the foot. And he got dropped by Spotify, he got dropped by Sony. And we're like, perfect, he's going to be our guinea pig. So we literally went up to his management and we're like, why don't you make your next music album an NFT? And they were like, what's an NFT? So we're explaining to him that his fans can buy his album as an NFT, and if they bought it, they got access to his unreleased album. And so we minted 1 million NFT albums. We priced them at $1 each. We put 7 unreleased Tory Lanez tracks and 7 NFT art collectibles. We put out a YouTube video, got 10 million views in 24 hours. We did the drop, and he sold 1 million NFT albums in less than 57 seconds. And so literally, he became platinum, made $1 million in less than a minute, and it was about 600,000 transactions, and 80% of them were credit card, but 20% was MetaMask. And that was probably the biggest UI UX headache and disaster I ever experienced chaos-wise. And I'm like, this is insane. Why is like Web3 so disconnected? Like, why does MetaMask not work? Mind you, 2021 is working a lot better now. But at that time, I was like, why is it so disconnected? There's Discord, there's Clubhouse, there's websites, there's all this. And I was like, why isn't there just like a Web3 super app, like a Web3 WeChat? And that's when I went to Galaxy, then to Animoca, and I was like, you know what? I can take this UI UX that we were making for a citizen journalism app and actually turn it into a platform where artists or creators can go direct to their fans, and if their fans actually access the NFT, they got access to their music, their merch, exclusive content, and their community. So that's how Open originally started, and then we pivoted to Open Wave for music artists last year.
Elroy, founder of ARC, probably one of the most well-known communities in Web3, definitely in Asia. I'm a proud member. Talk to us about the origin story of ARC and then what ARC is evolving into.
Yeah, the origin story of ARC was, I think it happened like 2 years before COVID. So me and my co-founders, we were wanting to be part of more of a purpose-driven collective. So internet back then, you mainly had interest-based collectives, the ones you see on Facebook groups, the Reddit, subreddits and all. I guess purpose-driven ones are where they have a goal and objective. So you have, I think Wall Street Bets is a good example. They have shared purpose of toppling the incumbents. I guess for us, our members are usually founders. I think we have about 300-400 founders, investors, market makers, traditional finance, all sorts of people can drive capital allocation, distribution. And the goals of our community is to build dope shit. So we don't just build crypto projects, we also build, we incubate traditional projects as well. I think one of the last companies we incubated this year is a biotech company. But yeah, I guess in short, we started ARC because there wasn't one in Asia, especially a collective that actually creates value. So when we saw that opportunity, we just decided to jump into it.
And how do you think ARC has evolved, right? Originally, this is during the NFT boom. Most NFTs have communities have died off, but there are still some very strong NFT communities like Pudgy Penguins, Bored Apes. But for ARC, it seems even tighter knit than that. So you guys have done a really good job in actually genuinely curating a community that has real leverage, real power together. Talk to us about how that works for you and what you're planning to do with it.
Yeah.
Because you have all these 800 kind of really significant players within the industry.
Yeah, I guess for us, when our members joined our collective, they knew that it was not meant to buy the membership and to dump it for capital gains. I think it's very likened to YPO, where it's very community-driven. People know that you go with YPO for support. I think the most active members in ARC are actually the builders. So I think this consensus, we have 100 over members that flew in. I think last consensus, we had about almost 300 members that flew in. So it's a very different type of a mentality of being in ARC versus being in a traditional type of a Web3 community. But in short, I guess I'll be, and this is not an easy task as well, because I think building a collective, especially a sticky one, where you want them to actually do things together, there's actually just two things you need to do. But these two things are super hard. Number one is you need a very heightened frequency of touch with your members. Number two is that you would need to consistently align their purpose in ARC. So for them, they know that our vision is to be a digital-first institution that is born out of an aligned collective. So it's very similar to what you see in the real world as well. A lot of private groups actually drive a lot of value creation. So for us, we just wanted to bring that online. Yeah.
And Jason, so OpenWave, tell us about it, what it is today, why it's going to be fantastic, and how it's helping artists in utilizing Web3, but helping genuine, traditional artists just grow their business, grow their community, grow their fan base.
Well, first of all, I just want to say that I'm also a proud member of ARC. I think I was ARC number, what number were you? I don't.
Dude, I forgot.
I might have been the first 100.
Probably the first 100, yeah.
But the way I describe ARC, it's a secret society. Okay, it's basically a gang. In Asian terms, we call it a triad, right? And you're here with a triad boss, Elroy Chio, literally. But literally, when I wanted to figure out OpenWave, I would go to Elroy. I would go and hit him up in Singapore and be like, hey, we're trying to figure out our token. We're trying to figure out how to pivot, how to launch, how to reach and build community. And ARC really is a place where you have real founders, real operators, real builders who are actually helping one another, working together, and actually solving real problems and creating real value in the world. And so I just want to say that Elroy's did an incredible job. And Animoca, in many ways, you guys are similar. You guys have this ecosystem of companies like ourselves at OpenWave. So back to OpenWave. How many of you guys use Spotify? Raise your hands. How many of you guys use iTunes? Raise your other hand. Okay. Oh. We don't have Apple lovers here. That's good.
Yeah.
No, but I think the reality is, in the recent year, there's been a lot of reports and a lot on social media how artists are revolting against DSPs or digital streaming platforms. Why? Because they're not paying barely anything. Okay, so last year alone, less than 0.6% of Spotify artists made more than $10,000. 0.6%. Think about that, okay? Snoop Dogg was on a Milton stage about 1.5 years ago, and he said he had 1.5 billion streams on one song, and he got paid less than $40,000 for 1.5 billion streams. Okay, I have a record label called 88 Rising. It takes literally 300 million streams for an artist to make a little over $1 million, and that's before payouts, right? So the point here is this: artists are not making money through streaming. Who's making money? Daniel Elk, the founder of Spotify, multi-billionaire, who's now putting his billions into drone companies, literally destroying humankind, right? And the challenge is, how do music artists who are actually bringing value to these DSPs actually going to make money? And this is where blockchain, this is where generative AI comes in. Right now, artists mainly make money through ticketing, touring for their shows, physical merchandise, and digital merchandise, exclusive content like Patreon or OnlyFans or Twitch live stream, et cetera, et cetera, et cetera. What we built at OpenWave is a Swiss Army knife, one-stop shop where artists can go direct to their fans and sell their album for $10 for 10 songs with a link like old school MySpace and say, hey, support me. But if you actually really want to support me, you can also buy my merch and my hoodie and my vinyl for $100, right? But we make it all automated. They don't have to put up any money, no inventory, no upfront costs. We handle all logistics for them. And they also bundle it with exclusive content and tickets to their shows. So my whole point here is the lie right now, and this is going back to the blockchain Web3 community idea, is you don't need a lot of followers to make money. Okay, that's the lie. I need 1 million followers on Instagram. I need 1 million monthly listeners on Spotify, and then I can make money. Well, guess what? Even if you get 1 million followers on social media, it doesn't guarantee that you're going to make money. What you actually need is 1,000 true fans. How many guys have at least one friend? Raise your hand. How many guys have 10 friends? Okay? How many guys actually have 100 friends? Actually, 100 friends. Okay? Now, if I said to you, oh, you only have 100 friends on Instagram, how many guys realize those are 100 potential real customers? If you get 100 true fans giving you $10 a month, okay, that's over $1,000, all right? If you get 1,000 true fans giving you $10 a month, that's $120,000 a year. So what I'm changing with OpenWave is, hey, bigger is not more. Smaller is actually more monetizable. Smaller is actually more impactful, and that's why ARC is very powerful. It's only a few hundred, but these few hundred are changing the face of Web3 and crypto as we know in Asia Pacific. On OpenWave, if you're an artist, all you need is 1,000 true fans. We give you all the tools to monetize those true fans and actually make a real living and actually build a sustainable career. So back to Web3, I really believe smaller is bigger, smaller is more impactful, and smaller is more monetizable, and that's what we're doing.
Just to take a show of hands, who was in Web3 during the 2021-2022 cycle? Okay, it's a small minority. So just a little bit of history. 2021, 2022 was like an NFT boom cycle, and there was a lot of euphoria about NFTs. But and then obviously we had like FTX and all that stuff, and so the industry definitely suffered a downturn. But one of the things that I think people really underappreciate is the impact that the regulators, particularly in the US, and particularly in the SEC under Gary Gensler, had on the evolution of Web3. So one of the reasons why we had meme coins is because the regulators were like, you cannot issue any kind of utility token. We are not going to give you registration. Your token cannot do anything. So that's how we ended up with meme coins, because meme coins didn't do anything. So they were legal. And this also happened with like NFTs and a lot of the original thesis that underwrote like entertainment investments in Web3. So the idea of entertainment investments in Web3 was exactly what Jason was talking about, which was like, you put in money, like there was a guy called Spencer Dinwiddie, who's an NBA player, who's like, I'm going to sell NFTs in my own contract. So you're gonna invest in my contract, and I'm going to share my revenue with you. And because of regulation, this basically got wiped out. So now we've come full circle with a friendly, like Web3, blockchain-friendly SEC, and real regulation is passing through multiple jurisdictions. So really, we're now in the era. So the genuine thing is, right now, all these guys out there are talking about RWA, so real-world assets, i.e., you can use money on blockchain but buy something with an underlying. And my view is that RWA in entertainment is going to be a huge thing. So, for example, we invest in games. Web3 gaming didn't succeed because of distribution, because the token, originally because of regulation, you couldn't be security, you had to be like part of the game, it had to be like an in-game currency, so there was all these complications. But actually, when you're investing in a game, what are you fundamentally looking for? You want that game to be successful so you can share in some revenues when you're an investor, not when you're a community member. And so one of the things that Animoca is working on is very similar to OpenWave, is we're gonna develop RWAs around specific games, something like a Black Myth. So if you are the publisher of Black Myth and you're like, hey, I did really well with my previous game, I want to raise a round for a game that, and I'm happy to share the revenue back to my investors, that's the type of RWA you can see in entertainment, in gaming, in music going forward. So I don't know how you think about that, Jason. Like, what do you think of the prospect of rev share from in the music industry?
So OpenWave, we saw the movement of generative AI coming around end of 2022. That's when you guys invested and led our Series A. And we knew that generative AI was going to explode. Now, I used an example at CoinDesk Live yesterday. How many of you guys are watching ICE take over Minneapolis on your social media? Raise your hand. All right. And how many of you guys actually got a fake news video that you realized later was fake news? All right. So literally, I'm watching like, you know, these Minneapolis FBI's like, and then ICE, and they're like fighting each other. And I thought it was real. Okay. I literally thought it was real. And I saw like 2 or 3 of these videos only to find out it's false. There's also, you guys saw the Zohran Mamdani, where he's like the son of Jeffrey Epstein. Have you guys seen that picture going around? Okay, the first time I saw it, I literally thought, oh, maybe this is true. My point here is you literally don't know anymore what is real, what is authentic, and what is fake, okay? So what I've been saying, and we've filed a patent for it, is that AI is for automation. It's going to escalate, it's going to automate the ability to create content, create ideas, IP, Suno with music, okay? But how do you actually know if this is actually real versus false? That's where blockchain comes in. And I say that blockchain is for authentication. So AI is automation, blockchain is authentication. You actually need them like the left and right hand, okay? And so what's happening right now with our patent, you can now put, let's say, San Francisco 49ers IP on OpenWave, okay? And then you can actually authenticate that through a smart contract and take 100 49ers logos and images, then tell your community, your 49er fans, you can license this through a smart contract and actually create new physical merchandise or digital merchandise. And then we track who actually has licensed it, who has not, on chain, and we can actually do royalty payouts, all right? And that's where I think the real life use case is. And before I end, I want to pass it back to Elroy, is I really think the 2021 NFT craze, meme coins is over. I just want to say that rest in peace, it's done, okay? What matters now is actually creating value for customers, right? How do customers actually make money? How do they actually get value from the software or the tools that you're building? And I truly think that's what's going to happen with entertainment through community, and that's why I think what they're building at ARC is very similar.
Yeah, I think in terms of rev share and all, like, I think up to now, I still hold the same thesis for building ARC, which is that we were supposed to be a DAO. So meaning that our membership was supposed to be token gated with a fungible token, not a NFT. But I like the high level thesis of a DAO, but
right.
I just don't like the idea of token voting. But for us, for me, I do believe that NFTs are great to build community, culture, and to create some form
Hello,
of
and welcome back to CoinDesk Live from Consensus Hong Kong, presented by Hex Trust, the leader in digital asset solutions. I'm Jen Sanasi here with my co-host, Eleanor Terrett, host of Crypto in America. We just listened to her live show, and we'll talk more about that soon. But first, we are joined at the desk by CoinDesk's Global Policy and Regulation Managing Editor, Nick Day. Nick, wonderful to see you back here.
How's it going?
It's going well.
Yes.
We're now joined by Eleanor. I want to just call out the elephant in the room. We are both in red.
We are both in red, and we did not plan it.
We didn't plan it. We're just on the same wavelength. I love it to talk fashion at a crypto conference. I'm not going to lie.
We're right ahead of Lunar New Year, Valentine's Day. You know, it's
on theme. It's on brand.
Theme.
On theme and on brand.
Also, Lunar New Year, it's the year of the horse, right?
It is the year of the horse.
Okay, that's why I'm seeing horses everywhere in Hong Kong. I was wondering what that was about, and then I realized.
It is the year of the horse.
Year of the horse.
A lot of people are walking around Consensus right now with little stuffed red horses for Year of the Horse. So
love it.
I know. Maybe we can get one at the desk later today. I see some people who are watching us who have their little horses. There, we can see one right now.
Cute. Okay.
Yeah. Okay. There we go. Red horses everywhere. We love it. Eleanor, you just hosted Crypto in America live from the desk. I believe you recorded 2 episodes, but I know you've been running around talking to folks. Talk to us a little bit about how your experience has been going.
Yeah, it's been great. Another great Consensus. This is my first time in Hong Kong, actually, so really feeling excited and happy to be here. It's a beautiful city. I will say the one thing that has not impressed me is the Wi-Fi here, and I know you agree with me because we've been talking about it off stage before I came on, but I spent most of my day yesterday actually trying to find some Wi-Fi to send some podcast files home to the US. I won't bore you with the details, but it was quite a trip. I went to places in Hong Kong I didn't expect to go to. But long story short, never actually sent the files, so we'll see how that story ends.
I hope those files get to where they're going.
Yeah.
The Wi-Fi hasn't been great, you're right, but that is going to be sorted out for Miami. So anyone who's worried about Wi-Fi at Consensus, we're going to have that sorted out for Miami.
Cool.
Nick, what's going on? Since last time we talked, I believe you've been on stage, or what have you been up to?
Nick's been hosting everything.
Yeah. Not on stage today, quite a bit yesterday, but no, just been walking the floor, talking to people, seeing what folks are interested in. It's like we were saying this morning, tokenization is continuing to be a huge topic of interest. U.S. policy somehow dominating a lot of conversations here in Hong Kong, which is, again, not what I expected or planned, but people do seem really engaged, which is always good to see.
Mm-hmm. A lot of news coming out of the event as well. I didn't get to listen live to the announcement from Charles Hoskinson this morning, but I heard a lot of buzz about people standing by the stage waiting to hear what he was going to say. I know that you were tuned in. For folks who are just tuning into our programming now and weren't able to watch it live, what went down this morning?
Yeah, there were two major things today. One is the privacy-focused Midnight platform is going to be launching on Mainnet next month. That is going to be operating as a partner to Cardano, according to Charles Hoskinson. And it's in a kind of closed beta at the moment, but he's announcing a number of tools that people can use to try and test out their privacy, simulate how to be using privacy. He said at a press availability later on that they're really trying to go for your average everyday retail user, not someone who's interested in privacy for its own sake, not your Zcash users, your Monero users, but people who otherwise are just trying to use blockchain stuff, and privacy is a nice add-on for them. The other thing he announced was that Layer 0 is going to be ported over to Cardano also next month. That one, more kind of targeted towards institutions, but we'll see how that rolls out. That's, again, coming in the next couple of weeks.
Mm-hmm. Now, is that a competitor to like a Zcash, or is it going to be not a competitor to Zcash? How is he thinking about this?
So the way Hoskinson was describing it, he does not want it to be a competitor, or he's not at least talking about it as a competitor. He was saying that, in his view, Zcash is for the dedicated privacy, maxis, the people who are, consumed by it, who are focused on it, interested in it for its own sake. Midnight is more for, just casual everyday users if you are just doing stuff, and privacy is a nice add-on, something that, you're not going to go out of your way to deal with, but it's cool to have.
My understanding of Midnight is it's an extra layer, so a layer 4 that can be built on top of any blockchain. So it's interoperable. It's not its own mode. It's a layer that can go on a blockchain that already exists. And like Nick is saying, it enables that programmable privacy. So developers who are building apps for just like everyday users can plug Midnight in and add programmable privacy. So if you need to share data with a third party for a reason, you can program to share just the necessary data in that instance, and then revoke the ability to do that.
Right.
So that's my understanding of how Midnight is going to work. And I guess we'll see how it works when it launches on Mainnet in March.
Okay. Yeah. So not privacy maxis, but privacy.
Well, yeah, not privacy maxis, but privacy.
Yeah.
Privacy is, I think, an interesting narrative to bring into the conversation here, because the conversation has been really institutional. And I've heard from so many of the guests here at the desk and people when I'm walking around that to really get that next wave of institutional adoption, we really need to be thinking about privacy.
Right, yeah.
Because TradFi players are used to privacy. They're not used to all of the information about their trades and about their business being out there. So I think that is going to be a dominant narrative as we head deeper into 2026.
Yeah, absolutely. And you mentioned the conversation about U.S. policy being a big one here. Maybe surprisingly, I was interviewing this morning Mo Sheikh, and he was talking about how he had dinner last night with one of the Hong Kong regulators, and the Hong Kong regulator was saying, that Clarity Act is taking a little while to get through the U.S. over there. He's like, maybe we're going to do something here that, maybe we'll get ahead of the U.S. Who knows? And I was like, is that a scoop? I don't know. I mean, yeah. To be fair, it is taking maybe a little bit longer than we thought. but other jurisdictions are seeing what the U.S. is doing, and they're saying, okay, maybe we can get a jump, and maybe we can, do our own thing. But it's interesting to see what Hong Kong is doing. I think, we've all been here for a couple of days now, but what's your guys' take on sort of like the regulatory climate here?
I want to come
right now?
I want to come back to that in a second, but we all know that you have your ear to Washington. We've heard that clarity should pass soon. Some people are even saying before Memorial Day. Is that what you're hearing?
Well, I think there's a poly market on it, right?
There probably
there's a poly market for everything, or a Kalshi, whatever you say. I think the last time I checked it was like 56%, but I don't know. I don't know if looking at prediction markets is necessarily going to give you the answer that is the correct one, but I think everything is going to hinge around, and Nick covers this stuff very well as well. I think what we're going to see is the outcome of these stablecoin yield negotiations is really what's going to be, sort of the clincher here. And there was a White House meeting a couple days ago. From my understanding, it was another, well, they like to say productive, right, on both sides, a productive meeting. But again, there was no concrete outcome. But I think it was more, solutions driven than the first one. They're probably, there may be another meeting in the coming days, but I think that is really going to be the thing to watch. I think, you're going to have your ethics disagreements, you're going to have your DeFi disagreements, because those are just fundamental things that I think both sides are always going to disagree on. But whether we can come to this stablecoin yield consensus, if you will, between the banks and the crypto industry, that's going to be the thing to focus on. So we'll see. But in terms of timing, I don't know. I hate making predictions.
I know.
We'll leave that up to the bookies, I guess.
I'm always asking for a prediction. That is one of my fatal flaws.
Yeah, girl.
This is why I bought a Magic 8 Ball.
I stay away.
Look, the Magic 8 Ball will have a better prediction than I will, and so that is where I'm at on terms of timing. But I do agree. You're absolutely right that stablecoin yield is this huge fight right now. But once that's done, DeFi and AML, I know that a lot of lawmakers are really starting to get concerned about that.
Yeah,
so that's going to be another, I think, spanner in the works. The ethics thing, we'll see what happens. That it seems to be an impasse. To be fair, the stablecoin thing also seems to be, they're productively at an impasse as well. So it's just a lot of moving parts, and I think that's kind of if the bill does not pass, if it does not go anywhere, it's just, I think, because it's going to be death by 1,000 cuts, that we're just seeing first there's the stablecoin negotiations. Now, once they sort that out, are we going to have to reopen the whole discussion around DeFi and AML KYC provisions for that? If that passes, or they find a compromise on that, is the White House and Senate Democrats going to find an agreement on ethics? And if not, well, back to square one. So,
and what about this innovation exemption that we keep hearing about from the SEC?
Yes, I have heard many things about that.
Yeah.
I hear it's coming. I heard it was coming in January, and I see they may have missed that deadline. So, but it seems to be coming.
Yeah, I think it's just, I think the SEC and the CFTC can do a lot. And you mentioned my interviews before we did this segment. We interviewed Joe Shalom from SharpLink, former BlackRock, and he was saying, I think that both agencies can do a lot, and they can probably pass maybe 90% of the Clarity Act, but the fatal flaw with that is going to be, it's not law. It's harder to repeal a law 5 years down the line when another Gary Gensler comes into office. But, that innovation exemption, I think, will be very helpful. It's just like, when do we see it? I did ask Paul Atkins when I sat down with him, are you waiting for clarity on clarity? Are you waiting for the market structure bill to pass in order to put that into place? And he's like, not necessarily. We have a lot of, jurisdiction to be able to do some stuff in the meantime, but when we'll see it, I don't know.
I know.
Maybe soon.
You brought up earlier that there are a lot of regulators from the region here at Consensus Hong Kong, a lot of people who are attending Consensus Hong Kong, making meetings with regulators, and they're saying that the regulators here in Asia are watching the U.S. very closely. They're ready to move, but they're waiting to see what happens in the U.S. I thought that was a really interesting data point. Nick, are you surprised to hear that the U.S. is leading in that way when it comes to the global regulatory landscape?
I was at first, but the way it was explained to me by some of the folks I've spoken to here is the U.S. is just such a big market that a lot of, regions, a lot of companies are going to wait for that market to open up before they really focus on, kind of the smaller, more splintered markets of, this region of Europe. And so that's part of what's driving it. And then the other side of it is kind of on the same vein, really, but if you're a regulator, Hong Kong, we heard a lot from yesterday from the various regulators who are here about the different steps they're taking, and they're acting cautiously, is I think the way Financial Secretary Paul Chan put it. They are, not really rushing to bring in a groundswell of, number of companies. Everyone's doing. He said they're going to do a small batch of stablecoin licenses. They're doing a high-level framework for perpetual contracts. They're doing, opening discussions on market makers and, platforms. So it's part of it is, again, the U.S. is a huge market. Once stuff happens, it's going to happen in a pretty substantive way, but for also like a lot of companies. Whereas in other places, it's still just kind of, they're waiting and seeing, they're taking their time. They want to make sure that there's no disaster. And the rationale for that, I was on stage with Gibraltar's Minister for Justice, Trade and Industry, Nigel Feedham, yesterday. And his point was, if a disaster happens in a small jurisdiction, that's really bad in a way it might not be for a bigger jurisdiction. So they want to make sure that they get it right and don't risk, an FTX level event in, a small region, small country with a limited number of users.
Gotcha.
All right, Nick, we got to keep it moving. We're going to let you get back to work. We know you're very busy. If you want to keep up with Nick's reporting, you can do that on CoinDesk.com. We're going to take a quick break. When we come back, more from Consensus Hong Kong.
Full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions. Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Welcome back to our live coverage of Consensus Hong Kong. Joining us now on the desk is Nikki Aryasinghe. Nikki is Asia Pacific and Middle East Vice President of Chainlink Labs. Hey, Nikki.
Hi, Eleanor. Hi, Jennifer. Pleasure to be here.
Pleasure to have you here. Now, we were just talking about regulation in the region, and I think there's no better guest to have to kind of take us to the next step. I know that you are working with multiple regional regulators, working pretty closely with them. Talk to us about what we should know about regulation in the region.
I think there's two key things. One is it's important to remember, regardless of how progressive a particular organization or region may be, at the end of the day, it's all about balance. So when you think about a market like Hong Kong, and you think about how deep they are in financial markets over multiple decades, it's that learning that they're bringing to digital assets, to tokenization, to crypto. But I think what's exciting for us is that, and I made this point on stage a little while ago, is that markets in APAC, Hong Kong, Singapore, have really been the global leaders in driving the interaction between regulators, central banks, and financial market participants. That's actually really rare. Obviously, there's been a lot of momentum out of the US in the last 15 months, but in APAC, we've been doing it for 10 years. It takes time, of course, but I think that model for engagement is really there.
We were talking about how some regulators here are saying that they are looking to the US for some guidance, not guidance maybe, but more of a signal on sort of where we're at over there. Are you seeing that as well as sort of maybe like a, maybe a litmus test, if you will, of kind of like.
Absolutely. I think in two key ways. One is in terms of regulators, I think just given the impact it'll have on financial markets generally, as you can imagine, most particular organizations, regulators in this region are looking for that as an indicator.
Yeah.
At the same time, I think one of the key insights that we have, having worked with a large range of central banks, commercial banks, asset managers, FMIs from around the region, is that the shift in the US has actually also been a shift for highly conservative institutions in this region, who may not have been willing to engage, or for various reasons, of course, but now can then internally can point to what's happening in the US to say, well, if the US can do a full 180, why can't we?
Mm-hmm. Give us an example of that. If you can't name names, you don't have to, but give us an example of a TradFi organization that moved quickly once they got the signal from the US.
Yeah, I mean, look, can't name names, but I think just to give you some examples in terms of the shift in terms of internal decision making. So we had a very, very significant financial institution bank in Southeast Asia that I was meeting with middle of last year that was saying, Nikki, we've previously stayed away from stablecoins, conservative, risk averse, et cetera, but given all the shifts in the US, they were then having to answer the question internally at board level, what is our stablecoin strategy? So for those of you who may know how those institutions work, that means that there's a lot of analysis being done at the highest potential levels, and a decision is going to be made. So that may or may not include actually issuing a stablecoin or catering for stablecoins. But the point is, it's gone from a innovation project to the highest possible levels within that organization. And I think that will start to play out in more and more organizations across the region.
Yeah. For stablecoins as a broader category, do you see that interest ramping up here in the Asia-Pacific region, maybe Hong Kong specifically?
Hong Kong absolutely is the standard bearer globally. I think it's been tremendous. And I think it's important to understand why that's happening as well. Like I mentioned, obviously, very progressive regulators taking a very balanced approach. But nonetheless, ultimately, the customer demand is there. So I think one of the most underappreciated customer segments when it comes to stablecoins, obviously the big focus always tends to go to crypto trading and so on, but there's actually a very high use of stablecoins on a percentage basis in the region by small businesses that do cross-border trade for whatever reason. And ultimately it comes down to very, very simple things, again, which people forget, which is it cheaper, is it quicker, or is it more convenient? And therefore they're using it. And I think Hong Kong is one of those markets, and obviously the expectation is that licensing will begin with a small group earlier this year. The United Arab Emirates as well is another key market as well that's proceeding as well. So we're expecting, again, that will start to proliferate in other markets.
Mm-hmm. There's a story on CoinDesk this morning, came off of one of the stages here at Consensus Hong Kong, talking about the United Arab Emirates, kind of coming for Hong Kong's lunch when it comes to regulatory progress. If you look at regulation in the UAE and regulation in Hong Kong, talk to us a little bit about that race.
Yeah, I mean, look, what's fascinating, I think, I've been involved in this sector since 2014. What's fascinating is when you talk about races, people tend to think about companies, but absolutely particular nations, particular regulators are in a bit of a race as well. But I think it's important to contrast and compare what is actually happening between those two markets. So yes, absolutely, Hong Kong has been very progressive. UAE is starting from a much smaller base. It's important to understand as well, it's more of a nuanced discussion, but there are different jurisdictions, there's onshore and offshore from a legal standpoint and so on. But I think more broadly, there's two really interesting aspects. One is, I think, and I genuinely think that from a Hong Kong perspective, people forget how big this market actually is. People look at population, but I actually made the point late last year on stage as well, where actually the Hong Kong dollar is the 10th most traded currency in the world.
The second?
The Hong Kong dollar is the 10th most traded.
Okay, wow.
But the population of Hong Kong is 6.5 million people, right? So my point is, Hong Kong's economic impact globally is far outsized of its population. From a UAE perspective, there's two interesting aspects. One is they are playing catch up. They're taking a very progressive approach, which is fantastic. There's obviously a lot of regional trade, but most interesting, at least based on the clients we work with, one of the most popular corridors for stablecoin trade is between the UAE and Hong Kong. So I think partly, yes, I'm sure there is some competition there, but partly it's also cooperation as well.
We keep hearing that 2026 is the year of institutions. Obviously, we're only about a month and a half into 2026, but do you see this as a trend that's going to keep playing out that way?
I mean, it's going to accelerate. I mean, I am also always cautious about those statements as well, because I think we've been saying that since 2016. But I think more importantly, there's a huge amount of learning that's accumulated across these industries. And quite often when people think about blockchain, they think about technology. But I think one of the most exciting parts is to think about the people as well. So the example like I gave earlier, where people are interacting with the technology or thinking strategically about the technology, is very, very important. And these institutions, particularly large ones, banks, asset managers, and so on, have been interacting with the technology, been analyzing the technology for many, many years. So that will actually start to compound, and as regulatory environments become much easier as well, become more supportive, that will actually start to accelerate. So based on what we're seeing, actually the thing that I'm most excited about, and just to kind of give a real example in relation to what's been happening over the last 18 months, obviously there's been a big focus on tokenized money market funds. Yep. BlackRock has been the first, Franklin Templeton, we work very closely with UBS Asset Management, for example. But what we're seeing now is, okay, what do I do? What can I do with the tokenized money market fund on-chain? Mm-hmm. Can I use it as collateral at a DeFi venue like Aave Horizon, for example? And we see those types of use cases accelerating in 2026. And from our perspective, we think those types of use cases are what going to accelerate adoption from an institutional perspective.
Nikki, thanks so much for joining us at the desk. It was a pleasure having this conversation.
Absolute pleasure. Thank you very much.
That was Nikki Aryasinghe, Asia Pacific and Middle East Vice President of Chainlink Labs. We're going to take a quick break. We'll be right back. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Welcome back to our program. Our next guest joins us now, Binance's co-CEO, Richard Tang. Richard, welcome to the show.
Thanks for having me.
Thanks for being here. Now, I think you are in an interesting position to carry on the conversation that we were just having at the desk. We were talking about regulation in the United Arab Emirates versus regulation here in the Asia-Pacific region. One of the stages yesterday kind of insinuated that there's a little bit of a regulatory competition between the two jurisdictions. Given your background, I'd love to hear your perspective.
Well, competition is good. Of course, I helped develop the Abu Dhabi global market way back in 2015, right? So I think now it's a very thriving financial center. I claim some credit on that front. But if you look at it, Binance has decided to take its global license at ADGM now. So meaning, other than the 21 different jurisdictions that we are regulated in, right? Spanning from Japan in the east all the way to Latin America, our global users that are not licensed on the local jurisdiction are afforded the protection, the governance, the safeguards, compliance of Abu Dhabi global market. So I mean, given our numbers continue to grow very rapidly, we went for 170 million users at the beginning of 2024 to close at more than 300 million at the end of last year. We are giving that area of protection to our users, right? So now making us the most regulated exchange globally.
We were just talking about tokenized money market funds as well, and probably one of the biggest announcements that came out of Consensus Hong Kong was Binance teaming up with Franklin Templeton to use tokenized money market funds as off-exchange collateral. So can you tell our listeners who maybe aren't familiar with the announcement what exactly is happening and why this is such a big deal?
Well, it's exciting. So last year we signed an MOU with Franklin Templeton to deepen our engagement and collaboration. And so this is the first, and hopefully of a series of announcements we're going to come up with, right? So in the first instance, what we are collaborating on is an institutional collateral off-exchange program. Franklin Templeton is a global money manager, as everybody will know. So it allows, users to hold on to Benji tokens, Benji-issued money market funds. Use that as collateral, trade on the best exchange in the world with the deepest liquidity, and then custodize off exchange, right? So, what users are afforded with is, you're holding a yield product on that front, and this appeals to institutions, a yield product that's tokenized, trading on the deepest liquidity pool, which over time help, the investors and traders save substantially and safely custodize off the exchange.
Talk to us about the conversations you're having with institutions and build a little bit on the challenge that this new product is solving for them.
Well, so I see a lot of convergence between the Web 2 space and Web 3 space. I just came back from Davos, World Economic Forum in January, right? So every corporate leader, every top honcho of financial institution that I speak to are looking at this space and say that how should we deploy, right? They are Web 2 institutions, we are Web 3 native. So we can help a lot of these institutions, and there's so many areas of collaboration on that front, engagement. You see the likes of New York Stock Exchange, NASDAQ putting all assets on-chain for trading purposes, and that really opens up the universe of trading products for players like ourselves, right? So if you look at it, we started offering precious metals, perpetual contracts, which are really TradFi products. And in the short span of 1 month, the volume just skyrocketed on our platform, right? Because people like to have the ability to trade on the 24/7 basis where they can do proper risk management. Because for precious metals, the information come in at night during the weekend, and you need to be able to hedge your position, take new position, manage your investments on that front. So it's great for any product that can trade across time zones on a 24/7 basis. It allows for algos, money managers, hedge funds to better manage their risk, right? So we see a huge demand on that. And throughout the course of this year, we'll be really expanding the product suite for our users globally on that front. And there are so many conversations that we're having with traditional institutions, helping them with things like tokenization, where it makes perfect sense to put more and more asset classes on-chain to facilitate trading, hedging, investments across the board.
Is this the start of more US partnerships for Binance?
Well, it's global partnership for us. We are a global platform. So, we have conversations in multiple regions all the time. So I think it's just a start, just the beginning. And I think going forward, the momentum is very strong. We see very strong convergence between the financial institution space and the Web3 space. So this is just part of the start of that journey.
We were talking earlier about regulators in Asia looking to the US for a signal when it comes to regulatory progress. When you're talking to institutions, are there any nerves still there, given that we're waiting for clarity legislation in the United States?
Well, especially in our space, they have gone through so much in the past, regulatory unclarity, uncertainty, prosecution unfairly within this space. I think clarity is very much needed, especially in the US, which is firstly the largest GDP economy in the world, the deepest capital markets in the world. So anytime the US come out with legislation and regulations on any areas, it has outsized influence on the rest of the world, right? So if you look at what happened once the US passed the Genius Act, a lot of institutions then jump onto the bandwagon to try to issue their own stablecoins, partner with stablecoin issuers. Corporates are much more willing. And if you look at corporate treasuries now globally, they are moving from traditional fiat channel to stablecoins and crypto. Reason being, if you use fiat channel for cross-border correspondence, it takes 2 to 3 days, very expensive. They have no certainty when the fund is going to arrive, right? So if you use things like crypto stablecoins, it's instantaneous at a fraction of the cost. So all the treasury managers around the world, especially if you need to move funds across the globe quickly, that's the ideal solution. It solves so many pain points, right? And they need to hold much less capital. There's capital efficiency, capital velocity on that front. So that's why if you look at market cap of stablecoin after the passing of the Genius Act, it went up by 50% last year. The settlement volume, skyrocketed last year with that clarity. And hopefully the Clarity Act will then provide the same, because it provides the foundation for all the builders, the innovators, the exchanges, the managers to operate knowing what are the rules that are applicable to them. And innovation can really be pushed forward to take place.
Binance has the goal of onboarding the next billion users, I believe it is, into crypto.
Yes.
Are you guys still focused on that as much as you are focused on making institutional partnerships as well? We know that 2026 is the year of the institution. We keep hearing that. But is that still a focus for you guys?
Well, for us, it's always all engines firing.
Yep.
We are doing different things at different point in time, right? So, last year we have 2 big milestones. If you look at over the course of each of the last 2 years, we have average onboarding of new customers ranging north of 60 million every year. We managed to get our global license at ADGM, making us, and nobody else, if you look at the exchange space globally, none of the other exchanges managed to achieve what we do, right? So it means our global liquidity is regulated, all users are protected on that front. I think it's a claim that nobody else can say it. So we continue to achieve a lot of important milestones as we push forward. So as a platform, we have continued to grow stronger on that front. So we will continue to push forward with global deployment, more licenses in more jurisdiction where it is, sensible commercially to us to do so. And we continue to push out new product classes, new product suite, engaging both Web3 players and builders, as well as Web2 institutions on that front. Yep. So we continue to push on different fronts and different engagement.
People keep asking, where's retail? Where's retail? You said 60 million users every year. I think you're in a good position to tell us where those retail users are.
Yes.
Where are they coming from? What region? What are they interested in?
Well, Asia Pacific continues to be a big growth area, but there are many interesting regions. Latin America is growing very, very quickly, right? But it's not only the retail, right? So if you look at what's happening now, right, with prices somewhat depressed, there's a retraction. Retail demand is somewhat muted. But what we continue to see is very robust institutions and corporate demand, right? Because the smart money likes to deploy in this environment where there's more upside than downside risk. It's a fair game. They started to deploy a lot of money. So if you look at institutional holding of Bitcoin, it stays relatively constant, right? And they actually added more. So about 1.3 million Bitcoin holdings. And then in January, they added another 43,000 Bitcoin to their portfolio. So we continue to see those adding by institutions and corporates, which are the smarter money, right? So retail comes and go, depending on where they think, that's the next hot story. But when you start pursuing the next hot story, a lot of time, you're going in the top. So now from here, the upside potential is much more compared to the downside risk, right? So we see the smart money deploying.
Specifically concentrated in a certain region, those institutions, or is it global?
It's global. So we see very robust onboarding, different parts of the world, different parts of Asia Pacific. The family offices are coming through. You have trust endowments, you have hedge funds. And then Latin America has come about very, very robustly.
Right.
And then, of course, Middle East region, also we see a lot of new onboardings. So we see different pockets of very, very strong demand coming through.
Richard, I know you're going to be on stage here at Consensus for a fireside chat. What's the message that you want to tell the audience here at Consensus Hong Kong in that discussion?
Well, I think just a word of encouragement. I think Hong Kong has great ambition for the future. It wants to be a crypto hub. I met several policymakers and regulators throughout the course of these 2 days and urged them to continue to push the agenda because we need better clarity, better regulation, and they are in a position to really push forth Hong Kong as one of the crypto hubs of the world. Hong Kong is really an international financial center, so it's all the prerequisites to do so. And every time new jurisdiction push forth with the crypto agenda, everybody benefits. On our front, we look forward to onboarding the next billion users. We look forward to pushing through a lot more new products for our users on that front, and we are grateful for their support.
What's the timeline? I know Eleanor mentioned the billion users. You mentioned the billion users. I think you might have given me a timeline in the past, and I don't remember it. When do you expect to fulfill that goal of 1 billion users?
It was supposed to be yesterday. No, but seriously, I think what we can do is to make sure, with 300 million users, we are, a big financial super app of the world now, right? So what we need to do is to continue to push ahead the journey to really offer things to our users to what they want. The Franklin Templeton partnership is just one of the many things, because if you look at user base, VIPs and institutions have different needs from the corporates, have different needs from your from your accredited investors, sophisticated, and different from retail, right? So we need to cater to different part of that value chain and come up with different product suites with different features. So we are working very, very hard to listen to our users to give them what they want.
Okay, so some years?
We are working very hard.
Okay, Richard.
Should be sooner than later.
Richard, thank you so much for joining us at the desk. It's always a pleasure.
Most welcome.
Thank you.
Thank you.
That was Binance's co-CEO, Richard Tang. We're going to take a quick break. We'll be right back. The breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app. Hello and welcome back to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust, the leader in digital asset solutions. Our next guest is the Chief Stablecoin Officer at the Kaya Foundation. John Cho joins the desk now. Hey, John.
Hey, how are you guys? Thanks for having me.
Thanks for being here. You gave us some compliments when you sat down. We love a guest who gives compliments, so thank you for that. You spoke on a panel yesterday. It was called Beyond the Dollar, the Rise of the Non-USD Stablecoins. Talk to us a little bit about the message that came out of that.
Yeah, no, absolutely. I think, over the past year or so, there's definitely been a lot of momentum around stablecoins, but there has also been a really distinct lack of attention around local Asian stablecoins, which I think is very misaligned to what's actually happening on the ground here in Asia. As I think a lot of people out there realize, basically every country in Asia right now are looking to pass a formal stablecoin framework into law probably this year, right? I think like Japan already has their stablecoin license and framework in place. South Korea is looking to launch their license and framework very soon. So I think 2026, we're at like a precipice where there's going to be a massive liquidity event in Asia focused around local stablecoins.
And what's behind the push there? Is it because they see the US market growing so rapidly and it's kind of maybe a rush to compete, to keep up? What's behind the growth?
Yeah, I think it's a combination of things. Obviously, the Trump administration had a big influence in how the policymakers in Asia, expedited basically their stablecoin efforts. And also, it's just, I think, general, just forward-thinking momentum, because there are a lot of inefficiencies with inter-Asian commerce at the moment. And I don't know if you guys have seen the data sets floating around, but inter-Asian commerce, be it remittance or commerce, has just been increasing steadily over the last few years. So we're seeing this very distinct and very explicit growth in inter-Asian cooperation, but there's a bottleneck around the fragmentation that we see around infrastructure and so on. So I do believe policymakers think that stablecoins and stablecoin infrastructure is a way to alleviate those bottlenecks to facilitate more inter-Asian growth.
I want to talk about local currency denominated stablecoins. Right now, US dollar-backed stablecoins, of course, are global products. With local currency-backed stablecoins, are we going to see a little bit of a competition between the USD-backed and the local currency-backed? And how do you expect that to play out?
Yeah, you know what? I do actually foresee some competition. I mean, ultimately, the USD will always be the dominant currency as long as the US is around, right? But I do see competition in the sense that a lot of the stablecoin use cases that are live right now are revolved around USD-denominated stablecoins. And that's largely because there have been no frameworks or legal guidelines around what local stablecoins can and can't do. But once those are in place, I think we will see a lot of transition of existing stablecoin infrastructure in Asia move to local stablecoins, because there's a lot of cost savings moving to local stablecoins as opposed to using USD-denominated stablecoins, where there is a premium attached, especially for that last mile aspect of on and off ramps.
What would you say, or who would you say, I guess maybe in APAC specifically, is maybe the furthest ahead on the regulatory front? I mean, we hear a lot, obviously being from the US, about the regulatory state of affairs in the US, but for a stablecoin here to thrive, I mean, who is maybe the furthest ahead in this region? Is it Hong Kong? Is it Beijing? Is it another region? Like, who's going to win the stablecoin race on this side of the world?
I mean, so I don't think it's necessarily a case of who's going to win or so. I think all all the countries, like I said, are looking to pass their frameworks into law. But in terms of concentration of like resources and talent and infrastructure, Hong Kong is definitely up there. I've seen a lot of movement shift away from, I have to be careful, but shift away from Singapore to Hong Kong. Definitely Hong Kong is well positioned to become the digital asset hub of Asia, largely because Hong Kong is also the settlement gate for mainland China. I think Hong Kong will come out like pretty strong once all the local stablecoins are out there.
John, thank you so much for joining us at the desk. It was a pleasure having you here.
Thank you for having me.
Thank you.
That was Kaya Foundation's Chief Stablecoin Officer, John Cho. Eleanor, it was a pleasure having you on the desk.
Me
Thanks so much for co-hosting with me.
Thanks for twinning with me.
I love twinning with you. Hopefully we could do it again soon.
Would love to. Thanks,
All
Jen.
right. All right. We're going to take a quick break. When we come back, Leah, Callan Butler, and Jeff Wilser take over the desk.
Full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions. Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions. Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions. Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Okay. Hello, everyone, and welcome to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust, the leader in digital asset solutions. I'm Leah Callan Butler, and I am joined by my co-host, founder and host of AI Curious and the People's AI podcast, Jeff Wilser. Leah, great to be here. And CoinDesk's lead anchor, the gorgeous Jen Sinasi.
Oh,
you're gorgeous also, but...
What a nice little intro. Leah, I have to thank you for my beautiful birthday flowers yesterday.
You were absolutely showered with gifts yesterday, as you should have been.
I didn't mean to make this about me right now. So.
No,
it's still your birthday. It's your birthday in California.
It's my birthday in California still.
Happy birthday.
Thank you very much.
Tell us about it. How was your birthday?
My birthday was excellent. I spent it here at the desk, talking to all the phenomenal people that are here at CoinDesk's Consensus. We had some of the biggest names like Anthony Scaramucci, Charles Hoskinson, Yatsu, who I know you battled.
My nemesis.
Yesterday.
It was a rough. I had the opposite day. I had a crushing defeat yesterday.
I'm so sorry.
That was rough.
We still have time to make up for that.
A lot of therapy I'll need to.
I know. Well, Yatsu revealed here at the desk that he beat you in the robot battle. For folks who are watching at home, they might not know what the robot battle is.
No, can you just like take a step back here? Robot battle.
Yeah.
You got crushed.
Sure.
Tell us.
So yesterday is my honor to host the AI and Robotics Summit. And if you're doing a robot summit, you kind of have to have a robot battle, is what I thought.
Okay.
So
of
we
course,
had
yes, naturally.
Naturally.
Yes.
So thanks to BitRobot, we had a robot-on-robot fight. And the cool thing with these robots were they were kind of semi-autonomous. So you had humans, so old school meat bag flesh people like humans are still controlling the robots. So Yatsu was in one corner, and we had proper boxing robes, and it was a proper fight. We had a 3-round fight, and he controlled the blue robot, I controlled the red robot, and I kind of got my butt kicked, or me and my robot. It was close, but ultimately there was a knockout. We had a dramatic. At one point, the robot was down for like almost 10 seconds. My robot, I'm so proud of the guy. He sprung back up to life and had a valiant attempt to win, but got him in the end. Yeah.
Okay, I see where you're coming from now. It sounds like it could have gone either way.
I'm not saying it was like a moral victory or anything, or that I should have won, but it was close.
From Yat, so what was his version?
Yat just said he won.
Oh,
he said he battled Jeff on stage. This is not a direct quote, but he seemed very happy that he won, and he didn't really do a lot of explaining, which maybe leads me to believe that.
No, I am saying nothing take away from the victory of his. It was hard fought, hard earned. I'm sad my hours and hours of robot fighting training.
I was going to say, you were probably the one who actually trained for it, right? You came into that ready for it.
If you count wasting hundreds of hours as a teenager on Street Fighter as a robot, that's training.
I feel like playing the Nintendo Wii would be the perfect training for this.
I was so sad. I was so disappointed, but I realized my command for fireball didn't actually send a fireball out of the robot, right? My Nintendo controls didn't fully translate. I'm confident, though, in a few iterations, these robots will be unleashing fireballs and all kinds of hell,
too. Yeah, can we have that feature for Consensus
next time,
2027?
Next 2027, it's happening.
Yeah.
Maybe Leah and I will get over there later and duke it out. I don't know if it's open to layman's like us. I think we maybe had to sign up ahead of time.
Next year, we'll get you in there, Jen. Next year.
Okay, well, that was obviously the huge highlight. What else has been happening at the AI and Robotics Summit?
We had what I believe is a consensus record 19 sessions in the day on the stage. And Why? Is that because you were using AI to get them all done? We used AI, we could have had thousands of sessions we should have had. When I gave the opening kickoff speech, kind of my thesis was the space is truly evolving. The kind of this decentralized AI space was a year or two ago still almost all theory, almost all whiteboard. And we're now seeing some actual deployment. We're seeing some adoption. We're seeing some reality. And I think the entire AI world, of course, was shook. And this spread beyond AI into mainstream culture, Moltbook, right? And so what, to me, was so interesting is how Moltbook crystallized the real questions that we'll need to figure out answers to in AI, right? So we have these thousands or potentially millions of AI agents that are all chatting together on a social media site only for agents. And by the way, they're not millions, thousands, but that's part of the question.
Yeah.
How do we prove what's real, what's fake? What are puffery numbers and what are real numbers? At one point, Moltbook said they have 1.6 million AI agents, but we also know there's an instance of one agent registering 500,000 times. So
bad agent.
Kind of like Twitter, right? People saying, here's my thousands and thousands of Jeff Wilsers on Twitter. So that's a question we need to figure out how to answer. How do we know what's real in AI? And what technology, though, do we know is really, really, really good at helping to figure out digital identity, digital proof.
I know.
Any ideas?
I know. Blockchain.
Blockchain. Yay. And so
always comes back to blockchain on this desk.
Yeah, absolutely. So I think there's real potential and merit there to the idea of can a decentralized AI cryptographic solution help solve these problems, but there are also so many challenges to make that a reality. How does that kind of gain adoption in a mainstream way? How do enterprise companies use that? And those are the questions we were exploring. And
I have a question for you on that, though, because I was interested to know, we're here at Consensus. Obviously, we all are blockchain converts. We're very subscribed to the decentralization ethos.
We're pilled, yeah.
But you are running this AI Curious podcast, and I know that you've got a lot more exposure to the people outside the blockchain bubble. Do you think that the people outside Consensus understand how important a decentralized AI future is?
It's a great question, and I think there is a real irony here. So I have kind of almost literally one leg in each of these worlds. I have a general interest podcast called AI Curious, and a podcast more focused on decentralized AI called The People's AI.
Right.
And it's interesting, I think, and notable that you have so many crypto folks who are saying, clearly crypto needs AI. It's fair to say, I don't think it's true. In a mainstream AI world, you have all these AI scientists saying, we need crypto.
Exactly.
We need blockchain.
What about when it comes to payments and transactions?
Fair question, and I think there is a ton of potential and possibility in the idea of agents that are, to your point, Jen, the kind of classic Web3 argument is, hey, we know agents will be transacting together. We know they'll be buying and selling. Isn't it obvious that the payment they'll use is a digital native currency? My response is, maybe, could be, but imagine you're a, quote, Web2 company. You're United Airlines. And you have some AI agents that's trying to buy plane tickets. Kind of classic example of an agent doing things. Are you going to trust a cryptocurrency for your AI agents, or are you trusting Visa in Visa's solution? And so I don't know. I think it's a hard question, but I think it's one the space needs to, if we want this to get taken seriously, if we want adoption, we need to figure out how to make this palatable and trusted to enterprise partners. And I think it's a big challenge this overall Web3 AI, decentralized AI space is reckoning with. How do we actually make this work for the Web2 companies? And that's, of course, the far bigger chunk of the pie.
We have a guest coming on shortly who I think will help us really deep dive further into that. So I'm going to stop you there because you don't use up all your best material yet, Jeff.
That was it. I'm out.
Jen, I wanted to ask you, you've interviewed so many people on this desk over the last, 24 hours or so. What were some of the highlights or biggest surprises?
Oh my gosh, I mentioned a few of them. We tried out a new format at this Consensus where we employed a little bit of a late night TV format. We invited guests to join other guests that maybe wouldn't usually be on a panel together. And we had some really great conversations. Two of those happened yesterday. We had Charles Hoskinson join Ding, who is the founder of PancakeSwap and also the founder of Predict.fun. Ding was pseudonymous person until about 2 or 3 months ago. And Charles is a famously public person who gets on stage at Consensus dressed like a McDonald's employee. And so it was lovely to see the two of them together and the two of them to engage, both obviously very intelligent and both very focused on building real innovation in the space. So that was great. And then we had Anthony Scaramucci later, like I mentioned to you earlier on, and he was joined by the Degen, leverage trader, the Wizard of Soho, both from New York. I would say Anthony's probably a little bit of a degen at heart, both from maybe different ends of the financial TradFi spectrum, but what a lovely conversation we had. And that's what I love about Consensus. People who you don't usually see together, get together IRL and have interesting conversations, talk about solving interesting problems. And so those are my two highlights.
No conference has more characters than Consensus. Hands down, full stop. It wins that easily. Totally agree.
Absolutely, I agree. Well, Jen, it's been so good to have you with us, and happy birthday again for yesterday.
Thank you so much, and thank you for my flowers.
Of course, I'm glad that you had a great
Happy birthday, Jen.
Thank you.
All right, we're going to take a quick break, and when we come back, more of our coverage live from the floor of Consensus Hong Kong.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
From Consensus Hong Kong. Our next guest, Sam Sumrimp Kim, joins us now. He is the co-founder of GoChopper, a firm that is focused on the digital asset evolution in Korea. Sam, it's great to have you here.
Great to be here. Thanks for having me. Just a little correction is not just Korea. The product is actually global based. So it did start from Korea, but now we're in the frontier markets, covering Indian Ocean, Africa, and other parts of the world.
Well, let's start there. Give us a little bit of context. If no one's heard of GoChopper before, what is it? What do you do?
Sure thing. So GoChopper, we're a fiat on and off ramp. We're Africa-centric. However, we go where there's mobile money and there's need for fiat being on-ramp and off-ramp. And so basically, we're an infrastructure play. We've been developing for about 2 years, and we are waiting to receive the virtual asset service provider license from Kenya within this year.
Okay, interesting. So we hear a lot about crypto adoption in Africa, right? I think it's a great market for that. But what's the number one thing that a GoChopper user is doing with stable coins that they just simply could not do with money in the local country or a bank? I guess beyond the obvious.
Sure thing. So with stablecoin, as you know, with the facts, there's been a huge rise of stablecoin adoption in Africa. We've seen some crazy numbers. We actually had to do a double check to check the wallets to see if those numbers are correct, and they were correct. We've seen a huge adoption of stablecoin because of the destabilization of the fiat. A lot of the local currencies are devaluing 20 to 30% every year, which means if you're holding on to that cash, within 3 years, your asset is getting closer to zero.
That's horrifying, right?
That is
and it's
horrifying.
difficult for people in Western markets to understand that, I think, yeah.
Yes, but this is a real life situation for them. So for them, paying a premium for stablecoin is an obvious option. And so we've seen a huge rise of stablecoin, not just in retail, but also for businesses. For businesses to settle B2B, especially when they're doing exports and imports, it's more reliable to use stablecoins rather than the old system of the banking system. So basically we're banking on the huge rise of stablecoin, but then with that, there's been a roadblock because a lot of the fiat currencies does have to pay a huge premium to buy or to be on chain. So we're on the bridge, providing a cheaper service for the people to have access to on-chain activities.
So can you walk through the mechanics of that? Are people actually using stablecoins to merchants directly? Is it a store of value that then goes to fiat to merchants? Kind of what are the actual mechanics and the use cases of how stablecoins are being used in Africa right now?
Sure. The current use case is more the second, which is store of value, because they want to protect their assets, which is devaluing 20 to 40% a year. However, because now they're very comfortable of storing their assets in stablecoin, they want to start using this as a method of payment, method of saving, method of lending. So I would say we're now moving into the next phase of stablecoins actually being used in real life world.
To what extent is regulation part of that equation in Africa? What's that? I think a lot of our viewers won't have a good clarity on that landscape and context. How would you describe that?
Sure. So Africa is probably the last place where we don't have a lot of the regulations in place. However, Kenya has been a bellwether, and they've just passed the VASP license last year, and they'll be giving out licenses this year. So that, I think, is going to be the main driver for other countries in Africa to pass the law, to pass the bill, the VASP bill, and have companies operating under the government, not control, but government transparency.
I know compliance is really important to you, right? I've seen you talk about compliance from day one, but do you think being heavily regulated actually helps you onboard and win over everyday users, or is it more about being able to secure institutional partnerships?
So that's a very critical question, and something that we've been debating within ourselves for about a year. And we came to a conclusion that in the future, being compliant is going to be more helpful to grow our business. And the reason is, and the key reason is because a lot of the crackdowns will start to happen from the government side.
Yeah.
Then you mentioned the institutional side. For us to work with the banks, we do need a license to work with the banks, and we do need to unlock a lot of the capital that's been locked in the banks for a very long time.
So to address the elephant in the room, the recent market activity and price action, do you have any sense of how that has impacted adoption in Africa? If it's a store of value, I think the average person who's not already kind of crypto savvy might just have this naive thought, oh cool, it's going to stay the same or go up. If they happen to get into this when Bitcoin was twice the value of what it was, now it probably still is not as sharp of a loss of value as natural inflation, but does that have, we like to say often, oh, price doesn't matter, it doesn't really matter, but
yeah,
it doesn't
it at times?
Yeah.
It does matter, 100%. And to your point, I think the sentiment-wise, there's always a huge rise in sentiment when the price is going up versus when the price is correcting. However, and this is the reason why we're seeing a huge rise demand for stablecoins over Bitcoins or other alternative coins. So in the beginning, when we started this 2.5 years ago, Bitcoin was about 50 to 60% of the average portfolio. Now it's only down to 10%. Stablecoins, on the other hand, is about 80 to 90% of the portfolio. So we're seeing a huge rise of preference over stablecoins over Bitcoins or Ethereum.
We're running out of time, but just as a final question for you, seeing as though I think you've got amazing perspective on Africa, but also Asia,
yes.
And given that we're here in Hong Kong, what do you think is one thing that people are getting right about stablecoins in Asia? Maybe Africa should even learn from.
I think that's a very, very critical question. And I think overall, I am Korean. I live in Korea, but I have projects all over the Indian Ocean. I feel like the gap is getting closer and closer, and I feel like I feel like the whole Indian Ocean part is getting closer to each other.
Yeah.
And the only part that was lagging was obviously the capital transactions, remittance, payments, savings, lending, etc. And with the help of blockchain, with the help of the technology and fintech, I think we're seeing a shrinking of that with the distance. And in the future, we'll see a further rise of demand for stablecoins and other blockchain coins as well.
That's all we have time for. I'm sorry, Sam, but thank you so much. That's been super interesting.
Great, thanks for having me.
Best of luck.
So that was GoChopper co-founder Sam Sorimp Kim. We're going to take a quick break, and we will be right back.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
About that.
Are we?
Oh, everybody's back now. Let's bring in our next guest. Hasib Qureshi, managing partner at the crypto venture firm Dragonfly, joins us now. Hasib, welcome.
Thanks for having me.
So you've been rather quiet on the internet over the last week, not much happening?
Yeah, I try to keep it down whenever there's a lot of argument going on online.
Yeah. I can see that you don't really sort of jump in. Obviously, there's been a lot going on. So let's, as Jeff likes to do, let's address the elephant in the room. I would love to chat about this. So you've been having a conversation with Chris Dixon.
Yes. Conversation might be a strong word, but yes.
Yeah, okay.
There are words on both sides. We can agree about it.
Technically words on both sides. Yes.
Now, I might get this wrong, but here's my sort of, in a nutshell, of what you've been chatting about with Chris Dixon at A16Z. So basically, people are saying that non-financial crypto use cases for crypto are dead. And Chris is sort of saying, like, maybe they don't get the thesis or they don't know what stage we're at, but the order of operations matters, and we're still kind of establishing the need for infrastructure. And I think his big thing is that, scams, the lack of regulation, have really impacted progress. And new technologies, they really need regulation to thrive, but this is going to happen over a long period of time. You had a different view. Do you want to share your view?
I would love to share my view.
Okay, go ahead.
Obviously.
Tell us your view.
So, look, I have a lot of respect for Chris, and I have a lot of respect for what A16Z has done for the space. But I think it's kind of time to call a spade, right? At a certain point, do you really buy the story that the reason why Web3 gaming failed was because of the regulators? That's why Web3 gaming failed? It wasn't that the game sucked. It wasn't that nobody wanted to play any of it. It wasn't that we didn't actually create anything that people wanted.
Well, I think
the number one rule of venture capital is the customer's right.
Yeah.
The customer's right. You never argue with your users, right? But it feels like this is exactly where the A16Z protest is coming from. Is that, oh, no, it was the regulators. It was the scammers. It was all these other people. It wasn't the fact that we built the wrong thing.
But I think your good point, too, is that, well, the financial use cases would have failed, too, if that was the case.
They also had regulatory incursions. They also had scams. In fact, the biggest scams in our industry, FTX, Celsius, Terra, they were all financial in nature. And that's exactly why the regulators had the biggest spotlight on the financial stuff.
Yeah.
The gaming stuff, and on many regards, they were mostly left alone. How many big gaming takedowns were there? There were some, but it wasn't nowhere near the center of the bullseye for what regulators were paying attention to. And a lot of it was happening outside the US anyway.
Yeah.
So all that is to say, I think the much better explanation is that crypto is about money and finance. It's always been. That's what Bitcoin was about. That's what Ethereum was created for. That's what almost everything that's worked in the space, whether it's DeFi, whether it's NFTs, whether it's RWAs, whether it's stablecoins, smart contracts themselves, the idea was programmable money. That was the idea. That's in the Ethereum white paper. So I think it's a pretty clear straight line, what crypto has been about. And it's mostly VCs and thought leaders that tried to abstract the ideas of crypto to a bigger audience because it sounds really cool. Everyone wanted to, I wanted to believe it. But we have to grow up and we have to learn from, we spent so many hundreds of millions of dollars, billions of dollars, funding these things.
Yeah.
And we had great entrepreneurs, fantastic people, incredible teams trying to prosecute this idea. Did we learn anything? If the answer is no, I think that's a mistake.
Where do you see AI fitting in that landscape? Because you mentioned that only finance, not gaming, not other applications.
Yeah.
And I believe you're bullish on many decentralized AI projects. How do you see AI in that puzzle, and where is there a home, and where does it make sense, where does it not make sense?
Yeah, so to be clear, I think the concept of decentralized AI, it's really not clear whether that's going to be a thing. And right now, we haven't seen a lot of traction for decentralized AI in the sense of, okay, I trained this model in a decentralized setting. Do you care? Right now, the answer for most consumers is no, I don't care. I actually didn't even ask.
The product is what matters.
Exactly. People really care about AI. They really care about ChatGPT. They really care about Claude. They use these products every single day. If these people don't care, when are they going to care? Okay. Now, in decentralized inference, it's even worse. Because decentralized inference means, okay, that's running in a distributed network. That means it's really slow. So every single token, it takes a second for the next token to come out because it's happening in a decentralized network as opposed to in a centralized data center. People don't, it's not even a conversation of whether people will use that. Now, the concept of AI agents using crypto, that is clearly going to have a there. And we're already starting to see it with things like Moltbook, with things like OpenClaw, with formerly known as ClaudeBot. We're seeing, we just had a colleague yesterday who was setting up their own OpenClaw for the first time. And they have their little Mac Mini, and they connect it up to their Gmail, they connect it up to their GitHub. And the first thing the OpenClaw asks him is, hey, can you give me some money? Because of course
the first thing I ask anyone also.
Yeah. The first thing your kids will ask you. Because of course it knows that money is the universal API to opening every single door and doing anything you want to, right? And so it's not going to be long before we are giving our agents money. And if you think about it, how is an agent going to economically interact with another agent? Are they going to use fiat? Are they going to use the banking system? If so, how are they going to pay taxes? How are they going to do AML KYC? How are they going to fit into any of the regimes we have built around the centralized fiat system, whereas crypto was in a way already made for machines. It's ready-made for AIs to use it.
Playing devil's advocate for a moment there.
Yeah.
If you're a, quote, Web 2 company, if you're an airline and someone's AI agent is trying to buy a flight from you, are they more likely to transact in some cryptocurrency or through some rails, some agentic rails that perhaps a Visa or a TradFi company built?
Yeah. So look, if you are buying something on behalf of your human, for the human to consume, very likely you will use traditional payment rails. Right? So already on OpenAI, you can buy things through Shopify, you can buy things through Etsy, and that just connects up to your credit card, and it won't even let the agent do it without you. It will always ask one last, please confirm that you want this thing to be bought, right? So for the big labs and the big companies, they're going to have these agentic workflows that use credit cards and use traditional payment system, right? The real question is, what happens when an agent wants to pay another agent, right? Agents are going to be rational economic actors the same way that we are. They're going to engage in gains from trade the same way that we do. And those agents, imagine that there's somebody else here whose agent your agent wants to interact with because they know something that your agent doesn't, or they have a skill that your agent doesn't have, right? It could be that your agent tries to figure out how to replicate that skill. But that's really hard. And maybe it'll take some time. It'll cost you tokens. You'll have to burn your own money in order to figure out how to be as good as that agent is at this task. The way that we solve this as human beings is we just pay them, right? Well, agents will be no different. They will pay each other. And so your agent will pay that person's agent, but that person's agent is a Hong Kong agent. So how are you going to pay them in fiat? Well, naturally, crypto is the way that you're going to solve this. And if you're using the traditional payment system, traditional payment system moves at the speed of humans, right? There's payments disputes.
Yeah.
You have to sign, all the stuff that is subject to the traditional legal system. All that stuff is built to run at human speed.
And human scale with larger amounts.
Exactly.
Micropayments are very difficult in traditional payments.
Exactly. So it may well be real microtransactions for a very, very small task that it's more efficient for your agent to ask another agent to do for it.
Well, speaking of microtransactions and impressive transactions per second, Mega ETH has had a very big, amazing launch this week.
That's
Congratulations.
right.
Do you think this is going to unlock more use cases? And I guess if anyone hasn't heard of Mega ETH, maybe you want to give them a little bit of an intro.
Yeah, well, so Mega ETH, they've been innovating a lot in the capital mechanics behind their raise, right? So one of the things that people were very intrigued by was this KPI-driven token launch, right? Is the idea, normally what happens is launch your blockchain, launch your token, both happen at the same time, it's a big party, right? What Mega ETH is doing is they're launching their blockchain, but the token only unlocks when they hit certain KPIs.
Right.
And the idea, of course, is the zeitgeist right now is that there's too many tokens, there's all this token slop, people are throwing stuff out there even when it's not baked, when nobody wants it, there's no product market fit. They said, okay, we hear you. We're only going to let our token float if people prove that they want it. And if they don't want it, no token. So I think they're very bold in the choices that they're making, even the way they did their fundraise, where it was almost entirely community-driven, and in this ICO that really almost a traditional book-building process, where they had a bunch of people register for the ICO, and then they picked who is actually aligned with what we're doing, and who's not.
Okay.
And so it's not just, okay, money gets in, it's a race to get in as fast
How
as you
did they
can.
do that? How did they assess the
My
reputation
understanding is that
and
they looked at
contribution
your
value?
socials, they looked at kind of your vibes, they looked at what you've done in other blockchains, and it's the same thing. As a VC, I'm used to this. Is that I get picked based on my vibes, based on my socials.
I like looking at the vibes as the main criteria. It's amazing.
Exactly. I'm like, if you're talking about democratizing finance, let's democratize the whole thing.
Yeah. Interesting. Okay, well, based on everything that you've seen, what hasn't worked and what is working, you got any massive predictions for 2026?
Massive prediction. I don't know if I have massive predictions.
Okay, small predictions.
Medium predictions, yeah.
Small. Three small
look,
ones.
I mean,
instead of one big
already
one.
my predictions have not aged well because I did not expect crypto to be down this much in just a couple of weeks. I will say I think that we're going to end the year higher than we started. And already that might feel like a bold prediction.
That's. I mean, we're starting from a low benchmark.
I mean, well, no. We started at 90.
Yeah, okay, fair.
So it's no longer a low benchmark.
We'll end higher than 0.
Yeah. I predict we're not going to 0 this year.
Thank God.
Look, I think that a lot of the here's what I really think. Look, there's been a lot of despondence in this market. A lot of OGs quitting. A lot of even like sort of quiet quitting, or people who just like they kind of give up. They're selling their tokens. They're going long AI stocks or whatever. I think what you're going to see is actually the entrance of a new generation into crypto starting this year. And I think this generation of crypto is going to be animated by seeing how crypto gets used by agents. They're going to be the people, probably very young. They don't necessarily have a credit card. And so they can't hook up their AI agent to their credit card and have it buy stuff. But they can get their agent to use crypto to do stuff that their parents won't allow them to do.
The agentic generation.
Yes,
I love
the agentic generation. I think every generation of crypto, the old guard needs to get lost, and the new guard, who's more optimistic, who's excited about the new use cases, and who have a fresh set of eyes and fresh set of narratives, needs to come in and take over. That happened with the ICO boom, where everyone before that was like, oh, these are all scammers. ICOs are BS. Ethereum is terrible. All the Bitcoin maxis, they kind of needed to shut up and go away for the ICO boom to take over and for the new generation to come in. And then after that, the NFT boom was a new set of people, totally different from the ICO people, right? And the DeFi people. And then again, with meme coins, a totally new generation of people came in and animated that cycle.
Yeah.
I think we're waiting now for what that next generation is going to look like, and I bet it's going to be at the intersection of AI and crypto.
I actually think you might be right. Even here at Consensus, I've made so many new friends this week. I cannot believe how many people I've met that have said it's their first Consensus, it's their first year in crypto.
Really?
Yeah, so I think this might actually be a litmus test for your theory.
Okay, I like that.
Sadly, that's all we have time for. Thank you so much, Haseeb.
Thanks for having me.
Thanks, Haseeb. That was Dragonfly's managing partner, Haseeb Qureshi. We'll now take a quick break, and when we come back, more from Consensus Hong Kong.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Joining us now at the desk is Trisha Wong, the CEO of Advanced AI Society, and Anand Iyer, who is the Managing General Partner at Canonical Crypto. Welcome to you both.
Thank you.
I wanted to start out with a general vibes check. Anand, what's been your highlight of the week so far? When I say week, I mean the last 24 hours.
Which
but it
feels like
a
10
week.
years.
Yeah, 20 years in crypto time. Yeah.
Yeah.
It's either
yesterday or 20 years ago. It's like somewhere there. It's been great. It's been great to connect with a lot of folks who are here from out of town. I like the more one-on-one. I feel like this day and age, that the fabric of like meeting someone and spending time with them is getting more important. So I really enjoyed just reconnecting with friends here. That's been a highlight.
And how about you, Trisha?
I think it's always interesting to be at a crypto conference when it's a downturn, because you're like, oh, the people who are here and who it attracts and the kind of conversations you have. So I feel like this year, especially with this very moment, it's been counterbalanced for those who know with the Moltbot and Moltbook moments. So it's like you have some of the, one of the worst years on crypto on hand, but also you have one of the most exciting moments to be an AI, an agentic AI. And the whole reason for why we need crypto. So I think those two things combined are the exact narrative that is shaping this moment of what's going to take crypto through this market and AI.
And you were speaking at the AI
exactly.
and Robotics Summit,
I thought that was the most exciting stage of the entire conference.
Oh, go on, Trisha, go on.
Crypto and AI, decentralized AI coming together. Like, what else is going to make crypto bigger? It's going to, actually, we're going to solve all the problems of AI. Seriously.
Well, one of my favorite moments, personally, was both of you two. I'm honored and pleased you're both on the AI Summit stage and shared some real insights. Trisha, you gave a speech on how to sell decentralized AI to enterprise. And we heard other guests here today saying that might not work. But you're saying, hey, it's an uphill battle, but here's a playbook. Can you talk a bit about what your speech was and kind of the insights you shared on what decentralized AI should do to kind of be more palatable to enterprise?
Yeah, this moment with Moltbook and Moltbot is so important, because what it did is really emphasize to the enterprise. It was like this gift sent from heaven, a simulation of saying, this is what, if you want to have agentic orchestration, if you want to scale up your AI infrastructure, you're going to need to have moments of provability. You're going to have proof of control. Not just control, because if you leave it up to the enterprise and the hyperscalers, they're going to find a way to control their orchestration, but they're not going to actually have proof, which is mathematical, cryptographic, mathematically tamper-proof solutions. And that is what decentralized AI offers. It uses all the best of crypto tooling, a blockchain, cryptography combined together, and you build that into the new kind of AI infrastructure. You're going to actually see that this is the new category of technology. So in my talk, what I argued for is that proof of control is a new foundational layer of the AI economy. It's a new set of technologies. And the reason why we call it proof of control of the advanced AI society is that in order to sell it to enterprise, the number one thing we need to do is use the language that they want to hear, that makes sense to them, which is for the CISO, for the CIO, for the board, for the CEO, they're going to say, we want control. We don't want to lose risk. We want business continuity. You don't want to sell them Web3, and this is how open source won. So I was really trying to get the audience to see that we've done this before. Open source is now the default, where it was unfathomable at one point that open source, or even cloud, would be the default. We're going to go off-prem. Any CISO would have been freaking out. But what they did was, there was a whole movement to say, hey, it's okay, it's safe. And so that's what proof of control is, the beginning of that effort, to say, we don't sell, crypto in by calling it crypto or Web3. We use the language that works for the buyer.
And Anand, I surprised you on stage yesterday asking for an impromptu game of over and under, of where is a space over-indexed and where is it under-indexed. You've now had 24 hours to reflect upon that. Any other thoughts on where would you say we have maybe too much energy and too much hype, and where is there not enough attention in your minds?
Yeah, I'm still surprised by this question. So I haven't thought about it any more than I have yesterday. So look, I think we talked about the simple rubric on why something is over-indexed is because how easy it is to build and how easy it is to get out there, right? Just this day and age, it's just really easy to build software. There's no moat there anymore. So we have started to prove that we can do a few things just by slamming a few things together and getting that out there. And to me, maybe the pinnacle of that was something like maybe just general purpose marketplaces. They're like, hey, let's just aggregate some GPUs and try to solve the problem of the GPU shortage. I think that's an example of something that's been over-indexed. I think utility-driven processes, where we can actually put things to work that we haven't really focused on. So we'd like to see more of that. There's a lot of great technology here, and we want to see that getting put to work in ways that hasn't been done before. So to me, taking an application first or top-down view is probably the best way we can actually put our technology to work, and I think we're under-indexed there.
Quick question. We don't have much time here, and I feel like this is such a huge topic.
We can spend 5 hours on this. I know.
Yeah, we've got 2 minutes. We need 2 hours. But I want to ask you about jobs. I know, Anand, you've talked about this before too. I think everyone's touched on this.
Yeah.
Politicians are in a tough spot, because they're trying to hype up the benefits of the technology while also trying to tell people that their jobs are secure and the future's going to be great. How do you guys see this balance? This tightrope, I
want to remind everyone right now that one of the most high-paying jobs in Silicon Valley is a chief communication officer. Because there's so much AI slop coming out there that you're going to need the people who have actual humanities background being able to communicate the actual signal of all the noise.
Yeah.
And so we're still going to need actual experts. But I think it raises the level. Of course, there's going to be a shift, but I just want to remind everyone that there are going to be certain jobs that are highly in demand, and you have to move with the times. Any kind of time's a great shift. But I think that's always a surprise to people. Like, there's a big demand for people who know how to communicate, who know how to talk to the human, because our thesis, and mine as a sociologist, is that the human becomes even more important in the age of AI, and especially with agentic orchestration, where you're going to have more agents outnumbering humans. So the role of the human becomes very important, and be able to delegate or figure out how do you authorize, how do you know when a human is doing the work? It becomes really key. Now, of course, the nature of the work changes as with any great technological shift.
Yeah.
But the human actually becomes is more centering piece, which is really counterintuitive to this moment right now.
Yeah.
Anand, do you agree, or do you want to debate?
I think there's a when. It depends on the time horizon, and I don't think we have a good answer as to what's going to happen several years from now. But today, this day and age, I think to your point, politicians are walking a fine line, right? Because on the one hand, you cannot not bet on AI as like the big industrial revolution, but at the same time, it's going to be displacing a lot of jobs. So how are you going to come across saying this? All I can say is, I live in San Francisco. A lot of my friends are very technical and code all the time. They're extremely busy now, So they're doing a lot. They're trying to do a lot, and it's not just because, software is trying to eat them. It's because they're like, I've deployed a lot of software, and I thought I was going to be delegating all this work to them, but instead I have to monitor all the work and take it to that next level. So I think there's going to be a point in time where certain jobs are going to ebb quite heavily, and some things, as we are seeing, is starting to get displaced pretty quickly. And over a certain time horizon, that's the TBD. I think we need more than a couple of minutes for that.
And real quick, I think that the main difference in the kind of jobs we're going to see is you see this right now with coders. When Peter Steinberger, who created Moltbot, he talks about how he's now become more of the shaper of tooling of his code. And we're going to see that everywhere. I think over the last few decades, social media and society has turned us into users. We normalize calling ourselves users, like users of user experience and how many users have you acquired. But the big shift is going to be how do you become a shaper, where you start to shape your ecosystem, shape your architecture, because you're going to have much more tooling available to you.
Shaper is the new builder.
Yes, that's the topic of my book. So I've been working on that, is that we all have to become shapers and stopping. If you approach AI as a user, then you are screwed. You are, because the AI is going to treat you as a user, and it's going to control you. Even if you do prompting as a shaper, it completely changes your experience when you use any of these generative products.
It's so true, though. I think, the dream of the Industrial Revolution was meant to be that people were going to get all of this time back in their day, right? They're like, what will we possibly do with all this time? But the more technology comes out, the busier we become. We don't have enough hours in the day. We're losing hours in the day.
Yeah.
Unfortunately, that's all we have time for, guys. Patricia and Anand, thank you so much for being here.
Yeah.
That was Tricia Wong, the CEO of Advanced AI Society, and Anand Iyer, the Managing General Partner at Canonical Crypto. Jeff, full of surprises, Wilza. It has been absolutely fantastic co-hosting with you, but we're going to turn now to one of our stages, and when we come back, Jen Sanassi and Liz Peng will join us at the desk.
What are the most efficient way for me to move money? What are your treasury solutions?
Absolutely. It's like full package of solutions. It's gone into almost like the dirty word of SaaS, right? How do banks buy a system to do this?
Yeah, I think it's what the three of us are all trying to build, right? And to scale.
Yes.
All right, I think time is over. I want to ask you a couple of last very speed questions, like 10 seconds. What is the currently rail of highest value and rail of the future?
Rail of the future.
Yeah. Where you see highest value.
Highest value, rail of the future. That's a good question.
Where do you see
I
flows,
see
global flows?
Global flows is definitely Global South, like as a corridor. Global South trading rails. It's already the biggest trading block.
Michael?
Yeah, so if you talk about real, if you're referring to the activity, business activity, that would definitely the trades, right? The largest trade, we're talking about 400 trillions, where one of the U.S. bank processed 12 trillions per day, right? And then I think the changing of the formulas to try to line up with the subject we have today is that when you really be able to do cross-border trades and then more effective way, the single currency stablecoin would not be sufficient. It's like the two gate on the west and the east that you have to have, for example, like the UAE, you need to have a dirham, and then in Hong Kong, you need to have another stablecoin. This is the only way actually you can mint and burn during the weekend, and then you have a real-time settlements happening. If you rely on single currency, actually would not be able possible, right? But that reflects us that it actually is go against actually the conventional thinking that when trade is only US dollar dominates. I think the magic would come to that, every jurisdictions, if they have enough actually import export or they have a very narrow steppers, they will try to use the local currency. And because of the US dollar have a magical change, I think the value of the asset may have significant change. But I do believe actually gold was still the most valuable in the world.
Buy gold.
Well, it's really difficult time to speak about gold. Yeah, I mean, Asia, for me, Asia and the Middle East is really, the Middle East is just in the middle, channeling so much between, Western and then all this part of the world. So definitely I value. Last one. A CEO that has done the best in payments, trades, in this space in the last 50 years, or a company. What do you think it could that be? Who has done the best job at it? You can say Swift.
Maybe I start first? Yeah.
Who?
Maybe I start first.
Yeah, go.
I think the job will have significant change. Number one, because of the power of AI. Number two, because of the quantum. Number three, the people become impatient. So the best job would be no job.
Whoa.
Well, if you're talking about the past, then I must say it is probably Visa, MasterCard as a payment rail. We don't feel it, but if you speak to folks maybe a bit older, even 15, 20 years ago, and before that, there was no globalization in that sense. The velocity of money has really been exponential.
I agree.
Yeah.
So universal income and the network of the network. I think our role is, to bring it, to become a bit more like the new
Absolutely.
Visa MasterCard. Thank you very much.
Thank you very much.
Thank you.
Thank you.
Thank you.
Testing, testing. Good afternoon, everyone. My name is Tana. I'm from Cognito Media, and we are the official PR partner for Consensus Hong Kong 2026. Welcome to our panel. So for this session, we're going to focus on digital platforms. And we're very honored to be joined by 3 industry leaders representing top-tier firms advancing the digital asset ecosystem. So first, we have David Sedaka, Director of Polkadot's Capital Group, which is the capital markets division of Polkadot, and they're an expert in blockchain investment. In the middle, we have Steve Zhen, Managing Director from Futu, a multi-market fintech platform and a leading retail brokerage. I believe this is a familiar name to many living in Hong Kong. And last but not least, we have Amy Zhang, Head of APAC of Fireblocks, the largest provider of digital asset infrastructure to large businesses. And their clients including BNY Mellon and WorldPay, just to name a few. Welcome.
Thank you.
I guess our theme today is redefining asset access for Asian investors. And before we can redefine anything, let's get an understanding of how do you currently define asset access? Right? What kind of role does your business play in this ecosystem? Perhaps let's start with Dave.
Yeah, of course. Recently we had announced a collaboration with Zodia Custody, and this is a custodial platform that I think first and foremost, it's all about trust and reducing friction for institutions and allocators and investors that are coming into the space for the first time ever. Zodia is backed by Standard Chartered Ventures, so it's a familiar name to Asian allocators and investors. And I think that trust and resilience is important to people. And what we do with Polkadot there is you're able to custody your Polkadot tokens on their platform and also stake the tokens. And this is something that has low friction and access, which is very differentiated to some more of the crypto native access applications, which is through self-custody.
Great. Let's move on with Dave. Sorry, Steve.
Yeah. Hey, hello everyone. My name is Steve from Futu. So the access to Futu, that actually means we give millions of clients the access to the global markets, cross assets. We're not only talking about traditional finance, stocks, bonds, ETFs, futures, options, whatever have you. We're also talking about digital assets as well. So I don't really call ourselves actually a digital platform, but actually I think we're providing a lot of unification of finance currently, right? Think about this, right? You can deposit your crypto into Futu platform. You can trade it for fiat, and instantly you can move fiat to stock and bonds and futures. So I think that gives you the access to different assets and globally traditional finance assets as well as digital assets.
Great.
Amy.
So, hi everyone. My name is Amy. I lead the APAC business for Fireblocks. And in a nutshell, we provide wallet solutions and infrastructure for institutions. So access, first and foremost, ultimately is access to the blockchain, right? You need a wallet to communicate to the blockchain. And that in itself is quite challenging sometimes because blockchains are difficult to deal with. How do you manage uptime? How do you manage gas fees? And the various different operational flow that is needed to make that access easy, secure, and efficient will be the first protocol for us. And then there's access to each other. Institutions needs to trade, institution needs to settle, they need to move assets to and from each other, to and from venues, to and from payments providers, and we help them to make that process easy and get them access to liquidity as well.
Great. Well, thank you all for your introduction. I guess I'm going to continue with Amy because you touched on the institutions and how they approach digital assets. In your experience, right, over the past 2-3 years, let's say, have you noticed any meaningful shift in terms of how they manage digital assets? And if so, what kind of innovations, like be it technological, operational, might have enabled digital platforms like Fireblocks to be able to serve these institutions in a more efficient and secure way?
Absolutely. So when we think about what has really changed in the last few years, there's been a conversion that is happening between what we consider crypto core. These are your exchanges, crypto trading firms, retail fintechs, who are used to operating in a 24/7 real-time with bearer instruments, right? And the conversions of traditional finance businesses, which could be banks, could be PSPs, could be trading firms, and that convergence is happening in a few ways. One, we're seeing an adoption of crypto wrapped in a traditional distribution wrapper. So think about ETFs, options, and so on and so forth. And in that world, actually, the underlying wallets and the underlying asset doesn't really need to move for trading to happen. And then you've got the other way around, where you're seeing traditional assets like money market fund, like money, are being issued on-chain. Then in that world, actually, there is a lot of on-chain activity that you have to manage. So there's that convergence happening from both sides that is changing the last few years. And obviously, for the last 3 years, the ultimate use case that we found in this industry has been stablecoins to facilitate cross-border remittance type of activities. And that has been quite a dramatic change for a lot of our clients, because historically, a PSP will be able to leverage a bank via an API to manage money transfers. But now, if they're dealing...
Hey, everyone. Welcome back to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust. I'm Jen Sanazzi. I'm here with my co-host, Celo's Chief Operating Officer, Liz Peng. Hey, Liz.
Hey, Jen.
I'm really excited to be co-hosting with you. Last time you were at the CoinDesk Live desk, you were a guest. We have upgraded you to a co-host.
Very, very excited, honored and privileged for the opportunity.
All right. We are here at Consensus Hong Kong. We are bringing our audience at home the best of the best. You've walked the showroom floor.
Yes.
Talk to me about your experience.
It's really exciting. I was telling you before, I prefer it to the year prior, which was also just super bustling and dynamic. I think, sentiment is interesting at the time. Currently, right? So I think you're feeling a lot of people just having super productive conversations, talking about what's next and where we are in the market. And so that's been really great. I just got off a panel myself, moderating with World of Woman and Seneca, the artist who's commissioned to create some of the sort of one-off exclusives here. And the narrative has really shifted, and I think we're all aware of that and wondering sort of what's going to sort of shake out and remain, and what's next for the industry as a whole. And I think that's on one hand, sort of, shaky, and on another, really sort of exciting too, right?
Before we bring in our next guest, I have to ask you, so many of the conversations I've been having here at the desk have been very institutionally focused. We did have the World of Women CEO on yesterday.
Right.
But just talk to me about that conversation around art and culture, because it is still happening. It is still a big narrative here in the Asia-Pacific region. Give me one insight that came out of your panel.
I think so. So two things. One, art is always going to remain, right? As a microcosm of culture writ large, it's here to stay. It sort of embodies the human emotion and experience, and the NFT and sort of the tech serves as just a medium which is constantly evolving and changing, right? So that's one. Two is being in Asia and the different sort of behavioral patterns, how people consume, how people communicate. It's very digital first. Everyone understands the super app. So how do we best translate that to the on-chain economy is something that we're all sort of talking about and excited for.
All right, let's bring in our first guest. Rock Kopp joins us now. He's the co-founder and chief growth officer of EtherFi. Hey, Rock.
Hey, how's it going?
Hi.
Not bad. How are you doing?
I'm doing great, thanks.
All right, we just heard about Liz's Consensus experience. What's yours been like?
Yeah, it's been great. I mean, sentiment's down, price is down, sentiment down. I think price drives narrative so much in this industry, for better or for worse. So sentiment is low, but I feel better about crypto today than I have any prior day. I just think things are in a really good position. So there's a lot of really sophisticated capital here, which is great, and there's a lot of really good building going on. So I feel really great about the space where we're at. Hong Kong is always a great host. I was talking to you guys about it, but Hong Kong's a great time. So it's my favorite conference of the year every year, pretty much. So
I love when people say this is their favorite.
Yeah.
I love that. We love compliments
good.
here. All right, let's talk about EtherFi. I want to just talk about EtherFi's journey for a second. Went from a staking protocol into a full stack digital bank. Talk to us about that journey and what EtherFi's value prop is right now.
Yeah, totally. So EtherFi, we're basically building an on-chain bank, and so we can't say the neobank is the actual word. We're not building a bank. We're not a bank. crypto is so driven by narrative. And so when we first were building in the space, there was a lot of narrative around staking, Ethereum staking, Lido specifically, and the amount of market share that they had. And so we started building a restaking product, and we got really good distribution from that. We grew to 400,000 wallets in 6 months or so. And so that was really good. But one of the things that we knew that we wanted to do was build products on top of that. So that was kind of a wedge in and got us good distribution. But we wanted to build products on top of that. So we now have 3 products. We have our stake product, we have our liquid product, which is managed DeFi strategies for USD, ETH, and BTC. And then we have our cash product. Our cash product is a credit card. It's a Visa credit card, and so you can spend in real life. And you can either borrow against your ETH or BTC, or you can spend stables. And so that adoption's been amazing. We currently do about $2.5 million a day of volume, so almost $1 billion annually goes through the card, which has been super, super great growth.
Yeah, tell me about that card. Actually, last night when we were out, I heard someone talking about sort of using that. So basically, I'm able to sort of spend cash that I generate from yield, correct?
Correct, yeah. So we have 2 different modes. We have direct pay mode or borrow mode. If you direct pay, you're just spending stables. And then if you're in borrow mode, you can borrow at 4%, it's a flat rate. And you can either have your ETH staked, or you could borrow from one of our liquid vaults. So the ETH vault is currently doing like 5.5%. Our USD vault's currently doing 8-9%. BTC is doing 2.5%. So one trend that we've seen, people in crypto don't want to sell their crypto,
right?
But they want to use their crypto in real life, right? And so this allows you to hold, not take the tax loss, but still like be able to spend and get the value in real life.
Right. And sort of in talking, and sorry to jump in, Jen, and talking sort of about the neobank sort of positioning, what does that actually mean for the user?
Yeah. I mean, if you think about just wherever you bank or wherever you transact today, we want to do all of that within the EtherFi app. So that's holding assets, that's earning yield on your assets, that's holding productive assets. So anything that you want to do currently with your bank, we want to do that on crypto rails, holding stocks, holding gold, whatever it might be. And that's the vision long term, is just to do that all on crypto rails.
How are you watching what's going on in the US right now? We have the banking lobby against the crypto industry on stablecoin yield.
Yeah.
As you build this offering, I imagine you're watching that and thinking, I wonder if the banks are going to have a problem with this, and I wonder if these big banks are going to come and try to do the same thing, maybe in a different way. How are you watching that, and how are you starting to plan for the future?
Yeah, for sure. I mean, I think that one of the things that's unique about us, we never take custody of the assets. So all users self-custody. And because of that, in the powers of DeFi, we can move quicker and get into more jurisdictions. And a lot of the stuff that is focused now is specifically on people who are custodying assets, who are saying they're not specific, they don't meet certain regulations and how they should be applied. I think in general that the political landscape with crypto will continue to move fast. And so we try to not pay attention to it as much as it's just noise, and just like build a really good product that people love. Everything, we'll go through any regulatory step that we need to, but ultimately we just want to build a product that users love. And so I actually think the next 5 years for crypto users are going to be super, super good, because people are starting to focus on the user and that experience. And I think that'll ultimately be really good for users.
At the beginning of our chat, you said you love being in Hong Kong. Talk to us a little bit about how you're looking at the region. Why is it important for what you're building in your roadmap as we head deeper into 2026?
Yeah, I mean, I think from a capital formation standpoint, Hong Kong is crucial to the crypto industry. And so a lot of original capital for crypto has been here. I think some of it is currently trying to figure out this market and where it is, but to turn prices around, I actually think original OG crypto people are going to have to get this next push going, because people are scared, right? Prices are down, and that's scary. So, but the Hong Kong industry or region is super important, capital formation, and also very forward thinking. So, very big adopters of our card product, which has been super great.
Yeah, I'd love to know too, just kind of going back to, you guys saw incredible growth, as you had mentioned, through the liquid staking product. And how are you thinking about growth with the neobank?
Yeah, for sure. So not a lot of crypto companies think about revenues and metrics to create a sustainable business, but It's something that we really pride ourselves on. So we come from the software industry. We're Web2 founders who've gotten into crypto. And I think that the biggest thing for us is creating a sustainable long-term business. So we doubled revenues last year. We did $55 million in revenue last year. Really lean team, 40 people. And I think there's a path for us this year to do 100, 200 million in revenue. It's really based off of the card growth. So once people start using the card, they get into other products that we have as well. And so you get multiple different revenue streams that flow in from the users.
We had Binance co-CEO Richard Tang at the desk earlier. His goal for Binance is to bring the next billion users to crypto. How are you thinking about bringing that next million or billion users to DeFi? What needs to happen for people to start looking at apps like this and saying like, oh, there is an alternative. Oh, I can put my money to work and it's going to be easy for me?
I think it's trust. Yeah, so it's and that just takes time, right? But each hit that crypto gets where funds are stolen or a scam happens, like it sets us back. So we really are just trying to build trust with our users. We do what we say and deliver on what we say. And so as long as we can earn trust, the retention rate and referral rate of our product is super good. And I think people will understand, once people get into self-custody and get into crypto that's not just trading and gambling, they realize the benefits of self-custody and some of the amazing things that crypto happen where you don't have to, hey, I got to send this check, but the bank's closed at 5 o'clock. You can send it any time in crypto, which is in the modern world, very, very nice.
Brock, it was a pleasure having you at the desk. Thanks for joining us.
Sounds good. Thanks, guys.
Thanks. That was EtherFi co-founder and Chief Growth Officer, Rock Kopp. We are going to take a quick break. We'll be right back. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Hey everyone, welcome back to CoinDesk Live. Our next guests join us now. Ben Fielding is the co-founder and CEO of Jensen, and Lisa Loud is the Chief Product Officer of Ubuntu Tribe. Ben, Lisa, great to have you here.
Thanks. Great to be here.
All right, you guys are on the same panel. It was called AI at the Edge. Talk to us a little bit about some of the insights that came out of that panel. Lisa, we'll start with you.
Well, the main insight we got was that we want to start an AI to figure out how dogs talk, dog language. So that was the main insight.
I love that. We were talking about dogs just before we got here. I adopted a dog.
You did.
And I would love some AI to translate how dogs talk.
Exactly. That's what we thought too.
Very cool.
But we did talk about serious stuff too.
Yeah.
I was moderating, so I got to hear some of Ben's amazing background and the things that he's done. So I'll pass it over to Ben.
No, thank you. Yeah, it was it was good fun, a fun conversation. We tried to make it a bit spicy, so make sure we're getting opinions out there that aren't necessarily just the consensus opinions. I think one of the ones that I hold is just around what's happening in AI right now with like agents and things like that. We've all probably seen like the agentic tools that are coming out that we can use, but in my opinion, the longer term, more interesting kind of aspects of AI are around how they augment what we do as humans. And so we talked a bit about that, and we got some differing opinions on the panel, which was nice. Like, I think I'm in the minority in thinking about that augmentation piece. But yeah, I like the idea of AI as a tool, just like invisibly improving what we do instead of us just becoming task managers of AI models. I think that's going to happen, but like it's less interesting to me. And so we got into that a little bit, which was fun.
I love that. Ben, I would love to hear maybe sort of the core thesis at Jensen and sort of what you guys are sort of aiming to achieve.
Sure, yeah. So I guess the main thesis that we have is just that we want to scale AI to its maximum possible potential, which is probably like, it's a pretty consensus view, like a lot of people kind of believe this, but our view is that you can only do that with decentralized technology.
Yeah.
So the current state of AI with the hyperscalers, they can scale it pretty far. They've like proven that these models are really effective, etc. But if you look back into the past, this typically happens with every new technology in that you scale it vertically first. And so you pour a bunch of cash and kind of resources into one place, and you just see how you can maximize the existing methods like in that one place. And that currently manifests in the way that we train AI models right now. Like you train a kind of single big model in one data center, and you just get it to be as big and effective as it can possibly be. And our view is that that is effective to start, but actually what's most interesting is what happened in the previous wave around the internet, which is when you scale horizontally, you get much greater scale. But you have to build AI in a different way in order to do that. You can't just use the existing models that, say, Meta would put in a data center. You actually have to think differently about the architecture of the models themselves. And when you do that, you can connect up many devices that might have kind of slower interconnects between them. They might be communicating over the internet instead of over data center infrastructure. But you go from maybe having 100,000 GPUs connected together to having millions across the world. And those millions of GPUs then actually scale access to other things like data and information, because at the edge, you get access to the sensors, you get access to the humans interacting with the systems, etc. And so our kind of whole view and thesis is that that scaling will have the biggest effect for AI. And the only way to do it is to connect it up with decentralized tech. And predominantly, that's what we do as a company. And so we build that low-level tech. Like we have a compiler, we have our own execution frameworks in the AI space to allow this to happen and then be coordinated by a chain. But we've been doing it for a while. It's not an easy thing to do, but it's a long-term thesis, I would say.
And Lisa, I think the last time we spoke, you had a different position. Now you're at Ubuntu Tribe. Introduce us to Ubuntu Tribe and how it fits into this conversation.
Yeah, my two positions are very related, though. What Ben is talking about is how to decentralize the infrastructure, and what we've been working on is how, if you decentralize that, as you know, blockchain is transparent, AI is very powerful. Combine transparency and power, and now what happens to our data, right? So even more complicated is the problem of how to secure your data as it's going into these AI models and training them. The more that you pour into these decentralized AI models, the more risk you have of being exposed. At Ubuntu Tribe, we're very focused on, it's a gold-backed token that will be available, accessible to anyone in the world. So anyone can learn, get financial literacy and financial freedom through it. But the main thing that we're focused on is how do we do that and not compromise everyone in the world's privacy and identity. So we're working on confidential infrastructure that allows us to interact with these AI models without giving away our personal information.
This question is for both of you. I mean, I think both of us really understand the problem you're trying to solve, but haven't we already been trained to give away our data? How do we retrain the general population to think twice before they access their LLM every day and ask it how to do the work they're doing or how to make a recipe?
I'm going to jump in there because I have a story. So it's very tempting, right? I have a friend who was in an apartment. There were roaches, unfortunately, and she needed to get out. And I was like, how do we do this? Like, how do I help her? I used AI. I fed it all the information on how, what kind of letter to write to the apartment leasing office. And the AI wrote it. I had to provide it all this information. There was no privacy, but I needed it fast. And within 20 minutes of sending that letter, I got a response saying, yes, we accept your proposal. You don't owe any more rent. And I'm like, this is power, right? So my answer to that is it's very difficult to give away convenience for the sake of privacy. And that's where we are today. So your question was, how do we change that? How do we incentivize people? I think we have to make it as convenient to do things privately as it is to do them with an open AI model.
Yeah, and I guess a question, maybe more sort of normie question here is, you know, it feels really like we're at this critical inflection point when it comes to AI, right? The models are more sophisticated than ever. Agents are spinning up their own subreddit threads, right? And sort of, exhibiting anti-human behavior, for example, right? This sort of surge, as you had mentioned, of things like X402, 8004, ERC standard. It feels like we're at this cliff, and I know you guys have been building here for quite some time. What would you say to folks who are sort of looking at this and thinking, oh my gosh, is my life going to be sort of taken over soon, right? I mean, this is really infiltrating every aspect of our lives and so quickly, right? Whether it's Claude and OpenClaw, what have you. Just curious how you guys are thinking about this and sort of storytelling it.
We were just talking about this.
Yeah, I think it's... I go back and forth on this with how much people talk about what's actually happening, and I think people get carried away with talking about the big changes. And there was something on Twitter earlier today that I was looking at, or on X, which was talking about how much people talk about the tooling versus talking about the actual impact it's having on their lives. And I think that's a good barometer for figuring out, is there going to be this huge measurable change here for somebody, or actually are we all just getting very, very, very excited, which in the crypto space we're used to doing. This is what we do with every single technology. We get really excited. We think about how it's going to change the world in all of these different ways. And then you typically have this kind of excitement then fade down to a bit of oh, it doesn't seem to have delivered. And then you get the kind of upswing again where it's oh, actually now it's making measurable change. And that change actually by that point doesn't feel as transformational as it felt before, because you've already gone through that big hype cycle, and then from there it feels a lot more normal. So I think we're going to go through a similar thing with AI, where actually the way it will impact our lives will feel a lot more natural than we think it will feel. And this is kind of down to my augmentation versus autonomy piece of it feels like suddenly agents are going to be everywhere and we're going to be interacting with agents. I actually think that's going to fade away a little bit, and just the software that we use and the way we interact with technology itself is just going to get easier. And so for most people, I think they'll just realize that actually before it was frustrating to use a lot of technology, like to use a computer, to use a phone, etc., and it's just become less frustrating. So I generally think it's just going to be net positive for most people, and it won't be this huge shock. But that is probably a contrarian opinion at the moment within tech, and specifically within AI, because everybody likes to talk about how suddenly humans will become irrelevant and everything's agents. But I don't actually think that's going to be the case in the long term. I think it's going to be more that we're just less frustrated when we use computers.
When it comes to decentralized AI, I'm curious how you're both thinking about it. Is it something that's going to displace centralized AI, or are decentralized AI networks something that the centralized networks we participate in today can eventually participate in?
I think it's a war at the moment, because there's a huge advantage to controlling the LLM and to having it centralized. Whoever has that centralized AI just think of how powerful Google is today with the data that it has from searches. Now think it's not just searches, it's your whole life, it's context, it's history, patterns, all the things that you do. It's an extreme amount of power that can be monetized. So I don't think that anyone would willingly give up a centralized power source like that for the good of humanity. It's just not how we're wired, really, in our culture. So I don't think that it's going to be a willing thing. I think it will have to be regulated.
Ben, do you agree?
I agree that it won't be willing initially. I don't think regulation is necessarily the way it'll happen. I think it's incentive alignment, like everything in crypto is, or in decentralization is. I think ultimately there'll be a merging of these technologies. I think this idea that decentralized networks will sort of take over and kind of make the centralized companies obsolete is wrong. Actually, what will happen is there'll be certain benefits to a decentralized network that it becomes impossible for a centralized company to ignore, and the local incentives for that company will align in that they get something from participating. I think it's this merging of open source and decentralization, where open source for and this is something we talked about yesterday, for purely altruistic reasons is a very shaky kind of business model for open source to have. Decentralized tech, and particularly the kind of crypto incentives on top of it, can create an actually sustainable open source business model that can transcend companies, but it's very hard to build. And this was again something we spoke about yesterday, that it just takes a lot of time to get that right and a lot of experimentation, which is what what the world of decentralization has gone through. And like we'll probably continue to get it wrong for a bit until we get it right. But ultimately, I think it will become the dominant strategy for connecting together, like the information silos, the data silos, the compute silos of AI. And so it becomes the only logical way to actually continue to build this technology. And it'll have big companies, small companies, individuals, all as part of those networks eventually.
I love that vision. And everything that we've learned over the last however many years in decentralization on how to align incentives can be applied to AI.
Ben, Lisa, that was a very invigorating conversation. I think you brought some nice insights to help our audience understand decentralized AI and where it's heading. So thank you very much for joining us at the desk.
Thank you.
Thank you.
Thanks. That was Jensen co-founder and CEO Ben Fielding and Ubuntu Tribe Chief Product Officer Lisa Loud. Liz, you are leaving me now. It was such a pleasure co-hosting with you. We'll have to do it again in Miami.
Let's see you there.
All right. We're going to take a quick break. We're going to turn to our main stage now to listen into more of our programming from Consensus Hong Kong, so stick around.
1 billion users onboarding. Very, very confident on that front. We see a huge convergence between Web2 space and Web3. The more assets that's put on chain, the better it is for us, right? So if you look at, and actually in the down cycle, it may be counterintuitive to you. Our market share actually goes up, and I can tell you why. So every time that you see market conditions being a bit depressed, sentiments go down, volumes go down, if you're a quant trader, you have institutions, you're corporate, you're retail, you're looking for the best bid-ask spread, the platform with the most liquidity, right? And where do you get that? You get it from Binance, right? Because as I mentioned, we are 5 times the size of the next one. So every time, market conditions are slightly more subdued and depressed, actually our market share actually goes up, right? It may be counterintuitive to you, but that's how, if you think about it, it makes total sense, right? Because people search for the deepest market to trade, as always, right? Whether it's in any market, right? Whether it's equity, commodities, FX, and crypto certainly. But hopefully, we are building for the future, and we hope that the future, the potential, and the price movement will come back very, very soon.
Great. Well, Richard, it's a pleasure to have you with us again. If you can join me to just thank Richard for joining us. Thank you for joining us again.
Thank you.
I'll get you one way or another. I'm gonna see you. I'm gonna meet you one day. Maybe next week I'm gonna meet you. I'll meet you. And if the lights are all out, I'll follow your bus downtown. See who's hanging
the apps on chain people can use. This also is a big number. This is the token launched on different kind of the apps on different chains. Most of them are launched on Ethereum, but some of them is also use now and more use Base, right? Because the price is lower. But you see, we have so many DApps, more than 3,000 DApps. Do you guys know how to use all of them? I don't think so, right? Too many of them. It's too complicated. You need to understand how to use them, what's the function, what kind of assets they have. It's super hard, right? Although it's growing very fast, but for normal people, it's hard to use. So that's why actually I think we actually need another solution to help people to use Web3 to lower the barrier for them to enter Web3. In this way, we can regrow the user base of crypto. So we have an idea. We call it like an intelligent Web3. I'll show you that. So this is another way how you use Web3. So it's based on intent. You can tell the AI what your intention is. So it's an intent-based. You just tell AI what you like, and then AI can handle all this kind of task for you. And the AI can understand all the 3,000 DApps on chain, and they can understand all the 50 million tokens on chain, right? He can help you. So this is the way how we work. You tell the AI what you like, but you need to size the transaction, and then AI help you to solve the problem and submit back. I'll show you step by step. One step is that you need to tell AI what you want, and also you need to choose the validator. Why? Because you don't want to lose your money through AI, right? AI maybe it's okay, but sometimes it's also dangerous, right? So you need to choose a validator. You also need to set up a tolerance, what you want AI to do, what you don't want AI to do, and also you size the intent for AI. You submit to the blockchain, and then AI can find your request from the blockchain, and AI can find the solution. But AI will check if it's under your allowance or not. If it's okay, AI will
the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Hello, everyone, and welcome back to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust. Joining us now at the desk is Solana Company's Executive Chairman, Joseph Chi. Joseph, great to have you here.
Good afternoon. Thank you for having me.
Thank you for being here. How's your Consensus experience been so far?
A mix.
Okay.
Have great sessions. Sometimes I think late in the afternoon, the crowd's a bit dead. They're going to be a bit funny to wake them up, but it's been exciting so far.
Well, that's why you're here, to bring the excitement, to wake these people up, so we end the day strong. We're talking about...
I'll try my best.
Yeah, okay, I believe in you. We're talking about Solana DATs, and I know that you want to talk about how to build the Solana super cycle here in Asia. What does that mean to you?
Okay. I think, well, here in the crowd, and I'm sure all the people watching this, you have two sides of it. One, the TradFi people coming into crypto, and then you have what we call the crypto bros, right? And the crypto bros are the one that carried this whole sector from 10 years ago where it is today, right? I'm very grateful. But last year, I think it marks a turning point, right? I think with the support of Trump's administration, now blockchain is defined as the infrastructure for Wall Street, right? And the TradFi people, especially the major banks, major firms, are coming in a big way. And I think a lot of people are caught off guard, because I think how they look at blockchain and how blockchain should be sort of incorporated into their business models is slightly different from how crypto bros have been seeing it, right? And I think now is a time that everyone should wake up and focus 100% on building real live use cases that's sustainable, that generate more predictable revenues for blockchain overall. Instead of, I'm not saying we throw everything out the door. Whatever business model is still that worked in the past, some may still survive, and some may become great in the future. But now we have to think about what these major financial firms are trying to do and build something useful for them. And whatever useful, at the end of the day, you need users. You need people to use it and pay for it, right? And I think in Asia, because across APAC, we have about more than 4.8 billion people, right? And there's a lot of wealth, trillions of wealth. And if you look at real estate, equity, bonds, there are a lot of major asset classes here. They are big and growing fast. And the reason this part of the world can grow so fast in terms of wealth is because of exports. And most of the economies in China, Vietnam, India, all this, Malaysia, they're all export economies. What happened when you export? You get paid. Money comes back to the world. Most of the cross-border payments have counterparties in Asia. And the wealth accumulation in the last 20 years in this part of the world has a lot to do with exports. The same thing is going to happen with stablecoins, payments, cryptos. The place is going to accumulate more stable coins naturally without having to take an extra step to on-ramp it is going to be here because more and more payments from emerging markets where currency are not stable, South America, Africa, every other country, maybe with the exception of some of the more stable, mature countries, are going to come in the form of stablecoin, even from the US. I think some of the stable markets of the US and other mature markets, a lot of them come in cryptocurrency. So you have a huge accumulation of cryptocurrency stable coins. What do? You need products to invest in, right? And once you have this cash management product, I mean, because most of the people that had crypto in the future are not the crypto bros, are going to be the traditional people, export companies, trade companies, straightforward SME individuals, and they would be looking for things that they're familiar with, like deposits from a bank, tokenized deposit, HSBC, for example, right? Cash management product, things like that, right? So I believe the first billion people that's going to get onto blockchain and start clicking and using simple tokenized cash management products and different kind of investment stocks whatsoever is going to be coming from here. That's why I believe the super cycle for Solana would start in APAC, because just the sheer volume of people, asset, and then the attitude towards a new technology. This part of the world, people adopt new technology a lot faster, including the 7-year-old, 80-year-old moms and pops. And you're going to see this happening a lot quicker than other regions.
Joseph, I was struck by your talk at Breakpoint about 2 months ago. And you mentioned some stats. China, 10 million software developers, 5 million people, STEM graduates every year, 500,000 new high-tech businesses being registered per year. And you were making the case that this is a ripe area for Solana specifically. What do you think it takes to sort of turn that knob on?
I think there's a bit of sort of telling people to come and build here. At the moment, if you look at crypto innovations, and then especially the mass adoption, institutionalization kind of application and business build-up, it all concentrated, I have to say, all started in New York and in the US first, and then it sort of spread over to other places. They're not here yet. If you look at APAC at the moment, people look at crypto, it's still more like a investment, speculation, fund kind of sector. It's not quite at the stage where in the US where the major banks, the major financial institutions are, have built all the, hire key talents, built teams, and have a strategy of putting all the asset onto the chain, whether you use a private chain, permission chain, permissionless chain, you're going to use Ethereum or Solana, you Canton, whatsoever, you're going through that whole process. This part of the world is a few steps behind, right? And if you think about what this part of the world need to do is that you have the focus, instead of just focusing on competing head-on in all this market where it's going intensely, turn around and look at this part of the world. There's a lot of potential, right? And then, you know what? You can hire people to help you build your same thing in the US or in the UK or where you're building at much lower cost, a lot more people that work now, like 6 days a week, 9 to 9. It's over here it's called 996. 9 a.m., 9 p.m., 6 days a week. And at maybe a quarter of the cost you would have paid for talents like that. And I think people are naturally, most of the crypto people, like people who are building, they're not familiar with this part of the world yet, right? They should spend a bit of time here and look at where they should start. And there's a huge market potential here. Plus, and people, there's a natural fear for China. That's why in Abu Dhabi I said, listen, do not be afraid, because the principle in China is very simple. Do not assist in a capital flight. Don't help people escape like money getting out of the country illegally. And two, don't rip off the moms and pops in my country, right? As long as you keep that, you stick to that principle, you're fine. And they just announced about, maybe less than 10 days ago, the securities regulator, CSRC in China, officially said you can use onshore assets and tokenize those and do your RWA crypto businesses outside of China. It's perfectly fine. All you have to do is make a filing with me. They didn't even say you had to be pre-approved. Just file with us, tell us you're doing it, like you're issuing equities and bonds offshore using onshore asset, then you're fine, right? I think that I want to get this message out to all the developers around the world. Pay a bit of attention to this part of the world and come here.
Joseph, we do got to go, so really super quickly, you've just depicted your vision for the future of finance in this part of the world. Where does the Solana company fit into that picture?
Well, Solana company is working very closely with Foundation, is supported by Foundation. We are one of the few US listed debt, and especially the only Solana debt that's had a significant presence here. I'm the executive chairman. I'm here in Hong Kong. And then we are committed to help Solana Foundation to build an ecosystem here. With Solana doing well, I'm sure Solana company will do well.
Joseph, thank you so much for joining us.
Thank you.
That was Solana Company Executive Chairman Joseph Chi.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Hey everyone, welcome back to the program. Joining us now at the desk is Midnight Foundation President and friend of the show, Fahmi Syed. Hey Fahmi.
Hey, how you doing?
I'm doing well. I have a question for you.
Go for it.
Did you consult Charles on his McDonald's outfit?
I did not.
Oh, was it a surprise?
I would have gone Five Guys.
Okay. All right, Fahmi, we're sitting in Hong Kong. We've talked to you in a few different places around the globe.
Yes.
Bring the conversation to the region.
Okay.
How is the Midnight Foundation looking at the region?
Well, we've seen wide adoption in Asia. You think about Midnight as a Cardano native asset, there's a strong following of ADA and the Cardano community in Japan. So we've actually got a Japan manager who's doing great things, not only encouraging that ADA community to think about Midnight and how they sort of bring that attention to Midnight, but also working in the institution in that space. We've got interest in Korea, Indonesia, Philippines. Our ambassador program has been traveling through Japan and now is in Hong Kong. And again, strong interest in the region for people to represent Midnight. And that's been great. They've been coming up to us. So we love that and we want more of that.
Fahmi, there was a lot of announcements today.
Yes, just a few.
Yeah, you guys released a ton. You know, Mainnet, you talked about the city simulation, there's layer 0, there's all this stuff happening.
Yes.
So just give us the, when we first started talking 4 or 5 months ago to where you are now, just like that curve of going from start to here we are.
Yes.
How does that feel, and what are you looking forward to in the months ahead?
Yeah, so when we last spoke in London at the Midnight Summit, we spoke about our responsible approach to releasing Midnight to not only the community, but also to builders, to partners. It started with the liquidity phase, which was launching the Night token, which gives you accessibility and governance of Midnight. That started in December. We've had great success with that, seen good volumes, good liquidity. The next phase is now delivering the mainnet. So that starts with a federated mainnet at the end of March. We're bringing 10 node operators together from large institutions to smaller SPOs who can sort of help launch Midnight in a safe and secure manner. That's Google has been announced as a partner, Alphaton, part of the Telegram group, has been announced as a partner. There's 8 others to be announced. And then the Midnight simulation, Midnight City, was how do you demonstrate how privacy works? How do you demonstrate how privacy works in everyday society? So we created a mini simulation which almost looks like SimCity. Mm-hmm. And in the future, by the end of February, people can start creating their own avatars and participate in the Midnight economy. And all of those representations end up as proofs within Midnight. So we're excited at that because it's hard to often explain what it means. And now people can come and actually play in it.
How's that going to work? If I want to jump in and start interacting in this city simulation, what do I got to do?
Well, go to midnight.city, log in, create your avatar, and then start moving around the city. There are different regions. You can go and participate in different economies within that region using a private stablecoin. And again, proof of that, proof of your dynamics on that, get represented on Midnight.
Fahmi, yesterday you and I had a panel discussion on the main stage. We also had Google with us. We had Alphaton. Brittany was there. I was really struck by the idea that we had Telegram, this kind of new, kind of rebellious social network, sitting with Google and yourself, all of us talking about the need for privacy across the board.
Yeah.
So how did that come together?
Well, I think we all recognize that privacy is a fundamental right. And it's gone from being a feature to being embedded in core infrastructure. And that's Midnight's philosophy. It should be part of your core foundational build. And then on top of that, you build disclosures. So if you think about the dynamics there, you had Alpha to my left, Google to my right. We're bringing that rebellious nature, that sort of privacy-focused element with Google, who, again, hold a lot of data, hold a lot of information. And Midnight was the glue. Midnight is the common theme there in terms of how we utilize zero-knowledge proofs, how we present that in different ways. But the important thing that we care about is that it almost becomes invisible. It should be a feature, part of your core infrastructure that is invisible. So people in the future, whether they're using a Google application, TE environments, a Telegram AI, they don't even know that behind that, Midnight is protecting their secrets, their personal data, their financial data, and then they enable proofs to then represent themselves in those different economies.
We've had a lot of conversations at the desk today with different firms that are exploring decentralized AI to solve the data privacy problem when it comes to AI. Curious to hear how you're thinking about how Midnight might be able to slot in and help solve some of the data privacy concerns with large-scale LLMs.
Yeah, so if you think about even just the new AI models and bots that are coming out, people download them onto their laptops. Then if you've got the AI running, trying to make your life easier, managing emails and things like that, suddenly you've got emails there, you've got invoices with your personal details on. Where's that information going? Who owns that? If you look at the T's and C's of some of these firms, those AI firms say ultimately they get to own the IP. So does that mean they own your identity, your financial information? It's quite scary. So the concept around Midnight and utilizing Midnight in that technology stack is that you can shield your information through zero-knowledge proofs of identity, of credit information, financial information, and other things, even maybe the permissions you allow websites, agents to use, and then that enables you to gateway into different solutions, and yet the AI doesn't have sensitive information that ends up in hands that you don't want it to be. Because ultimately, data protection, data privacy just generally is not about hiding, it's about not being exploited.
I would say this year at the show, we've had a lot of conversation around institutional adoption, sort of how kind of big tech is coming to crypto. You talk about selective disclosures, you talk about rational privacy, really being essential to them coming on chain. How does that practically work?
Yeah, so if I come from 2 decades in the financial industry, and in that industry, I was able to find through my firms price discovery, liquidity discovery, execute on a trade, settle the trade, move margin, all between myself, my counterparty, maybe my broker. Try and do that on any blockchain today. Try and do that on Ethereum. The validators get to choose which transactions go first, and yet they see what's sitting in the queue. So there's a large order sitting there. What does that mean? Do those validators get a peek into somebody's trade? Do they get to go ahead of that trade? Do they then get to trade after that and around that and maximize that opportunity for themselves? It's a possibility. You look at things when they go on chain like Hyperliquid. It's been a great success, and yet every trade that goes on there, people can see. And then you either get them being mimicked, where alpha gets eroded, or people trade against it. That's not how real-world assets and trading happens. So you need privacy, you need ability to put these trades on, manage your assets without people seeing those payment movements, margin movements, and the trades.
Fahmi?
Yes?
What are you going to do for the rest of the event?
Are you going to come dance with me on the yacht?
We're not supposed to tell people that's what we do at crypto events.
Right,
we have serious conversations. We have serious conversations. It's not only about dancing on a yacht. Okay, we'll leave it there. Maybe we'll see you on a yacht later.
Maybe see you on a yacht.
All right.
Okay.
That was Midnight President Fahmi Syed. We are now going to take a quick break. We'll be right back. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Hello and welcome back to CoinDesk Live from Consensus Hong Kong. Let's bring in our next guest now. He's the project lead for USDKG, William Campbell. Hello.
Hey guys, how are you?
Good to see you.
We're doing great. Great to see you.
Thank you, thank you.
Lay a foundation for us. Start at the very beginning. USDKG, what is it?
Absolutely. It's like you said, I'm the project lead. USDKG is an initiative in Kyrgyzstan. Kyrgyzstan is a country in Central Asia. They've been looking to modernize their economy in the last few years. And part of what that means is creating a digital interface for the rest of the world. So USDKG, we're a stablecoin. We're very unique in the sense that we're the first stablecoin ever to be backed by the Ministry of Finance of an entire nation, right? And aside from that, normal stablecoins keep their reserves in, let's say, T-bills or bonds, whereas we keep our reserves in gold. So it's two big differentiators that sort of change the space and change the game for us.
We have a fair amount of people representing tokenized gold here at this event. You guys are sort of standing out with this idea of the stablecoin pegged to gold.
Yeah.
You know, last week I think about just the fluctuation we saw in the metals markets. In the same way that the week before we saw a giant rise.
Oh yeah.
So when people think stablecoin, right, they think this is a fixed asset that $1 to $1. How do you sort of say gold is an equitable way to keep a stablecoin?
No, that's a great question. It's actually one we get a lot. Like you say, gold price goes down. How can we make sure our users trust that we still have that value? So what we do is we over-collateralize our gold with the USDKG. So that means that whenever gold price goes down, we keep that one-to-one peg. And in the case that we would have a very large gold price drop, that's where the Ministry of Finance partnership comes in, and they help us out for liquidity needs while that happens.
Tell us about Kyrgyzstan. What is the demand for stablecoins there? Why launch this? And tell me about how you're thinking about competing against some of the larger stablecoins that we talk about regularly that are USD backed.
Yeah. Well, Kyrgyzstan is still very new in the crypto space, but they started changing their laws, the government, as far back as 2022. So it's something that's in the progress. As for competing with the other stablecoins, our main driver is that we want to bring the trust that possibly other stablecoins just don't have. Right? I mean, who else can say they're backed by the Ministry of Finance of a nation? Who else can say that they're backed by gold? And, you know, let's not forget, or should I say, that the dollar, the US dollar, the Roman coins, all the old ancient coins used to be backed by gold. So it feels natural, it feels safe and transparent that we are backed. So that's really the differentiator. But as for Kyrgyzstan, it is a growing nation. I mentioned the laws that they changed. We now have virtual asset service providers in Kyrgyzstan. So as of 2026, we have 130 near so, and we work very, very closely with them.
There's something I really appreciate about the idea that a nation says, hey, we always want to keep innovative. We always want to push forward. We always want to figure out what works best for us and the good of our people. So it seems like that's sort of the framing of this initiative. Is that kind of in the DNA of Kyrgyzstan itself?
Oh, yeah, absolutely. So I visited Kyrgyzstan for the interviews and for the documentary that we did, and you see that. It's a big responsibility of the government to make sure that the people are involved and they look after the needs of their people. Absolutely.
Talk to us about who the users are for this. Who's going to be using the stablecoin?
Right. It's mainly, for now, institutions, family offices, ultra-high net worth individuals. We want retail, of course, but retail doesn't see the need. Retail doesn't see the need, of course, to change. You know, you use USDT every day. I don't see the need to change that much. But hopefully, as we become a more staple coin, that will change. So for now, institutions, big players.
And then tell us how USDKG is working in the crypto ecosystem. Are you on a blockchain specifically yet? Are you talking with the exchanges about getting listed? Like, give us this.
No, absolutely.
status.
We launched. We're already on Tron and Ethereum, and we're on 2 DEXs, Uniswap and Curve. I can't say too much, but our next step is to go live on exchanges. We're about to release an announcement of a big Hong Kong firm that we're listing with. So that is like our way forward now.
I'm sorry. I just want to follow up with. A lot of people love stablecoins right now in crypto because of all the DeFi that's involved. Is that also part of the plan?
Sorry, could you say that again?
How people use a lot of stablecoins around DeFi, the idea that you can get some yield on what you're holding, is there also that part of the plan?
Yes, absolutely. I would say we're too young for that just now, but it is part of the plan to connect with all the DeFi platforms.
A big narrative at the conference has been regulation, compliance, especially as it pertains to stablecoins across different jurisdictions. Talk to us a little bit about that journey for USDKG.
I feel like there we have a better sense because as we're backed and sort of overseen by the Ministry of Finance of Kyrgyzstan, we have a lot of compliance that goes with us. So we have to maintain a very strict compliance framework. And so when we are able to talk with exchanges and talk with people, we're able to push that trust to them and show them, hey, we go through a lengthy compliance program and we know that we can be trusted and we know that we can pass all those compliance steps when talking to people.
Is there a relationship between Kyrgyzstan, the country, and gold itself? Is there a fair bit
Oh, yeah.
okay.
Yeah. Kyrgyzstan has a lot of reserves of gold. They mine a lot and they keep a lot in their vaults in their central bank, yeah.
We're sitting in Hong Kong. Hong Kong has a mission to become a Web3 hub. Talk to me about how Kyrgyzstan is thinking about Web3. Is there that same desire to become a hub for Web3 and crypto? And what kind of initiatives outside of this one are happening there?
Yeah, so it's funny because we call Kyrgyzstan now the new El Salvador. If you'll remember, El Salvador had this whole push to become a crypto hub. And we have that same narrative with Kyrgyzstan. USDKG is, of course, a big part of that. But the others is the virtual asset service providers that I mentioned, right? So exchanges, 130 companies. So they want to become the next crypto hub. A lot of that is inviting and showing people that they're changing. They're not that old way anymore. They're the new modern technology that's ready to compete on the world stage.
Are you looking at the fact that you're in Central Asia, the country, as Asia's your initial market? Or is it really like launch, let's go global from day one?
No, we need to focus on Asia, and that is our strategy right now. That's why Hong Kong, that's why we were in Singapore. So that is a strategy. Focus on Asia, open as many partners as we can, and when we have a name and we can stand on the world stage a little bit more, then go after all the other big ones.
And what does success look like?
What does success look like? Yeah. Oh, geez. I mean, us on the top 20 exchanges, that's for sure. Entering the European, the American markets, dominating Asia. It has to be. That's our home turf, absolutely. And most of all, and this is, I think, least said, but make the country proud. This is an initiative by the Kyrgyzstan government for its pride and for its economy, you know?
Talk to us about the conversations you've been having here at Consensus. How are people receiving it? What are people saying?
Oh, we've had a lot of compliments on our booth. The most beautiful booth here.
It is getting a lot of attention.
Oh, yeah, the gold bars. People go, kids take photos. It's actually very, very fun. But in terms of the professional setting, I do see a lot of people wanting to talk to us because this is an institutional place, right? Consensus especially. And when you have that institutional backing, the gold backing, we've had a lot of good conversations. Can't spoil anything, of course, but it's been going well.
It's not called spoiling, it's called breaking news.
Breaking news, oh yeah.
William, thank you so much for joining us.
Hey, thank you guys.
Desk.
Really appreciate it. Thank you.
That was William Campbell, project lead at USDKG. We're going to take a quick break now. We'll be right back.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience that percenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Hey everyone, I'm Jen Senesi. This is Sam Ewan. This is Martin Isam. And here we are at Consensus Hong Kong. Martin, you are the newest member of our team. You are our social media editor. You are making sure that we are engaging on social, that we're sharing all of the best moments from Consensus. Talk to us about how you've been experiencing the conference, both IRL and on our socials.
Sure. Well, I mean, it's great to be here. An honor to be at my first Consensus, and it's just been an amazing time. The energy is still here, second day, running strong. Feels almost as packed out as it was actually yesterday. And I don't know if you got into the Tai Chi this morning, got your chi flowing, but that definitely helped me out.
Seemed like I did.
Well, I don't know, you seem pretty composed. But and we got some tarot card readings as well, which people I think are pretty excited to see what their portfolio might be looking like later this year. And everyone online as well seems to be buzzing and saying that this is probably the best Consensus that they've seen, or at least in the last few years. So I think everything is looking pretty positive.
Martin, you're a bit of a degen yourself. You've spent some time in the crypto trenches.
I may or may not have been, yes.
When you walk around the show, you know, this is very institutional.
Yeah.
We're talking with big banks, we're talking infra. Do you think that, you know, we're going to return to that level of kind of 2022 degen culture?
I think, that's a great question, by the way, and I think that we are kind of waiting for a new narrative to emerge. You know, we've had the AI, we had the meme coins, we've had all sorts of things pop up, but I think that's what people are wanting next. Just what's new, what's going to get them excited again, what's going to make them want to participate. And so, yeah, everyone's just kind of hanging around for that moment, I think.
What would get you excited again?
That's a great question as well. I mean, I was always more about the creative side, so music, art, and even gaming as well. So to kind of see a resurgence in any of those areas, I would love.
I mean, you did have an NFT stint as well.
Yep, a strong NFT stint.
We all had an NFT
right,
stint.
We all have a wallet sitting there with frogs or something.
Yep.
Martin, this is also your first time in Hong Kong.
Yeah.
What are your impressions of the city?
The city's a beautiful city, and as you might be able to tell by my accent, I am British, and the fusion of East and West, particularly kind of England and China, is amazing, and quite an experience just to walk through. So yeah, I've really enjoyed it.
The conversation around art and culture, IP, NFTs is one that's being had here, even though there is a lot going on with institutions and infra. Curious to hear how you've experienced some of that. I know that the Igloo folks were on the desk earlier today. There are a few panels that included World of Women and Seneca. How have you experienced that? I mean, you said that that's kind of what got you into the space. That's what drives your interest.
For sure, and I would be lying if I said I didn't go and get a signed print from Seneca yesterday. And yeah, a big fan of her art and the work that she's done, and also just the impact that she's had on the space in general. I think it's been an amazing thing. So yes, I am trying to get involved, as well as still staying on the job and making sure that the content goes out on time.
All right, Martin. Well, you are doing a great job, I must say. Thank you for doing that for us. Thank you for manning our socials. For everyone who's watching at home, please engage with us on socials. Martin is the one behind our accounts. He'll be sure
give you the like and retweet.
To give you the like and retweet. We're going to take a quick break. When we come back, more from Consensus Hong Kong.
Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Hey everyone, you're watching CoinDesk Live. We're coming to you from Consensus Hong Kong, and our next guest is at the desk, Hex Trust CEO and co-founder Alessio Quaglini. Alessio, great to have you here with us.
Thanks for inviting me.
Thanks for being here. Thanks for being the partner for our desk. We've had a lot of great conversations from the desk. Before we get into it, talk to us about what your experience of Consensus has been like.
Oh my God, it's been really amazing. There's a lot of energy. The vibe has changed completely from the previous years, but there's still a lot of positivity. There's a lot of there's a lot of new ideas regarding financial institutions and how this final upgrade of their operating system is going to plan out.
We've been hearing that theme a lot. Tom Farley from Bullish was on earlier. He was saying the same thing, that this idea of really upgrading the operating system of finance is happening finally throughout the world. What do you think was the sort of biggest impetus of it? Was it Washington sort of relaxing the reins? What's your take on that?
I think obviously the regulatory green light, or at least a kind of a more amicable stance, has helped. Obviously, there's also been a few years of adoption of crypto assets that has also brought hundreds of millions of users to the blockchain, to using wallets, etc. But it's also the fact that finally we have found a first use case for blockchain technology that is really addressing one big, huge problems that we have in financial systems, the one of payments, which is $1 trillion problem. And it's a problem that financial institutions, especially banks, have actually kind of, I would say, avoided to solve for decades.
Well, just to follow up, I feel like banks, that's how they made money, right? And then they have people like yourselves and a lot of the people at the show who are saying, okay, but you created friction, you created higher fees. Technology has evolved. We can reimagine that. So as part of it, them recognizing, let's finally step into the future instead of being sort of levered to the past.
It's been until now a monopoly, but a monopoly can be also an efficient monopoly. In this case, we've had a monopoly where basically when I want to transfer my funds from one country to another country, it's not that I know that it would take 3 days. I don't even know how long it would take, and I don't know how much I will pay in fees. So there is the fact of lack of efficiency. There's also a kind of a lack of transparency. And when you run a monopoly for too long, without addressing these issues, then somebody will come up with a solution eventually.
You know, it makes me think about the conversation that's being had in the US right now between the banking lobby and the industry when it comes to stablecoin yield. Of course, you are offering a solution to folks, but you rightly described a monopoly, right? Do you anticipate banks easily participating in this new system, or do you think they'll have to be pulled into the future?
I think obviously they will have to be pulled, but it will be kind of a process, right? Once you have the first ones that probably do not have too much market share, kind of entering this space to acquire more market share, then the other ones, they will have to follow suit. Otherwise, if they don't follow, they will lose market share. So I think it's obvious, the additional efficiency that we have in using stable coins, and in the future, in making also other financial assets as fungible as stablecoin, is so clear that it's impossible that banks will basically not participate in this process.
I'm interested in how Hex Trust solves problems for your partners. You have a tremendous list of people that you're working with, from Animoca, who's here, to IBM. So when they come to you, sort of, what are they asking for?
Well, I mean, really, in a nutshell, we provide two things, and both of them are from an infrastructure perspective. So we provide the whole wallet infrastructure. So when we talk, for example, about stablecoins, somebody will have to provide the wallets, and somebody will have to basically process transactions. Processing transactions not just from an operational perspective, but, for example, from a transaction monitoring and compliance perspective. So that's our first role. The second one is, there is still, stablecoin are still not fully blockchain native. There's still a connectivity with banks. So somebody will have to basically process this kind of conduit between the blockchain world and the bank account. When you want to subscribe or redeem from a stablecoin, when you want to exchange one stablecoin to another, you'll have to use somebody that provides the infrastructure for these transactions to happen.
What are your clients asking for? And also, what questions do they still have about this new infrastructure?
I think the main, what they're asking for is really a solution that kind of hides all the complexity of the blockchain. And it's not just one blockchain. We're talking about 50 blockchains, right? And we have to kind of make assets fungible across different blockchains. And our clients, they don't want to hear anything about that. They just want a kind of an API that solves this issue. Right? And what was the second question?
What do they still need? What questions do they have?
Oh, the question. I think the main questions they still have is one, obviously, about security. There's still kind of a little bit of a lack of understanding of how platforms like Hex Trust and other platforms have actually evolved and how secure they have become. And the second one is obviously compliance and regulation. The moment we touch something like fiat currency, whether it's a stablecoin or not, the moment we touch other tokenized assets, then regulation and compliance is inevitable.
Alessio, I've been focusing on stablecoins for a couple of years now, and a lot of the travels we've been doing have been speaking to people around the world who are seeing the opportunity around this. And I've asked this question to a number of people, but I think you'd have a great insight. I feel like we're not that far away on the horizon when we sort of don't have to go back to fiat, where this exists in digital ecosystems and people are really just transferring back and forth. And so, do you see that as in the next 2, 3, 5 years that fiat starts to take a back seat?
It'll happen. So imagine that right now, as I was mentioning, part of the stable coins are still basically linked to banks. So the reserves are still with banks. The collateral is still with banks. And even more than that, the FX still happens at the banking level. There's really not much liquidity at the stablecoin level. So I think all these services that will have to be brought natively on chain if we want to see this full transformation to happen, and basically for capital to be global, fungible, and liquid across the kind of blockchain communication network.
Alessio, thanks so much for joining us at the desk. It was a pleasure having you on, and thank you again for being our desk partner.
Thank you so much.
Thank you, Alessio.
All right, Sam, are you ready to hear who won the Pitchfest?
I'm excited to hear who won the Pitchfest.
Do you know anything about who was competing in the Pitchfest?
I went and saw some of the presentations, but I'm excited to know more.
All right, we are going to turn over to one of the stages now where we are going to hear
Hello, I'm looking at all of you and wondering if you are ready for the announcement of the winner for this Pitchfest. I want to hear a little cheer. Are you all ready to know who's the winner of this amazing competition? Yes? Ah, there you go. I like that. We have some cheerleaders here for our finalists. And before that, I would like to introduce Brad Spice here on stage to help me give away this prize and also to announce the winner. Here he comes.
Hello, hello, everybody. Can you hear me? All right. Thank you all for being here to the very end of a fabulous 2 days in Hong Kong. I'm Brad Spies. I'm the managing director of Consensus. And I cannot think of a better way to end this great couple of days than to give the recognition and the 20K USD to an incredibly deserving startup. I think as we all sit here among hearing the bears growl, it's really inspiring to see people who have their heads down building and their hearts set towards the future that we all want to see together. So thank you to all of the participants, all of the startups. We had over 240 startups at Consensus, 630 team members. All of the participants were fantastic. The finalists were such high quality. So thank you, thank you, thank you. Thank you to the judges. Thank you most especially to Paula Taylor and Chelsea Lynn who organized the competition. They did a fantastic job. So without further ado, let's do the honors.
Correct, Brad. And remember, we have 12 starting yesterday and 4 today. Right. And I would like to ask our startups to come on stage here, please. Peter, Leon, Alex, Florian, join us on stage because it's almost the moment. There you have them, the 4 finalists. And now, before we do that, remember they're getting $20,000 USD, media exposure, global exposure with CoinDesk, and VIP access to the event. And we went a little roll to know who is going to be the runner-up. And the runner-up is going to be?
The runner-up is Hubble AI.
Congratulations to Leo, you a little shake with Brad, little handshake for the photo.
All right.
And now the moment. Winner. The moment it is the big prize winner. Let's go all in the middle. Let's go all in the middle, please. Are you guys ready?
The winner. Of the Consensus Hong Kong 2026 Pitchfest competition is ZK Me.
Yeah! Alex Chef! Congratulations, please. We have here our other 3 finalists. We come here, we want a big photo with Alex and Brad. You can stay here. Alex and Brad here on stage.
Potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Hey everyone, welcome back. Congratulations to our Pitchfest winner, ZK Me. We are now joined at the desk by co-founder and president of Myriad Markets, Farokh Sarmad. Hey Farokh.
Hi, how you doing?
I'm doing good. I think the three of us need to just call attention to the consensus ad for a second. That's Sam stars in. Farokh,
I
you
do.
just saw for the first
That was
time.
great.
Yeah. I mean, it answers the question, when Lambo?
Yes.
And there
It
was
sure
Lambo.
does.
Yeah.
There was Lambo. We can talk about that more. Farokh, how's your consensus been going?
It's great. Honestly, I always say this. I think, Sam, I've told you this a million times before, but I've participated in a lot of consensus at this stage, from the Austin main stage to Hong Kong a couple times now, Toronto, and it's always one of my favorite events.
A lot of people have been saying that. I love to hear that consensus is the favorite event of folks like you.
You run a great conference.
Well, we love that you're here, Farokh. We had a great conversation earlier. We were talking about prediction markets. You said something that I have been thinking about since you said it. Earlier on the desk, we had Jennifer Ilkew from ICE, New York Stock Exchange, and she was talking about in the poly market investment, part of what they're really excited about is all the data they're going to be able to get on sentiment. Mm-hmm. And then Farokh told this story, which I want you to repeat here, about looking at sentiment and how that influenced a trade you made recently.
Yeah, because I think a lot of people got prediction markets wrong, right? The topic was around insider trading, etc. And a lot of people also just keep thinking about gambling side of it. But the other day, it was thanks to Mando, my co-host of my morning show, and we were looking at the market, right, when Bitcoin was dropping towards $60,000. And then one of the reasons we believe it was nuking was also because there was this threat of an attack on Iran. And so Mando went out to Polymarket, sent a screenshot to the group chat, and was like, guys, there's only a 2% chance of a strike happening today or something, and maybe sub 5% or 10% in the next week. That makes no sense. So the threat is overblown. We should long Bitcoin. So we went long Bitcoin, and then we played the bounce at $70,000, and that played pretty well. So that was a story because if you use prediction markets in that sense to your advantage, I think it's a great source of information.
But you were saying on stage, and I want you to double click into it, which is prediction markets are a great way for people to bet a side of a trade, figure out if they have a little bit of information asymmetry. But your point really was that these are just large crowd information markets that really can inform where society, culture, finance is going.
Yeah, absolutely. I mean, I think, prediction markets are the tell-all of sentiment, of what people feel, think, whether it's good or bad, right? And what they want. And so I actually think that we should lean into prediction markets even more and more. Like you did a great example. It's like, hey, if 85% of people are putting their money on Blackpink being the next Super Bowl, maybe the Super Bowl should pick Blackpink, right? Because that's a sentiment gouge of what the people want. At the end of the day, you're staking your money, right? It's different than just a poll, right? Polls are kind of dead, right? Your Twitter poll just doesn't work. You bought that, but you can't really bought putting money on the platform.
We've been talking a lot about prediction markets. We had Predict.fun here. We've been talking about Polymarket, Kalshi, now Myriad Markets. Do you envision a future where all can coexist, or do you think there's going to be some kind of consolidation?
I think there's going to be consolidation for sure, right? It's just kind of like NFT marketplaces at some point in 21. There was so many of them, and a lot of them died. So first of all, there's going to be a lot of them that are not going to make it over next year because prediction markets take a lot of money to build. They're expensive, guys. And so first of all,
how much money? How much money does it take to build?
Millions.
Okay.
No, literally, it's extremely expensive to run a prediction market because it's capital heavy and liquidity in these markets, right? It's expensive, right? And then I think consolidation is going to happen, but I also think there's so much room for everybody to win, right? Look at exchanges, right? You have Coinbase, Binance, OKX, there's so many of them, right? So if Polymarket's a $12 billion company and Cash is a $10 billion company, I'm happy to settle for third, right? So you know what I mean? So I think there's room for a lot of people to win here.
I remember when you first told me, I think it was 2 years ago, about your desire to go into this industry. Last year, we had a conversation also where you were like, this is what we're doing. Now, having built it for a year, there are a lot of builders out here watching us and at the show. Sort of, what's your advice on just building every day and how you have to bring it?
I mean, it's really hard, I have to say. It's like a lot of people say, oh, why aren't you guys doing this? Oh, I think you should be doing this and that. Oh, look at this person. And so I'm like, dude, I don't want to be like, oh, it's coming, because I hate being that guy. This is because I keep saying, oh, it's coming, it's coming. It's it's so freaking hard. And sometimes it's super demoralizing, because why are this company able to do it? We're not doing it, etc. But you just have to keep putting one foot forward every day, right? And keep trying. Like, this prediction market industry is extremely hard to grow into. It's a new asset class. It's growing extremely fast. And you guys know the state of the market is always up and down. So we are also in like a turbo speed market at all times. So it's just like, I don't know. I guess like for founders, just like you got to keep iterating. And I don't think you also have to like always try to reinvent the wheel. You just have to do something right.
I want to stick on the advice train, right? We're at Consensus. How do you, I guess, manage your time? How do you think about using your time in the most efficient way here, right? I hear builders say a lot, like, okay, I go to a conference, but then I'm not building. There are all these events, but I'm maybe spending too much money. Like, what's your advice for founders who are navigating being IRL at events like this for the networking opportunities, but then also building a platform and making sure they spend their capital efficiently?
I think being present at conferences is arguably what got us to where we are. In 2021, I must have gone to like 30 of them. Like I travel maybe 15 to 25 times a year. And it's always opened so many doors for us. Whether it was Rug Radio and then Decrypt Media or Myriad Markets now, like there's nothing like the IRL. There's nothing like, shaking hands and either making a deal in person or conveying your message, right? Like people get to feel for you, right? Especially in Asia, right? Like I think the Asian culture is also even more on the IRL stuff. So it's everything. Now, obviously, I think you also have to be smart about which conference. Like you got to be like, okay, like for me, Consensus is one I come to, no matter what, no matter where, right? Travel halfway across the world for this one because I know that the 4 nights I spend here and maybe 2 people I get to meet will result in something huge. So you just have to like really calculate which one matters the most and then make the most out of it.
When we had Ding on yesterday, we talked about the idea that sort of the NFT people moved to meme coins, then the meme coin folks now move to prediction markets. Do you think there's going to stay here? You talked about this, the size and scope, especially in dollars for the Super Bowl, for example. Is this just here to stay, or are they going to at some point just chase other money somewhere else?
Well, the difference between prediction markets and meme coins and NFTs is that prediction markets is not a meta, right? Meme coins are a meta, though we're always going to day trade attention. On memes, and that makes sense. NFTs different, was a meta, but it's more of a technology now. It's like underlying asset. Prediction markets are a whole asset class. It's going to be a multi-trillion-dollar asset class. It's going to be traded forever and ever after. You said you had ICE here, NYC, et cetera. I think it's getting like really, really big. So to the point that it's going to be inevitable and a part of people's lives every day. Like I was watching CNBC yesterday here in the room, and for 5 minutes, and what do I see? A Kalshi poll, right? And I'm like, okay, wow. So it's like it's going to be so ingrained in what we do now that I don't think it's going anywhere.
Farouk, it's always a pleasure seeing you. It's always a pleasure chatting with you. Thank you so much for joining us at the desk.
Run it back in Miami.
Let's run it back in Miami. In Miami.
Let's
Get
go.
that Lambo out.
Let's go. You guys give me a Lambo there?
I got you.
All right. All right. That was Farouk Sarmad, co-founder and president of Myriad Markets. We're going to take a quick break, and I think I saw a robot making its way over here. Stick around. We'll see. We'll see if we got a robot with some moves.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Back to CoinDesk Live from Consensus Hong Kong. Joining us now is the president of the BitRobot Foundation, Jonathan Victor. And he's here with a special guest who we're going to see in just a little bit, the Unitree G1. Hey.
Hey, thanks for having me.
Thanks for being here. We are closing out the day. A lot of people have been at this desk talking about robots fighting in different areas of the conference. I believe there was a stage where people were fighting robots. I went into one of the lounges and I saw some robots posing for pictures. Talk to us a little bit about BitRobot and what you do and how it fits into the narrative that we've been seeing here at Consensus.
Yeah, so at the BitRobot Foundation, we help steward the BitRobot protocol. BitRobot is helping basically accelerate embodied AI. So embodied AI, you can sort of think of it as a contrast to generative AI. If generative AI is trained on videos, all the content that we consciously produce, and that gives you like ChatGPT and Claude, what embodied AI is focused on is the AI that you would need to control robots. Now, the challenge is when you have generative AI, you're doing it on the product of all this stuff that's already on the internet, because that's how humans communicate with each other. For robotics, we don't actually have a giant data set of like, how am I moving my arm, or how am I picking up this cup? And so if you want to train a robot to do that, you need to create that data asset from scratch. So we use a network of subnets to basically incentivize the creation of all of these different data assets that you would need to then go train these different types of policies.
How do you create those data assets? Are people creating videos and uploading them?
Yeah, it's like a whole range of things. So you have people controlling robots. So you're literally showing the robot how it can go do those tasks. We call that teleoperation. You have people who are filming themselves. So with chest mounts using iPhones, or people wearing specialized caps that have different cameras and just going about and doing their chores. And then you have people who are basically controlling robots in simulation, showing them inside of a virtual world how it could go do tasks, and then scaling that up.
And when you created your robot, you know, I think about on the scale of like my iRobot vacuum cleaner to like Atlas. Like there's a really wide spectrum of what folks are doing. But I'm assuming if we think there's a robot in every factory and every home, that we're going to have to sort of make them affordable, usable. Like how do you sort of like product test where you want your robot to sit in the chain?
Yeah, so there's a wide range of manufacturers who have a wide range of opinions here. So that's a Unitree one that we'll see in a little bit. That's something that Unitree has manufactured, and that's in a humanoid form factor. I think those types of robots will be this is my personal opinion, those types of robots we will see in many more places, especially ones where we really do need all of the components of the human body. But that may not be the actual form factor that you see for all types of tasks. So if you have a robot that's just going to fold laundry, as an example, maybe at a laundromat, you'll just have two arms that are strapped to a table that just literally are constantly folding, but they won't have a need for legs, so that won't be there. You already are actually seeing other types of robots that are just focused on like flat surfaces. So it's like a robot with a wheeled base that has arms that can do things like your dishes, or maybe like fold your laundry, or other household chores, but maybe not go to your second floor. And so I think when we talk about affordability, it's really about enabling that full spectrum. So like you as a consumer, depending on the price point, depending on the use case, you'll be able to pick which type of robot makes the most sense for your home.
I know people ask you this all the time, and Sam talked about his iRobot vacuum, but how long until we have robots in our home doing tasks like the ones that you just outlined? Like what's the time horizon you're working towards?
I think way sooner than you think. So, I mean, you may already have a robotic vacuum cleaner at home, and maybe it has a mop, but as we see these advances, you're going to have incrementally more of these products available. There's actually a number of startups that are shipping, starting this year actually, so like 1X, Sunday, where they're actually putting robots in early adopters' homes. Now, the price points of those are much higher, and like the reusability of those robots is much less than what I think the average consumer is looking for. But this is sort of the phase where, as we gather more data, it makes it possible to train the policies that you need for the robots to actually be useful. When people think about self-driving, like the kind of magic thing for Tesla was they were able to sell a car that didn't drive itself, but use that to then go collect all the data that you need to then train the self-driving policy. We're at the phase of robotics right now where we actually have to create that data flywheel if we want to be able to have a robot that you can actually purchase at a reasonable price point that will do useful things for you.
Jonathan, I had an interview yesterday on one of the stages with Jan Lippard from OpenMind. And he had written about the idea that as we bring AGI to humanoids, that they're going to have a free will and they're going to want to stay alive. So my question is like, just how worried should we be as humans?
I mean, that's such a broad question. I mean, look, I think especially when we think about like the AI policies that we're training, we need to think about safety and all of these other factors. And even as we design different form factors for AIs to be able to like participate in the real world, we should think about safety. One thing that people don't really consider with humanoids and these different robots is they're really heavy. Like you don't want grandma to get crushed by a robot. And so we need to think about what is like the padding, what is the, like what power are we giving to the robots in terms of their ability to lift and do these types of tasks. And I think those are like safety engineering things. But yeah, broadly speaking for us as a species, I mean, I know there's a lot of smart people thinking about this. Yeah. I don't want to claim like I have a smarter answer than them, but I think at least on the humanoid form factor piece, it's really just thinking about, well, what would it practically mean for this to be something that's around kids or old people or people in delicate situations?
I think it's time to bring the robot in.
Let's do it.
All right. Here he comes.
Why is it dressed like it wants to fight me?
Maybe it does.
So was this one of the battle bots from yesterday?
Yeah, so we actually brought a number of them over. Obviously the novelty factor of having a fighting robot is pretty great, but we actually use these types of robots to do a bunch of data collection. So people put them in commercial settings, they put them in their homes, but then you can have a human just show the robot how to do useful things, and that data is actually really useful for a number of AI labs.
What data is this dancing robot collecting right now?
Just pure enjoyment. How much do people like?
People really love his dancing.
It's a better dancer than I am.
It says Sam on it. Is his name Sam?
So this model, we put Sam on it because Sam's his manager.
Well, he has a manager. I love this. So, okay, besides dancing, talk to us a little bit about the data collection. How does it collect data, and how does it use then to train the next iteration of him?
Yeah, so when you have robots that you're teleoperating, you're both collecting all of the sensor data off the robot. So like literally how is it moving its arm and all of the video data that's coming through its cameras. But then you're also collecting the human inputs. So like think of it like a video game. When you're pushing the controllers, those are all signals that you're telling the robot how it should react to the world. And so now if you were to train a policy, you both have the observations of what did the robot see, you have the like controls of how did the robot move its arms and legs, but then you also have the inputs of like what was the human telling it to do.
Now, you obviously work in this space. You know a lot more about robotics than Sam and I do. What is the what keeps you working in robotics? What are you most looking forward to in the development of robotics over, let's say, the next year?
In the next year, I think it's actually like us moving up this sort of like S-curve, where I think you're going to start seeing robots do much more generalized tasks than they have historically. And I think the examples I was sort of giving of like laundry folding and some of these like, it's slightly more generic than what I think people have seen robots do before. It may not be as exciting as like it does a whole slate of things that you're looking for, but it's a necessary step down the path. And I think, I mean, personally, I made this joke. So we just had a mayoral election in New York. I think the winning mayoral run in 2030 will be someone who says, I'm going to have a fleet of robots that just clean all the public bathrooms. It's like, what are the jobs that no one wants to do, but would make everyone's life better if someone did it? And I think that's where robots will really slot in and make everyone, hopefully have a better quality of living.
You know what I would really like to see?
Oh, what's that?
I would like to see a flip.
They can do a roll.
Oh, a roll.
A roll.
That was a roll. I'll take a roll over a flip. All right.
Jonathan, thank you.
Jonathan, thanks so much for joining us, and thank you for bringing your Unitree G1 and his manager, Sam.
Thank you.
All right, we're going to take a quick break. We'll be right back.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
right, from robots to the Pitchfest, we are closing out with all of the fun content here at Consensus Hong Kong. We are joined by the founder of ZKMe, Alex Scher, right now. Alex, we just witnessed you win the Consensus Hong Kong Pitchfest, so congratulations to you. Talk to us about ZKMe. Give us the winning pitch.
Do you have 3 minutes, plus 3 minutes of questions?
You have 60 seconds.
Okay. No, so we build primitives for open finance. It just means that we help DeFi applications become more capital efficient by underwriting and fulfilling compliance requirements, not on an off-chain database, but actually directly on-chain. So you can think of us like plat.com of Web3.
And a lot of people have been focused in the last couple of days on conversations around ZK that kind of finally, with both privacy and institutions coming in, we really need this layer. And you guys are a credentialing layer, right? You guys are there to say, are you a citizen? Do you live in London?
Correct.
And you get to make decisions about that. What are the challenges of rolling out something like that? Because right now Instagram is not doing a ZK check, right? So how do we get there?
I think the challenges are twofold. So one is very clearly the inertia in many companies, especially in compliance roles. Compliance has been done in a certain way for the last 40, 50 years. Changing a ship that massive will take time. And then the other one is actually also in every day's usage of solutions. Like we don't value privacy as much as we should value privacy. And it's up to everyone here to start demanding that Instagram actually does not take a copy of your passport, but actually just takes a zero-knowledge proof.
What's it going to take, do you think, for people to care about that? Because it's one thing to say it, it's one thing to talk about it, but I think we're seeing every day when people log on to Instagram that they don't actually care about privacy maybe as much as they should.
Yeah, like I keep saying, the easier it becomes to steal identities, the more people will care about it, because the pain will just increase exponentially. It's already like a matter of fact that through for example, the Discord hack that happened recently, people got scammed out of their life savings because people imitated not only their identity, but also their writing style, their deep fake, their voice, everything. So with these kind of increases in identity thefts, we'll also see an increased demand for privacy.
When we look at, we just had a robot here, and we think about AI, a lot of folks are thinking that sort of AI systems, robotics, that they also need digital identity, right? They need their source. How do we sort of build in the idea of proof of human into what you're doing to really make sure that when I want to only interact with someone who is an actual person, like you were just talking about, that I'm getting that person that is them? What do we need to get there?
I'm going to give a controversial take. Like everyone talks about giving agents an identity. I think that's not the right approach. Like the counterparty doesn't really matter whether a transaction happened because it was a human or not. I think what people care more about is the quality of the interaction. So typically, at least at ZKMe, the way we approach Know Your Agent is actually the other way around. We enable the agent to verify other parties so that the agent-seller interaction can be of higher quality, rather than the other way around.
Talk us through a real use case. If someone was going to use a platform that was using ZKMe technology, what might that look like?
Yeah, so I think most of people that have interacted with ZKMe might have interacted through some of the bigger token sales that happened last year. So for example, quick shout out to our friends at Impossible Finance. They have been using our solution for the last 2 years to do launchpads. So if you buy, for example, 0G or Flying Tulip, you will verify using our solution. And in that case, neither Impossible Finance nor Flying Tulip nor 0G get any access to your private information, while still fulfilling like counterparty risk management. So it's compliant but private.
You won the Pitchfest here. You're also backed by Multicoin Capital, OKX Ventures. What do you think they saw in what you were building that really made them want to put skin in the game?
Yeah, I think for both OKX so it was Jeff who invested in us, and Kyle at Multicoin. This was more of a strategic investment. Like both of them saw the potential for TradFi and DeFi to merge. And merging always means rules have to be adjusted on both sides. And if rules increase on the DeFi side, you need to have a solution that is DeFi native to match the requirements that exist in TradFi. So it was very clearly a strategic investment for both of them.
You've raised money. You came to Consensus to participate in the Pitchfest. Why was it important for you to come here to Consensus Hong Kong and participate in the Pitchfest? What value did it bring to you?
I mean, it's been an amazing conference. I think much better than last year, and like we're looking forward to see it increase next year again. For us, first of all, we're Hong Kong based. We started in Hong Kong, so it was important for us to be represented locally. And then the second, Consensus has always been like one of the main venues where new narratives form and take shape. So we just wanted to be part of that.
And you guys, you're a Hong Kong-based company. We've had a lot of folks on the desk who have either started in Hong Kong or are expanding their presence here. What is it about this specific market that attracts you?
So when I started the company 3 years ago, it was very much the narrative and the proactive stance of local regulators to not only see themselves as restrictors, but actually as enablers. Like I think the HKMA is uniquely positioned in the world as a regulator that wants to build up Hong Kong as a Web3 hub. And I saw that opportunity and decided to incorporate here first, to then serve most of the world from here.
Well, Alex, congratulations on winning the Pitchfest. It was a pleasure having you here at the desk, and maybe we'll see you at the next Consensus.
Absolutely. See you in Miami.
All right. Well, that was founder of ZKMe and our Consensus Pitchfest winner, Alex Scher. We are going to take a quick break. We'll be right back.
Thanks.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Guys, Consensus Hong Kong has come to an end. Sam and I are still here. We're joined by two fabulous folks to help us close out the day. Chairman of Consensus, Michael Lau, and CoinDesk Media and Events President, Jay Yarrow. Hello.
Hello.
We're at the end.
Oh,
We've come to the end of the road.
As the president, I've got bad news for you.
Oh, we're really at the end.
No, we're just getting started. I checked the fine print on your contract. We actually have you for another 6 hours to do programming. So I hope you got something to say, because we're going to have you at this desk all night.
This is like when he throws down the credit card, says open bar for 2 more hours.
Yeah.
Exactly.
We can make it happen.
Yeah.
I don't know how good it's going to be, but we can definitely make it happen.
It'll only get better by hour 6.
Jay, this is your first Consensus.
Oh, yeah.
You joined CoinDesk not long ago. Talk to us about your experience as a newbie.
Oh, I thought it was terrific. Unbelievable, top to bottom, from being here in Hong Kong to walking the floor to the panelists. There's everything about it was awesome. So,
were there any highlights that sort of stood out to you?
And now you're putting me on the spot, aren't you? I'll say doing the opening statements with Michael.
That was great. That's fun.
It's like overwhelming. It's like I get this a lot. I'll have this like, oh, what's your favorite story? And I'll forget. Like it's just the whole thing. To be honest with you, is like the top to bottom, the entire event, the entire experience, from dinners to being here on the floor, to hearing speakers, to being around you guys, to watching you be here for I don't know how long. I don't know how you're still upright and cheery. and coherent. It's unbelievable.
You'll get the expense report item for a B12 shot.
Yeah. And coherent, we use that word loosely around here. Michael, you joined us this morning to talk about Consensus being here in Hong Kong. We've come to the end of day 2. Talk to us about some of your highlights. What are you walking away from Consensus Hong Kong this year with?
Yeah, well, I mean, I felt like the excitement continued today. It was really great to host a couple of people on stage. There was one in particular that I thought was quite interesting because we deliberately this year wanted to expand more into the AI space, and we're here in Hong Kong. And so we had the chairman of Greater China from McKinsey come up and talk about AI, China, what's going on, what are the things that maybe people are missing. So it's like this ability to be able to bring to the CoinDesk, I guess, kind of listener, like new, fresh ideas and things that you might not be able to see or hear elsewhere. And I think that's what I love about opportunities like Consensus, because we were able to bring something fresh. And so that was really fun.
You know, I say this all the time, Sam, when you and I are doing CoinDesk Lives from all over the world. It's such a pleasure to bring the conversation from different areas who are thinking about crypto in different ways and to highlight some of the different problems that are being solved in different jurisdictions. Sometimes we get really caught up in what's going on in the United States. And as we've learned here at Consensus, it is important what's going on in the United States, but so much more is happening in so many different places around the world.
I agree. I also think we just got to give some credit to Michael. We heard so many times over the last 2 days people saying, compared to last year, which was already great, this was an outstanding conference. And you really put blood, sweat, and tears into that. So thank you for your work.
No, thank you very much. Thank you to all of our sponsors and partners and also attendees. I mean, it's been an incredible group of people that we've been able to work with. And also, there's something about this conference which feels like the community coming together. And I love that because there's a genuine belief that, hey, this technology could do something and actually power a real future, not just a theoretical one. So I think that's really cool to see the community come together. And hopefully people feel like this is their conference, right? That there's an opportunity to really tell the story of what's happening in Asia to a global audience. And so I think that's fantastic to see that energy come through.
And for anyone who's been watching our programming, we know that the next Consensus is going to be in Miami. There is a lovely ad featuring Sam that takes us maybe on the road.
You're playing that too much.
Yeah, we have been playing it a lot, but it is great. I love it. We're going to be in Miami in May. Talk to us about what we're looking forward to in Miami. Mike, I'll start with you. Jay, we'll close it out with you, what you're hoping to see in Miami, and then we will bid the audience adieu.
Cool. Well, May is going to be massive. You have to be there. I mean, we're already a couple months out, and everyone's telling me that they're going to be there. They're going to be out in force. I think what's cool is, again, you get to bring together the entire Western Hemisphere in Miami to talk about what's going on. And it's just, honestly, it's just hard to put into words just how much excitement there already is around it. So you have to be there. It's kind of a non-negotiable. I think the other thing that's really cool is that, again, we're going to have more content. We're going to have more people. We have a bigger facility than the one that we have here in Hong Kong. So everyone that was here, make sure you're planning to go over to Miami to join us because we've got an even bigger show and it's going to be even more incredible.
Jay?
This industry moves so fast. Like, I was just trying to go through my head. I was like, okay, October 10th. I was like October, November, December, January, February. Okay, so that's 5 months right there. Think about how everything has changed from, like, you know, obviously price moves in Bitcoin has a cascading effect through the industry and how it moves. From here to May, does Bitcoin, like we've had people on some stages talking about Bitcoin going down to 40,000. Even lower. We've had some people talking about it going much higher. So I think we're going to see where that moves and how that changes sentiment within the industry. We've had a lot of discussion on stage about US regulatory policy, the market structure bill. Are we going to be closer? Are we going to be further? Are we going to be in the exact same position by the time we're in Miami? And then, I mean, like, again, tangentially talk about AI, the idea of the explosion with Claude Code, Codex, what's it called? OpenClaw? Is that what it's called now? It went from Clawbot to Moltbot to OpenClaw, I believe. But whatever, the idea of AI agents, the explosion that's happened in that realm in the past couple months. So, you know, it's a little bit of a cliche to say things are moving fast, but it's also 100% factually accurate. Yeah. And so I'm very interested to see from here to Miami how much everything changes where the conversation's going and where the people who are building or what they're building and how that's going.
I think you're exactly right.
And
Thanks so
we get the
fast.
pleasure of covering it all.
We sure do.
Having those conversations here, having them on our stages. Miami is going to be a moment. Michael hit it on the head. I'm really excited for that. And it's a short flight from Hong Kong, so everyone really should come.
Yeah, not too far.
Get your tickets, people. Book your hotels. We are going to be in Miami for 3 days in May. Thank you so much to everyone at home for following our live coverage of Consensus Hong Kong. Thank you to our partner, Hex Trust, for making this possible. And Sam, thank you for co-hosting with me over the last 2 days. For Sam Ewan, I'm Jen Sanasi. We'll see you in Miami.
Consensus Hong Kong!
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.